From an export perspective, a large part of our exports is in the power generation segment, very broad based to many different countries in the world. That actually gives us a diversified base of countries that we export to. What we do is that in different markets, we have been working on which are the products that we can position rightfully in those markets, largely in the power generation space. Now, yes, there are geopolitical issues that still exist and continue to develop. So our endeavor remains that across these markets, if we can position our products through the right channels and through the right prices, there is no clear trend that there is this particular market which we have seen going for the last few quarters that I could tell you that here is the market we have seen growing in the last 4 quarters, and hence we see this particular market growing. There has been no clear trend. There are different geographies that keep growing in different quarters. And just the last quarter that went by, we actually saw growth across all our segments of power gen and across various different regions in the world. So very difficult to say if we are seeing a particular trend and we could capitalize on that going forward.
Okay, but just on that, if you have to get more perspective, now currently if you look at the domestic export mix, if I'm not mistaken, it's basically 83 to 50, 17% or so that we are looking at. Do you expect the mix of exports to increase going forward? And if you can just give us an indication as well, how the domestic margins differ from the export margins which are there?
Do we expect the ratio of domestic and export to change dramatically? Not very dramatically in this financial year, because there are a lot of things that are changing in the geopolitical scenario, and that is why we remain quite cautious about the exports. And we continue to see demand in the local market. So that is why we do not anticipate this ratio to dramatically change in this financial year. Now, the margin profiles, it's very difficult to say because the domestic margin is a blended margin of power generation, aftermarket, industrial markets. And in the exports, it is a blended margin of various different regions. So each region has a very different margin profile. So these are both blended margins. And since I was telling you that different regions keep growing in different quarters, so difficult to say how this will play out. And even now, we do capitalize on opportunities of improving our margins, both in the domestic market and in exports.
All right, so that was the management of Cummins India speaking to NDTV Profit about the quarter gone by. This is, of course, Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachrajani, and we'll take you through the next hour or so of trade. 50 minutes now, but this show, as you know, is geared towards getting you answers to all of your stock-related questions. You can message us on the number at the top of the screen, or you can call us on the landline number at the bottom of the screen. Very quickly, the markets at the high point of the day, the benchmark Nifty 50 trading with gains of about 0.4%. Let's look at the constituents or the contributors and see what is pushing the benchmark higher, because in the morning, you had a pretty even split between gainers and losers. HDFC Bank up and about. It was one of the drags on the benchmark on Friday, along with Reliance Industries, and that is a different situation today. State Bank of India posted its results doing reasonably well and contributing a few points on the upside as well. But it's a pretty broad split. If we can pull up the heat map for the Nifty 50, I would hazard a guess to say that there will be more green on the screen than not, and that is indeed the case, with Tata Motors very interestingly leading the gains up about 2.4% after what a lot of people had said was a pretty shoddy first quarter. But let's get our experts on for the day. We've got Saurabh Jain of SMC Global Securities, as well as Brijesh L, who's the head of technical and derivatives retail research at IDBI Cap Securities. Thank you so much to the both of you for taking the time, and pleasure having you on the program. Let me kickstart the questions today with Action Construction, and Gopika from Chennai has got this question. She's bought at levels of 1,158, and I saw earlier in the session that the stock was under a tad bit of pressure, but this is a long-term question. Can hold for the next 5 years. Would you buy at the current level? The stock is down 5% at this point. Saurabh, would you use this opportunity to add to your holdings?
Well, this is a long-term structural story, but the stock got re-rated in the last 3, 4, 5 years, and the multiples are quite high even after the stock has come off from the highs. I won't recommend to add or at these price levels, but yes, at the times of correction, you can add in a staggered manner. Yes, the stock is hold for next 5 years.
All right, so that's with regards to where Action Construction is concerned. We've got our next question from Komal, who's writing us from Mumbai. She's asking about Sagility India. She's bought it at the levels of 45 rupees and bought 10,000 odd shares. This is from a longer term perspective and wants to know if she can continue to hold or not. Saurabh, I'll stick with you for this one again. What's the view like for Sagility India?
I, Mahima, would like to give a miss. Do not have an idea.
All right, Brijesh, not sure. I think now you should have enough data on the charts to make a decision. Is that recommended continuing holding Sagility India?
Hi, morning. So whatever the data I can see, I can work with the stop loss. So basically, 37 was a swing low. So somebody is holding the position should hold with the stop loss of 37, and then maybe over a period of time gradually one can review it. But on immediate basis, 37 would be the stop loss.
All right. We've got our next question from Ramana Reddy, who's writing in from Hyderabad and asking about Morpin Labs, which he's bought at levels of 64 rupees per share. He's holding for a year. He's asking for the long term, would you hold or exit at a loss? Saurabh, coverage on Morpin Labs, would you hold?
It's a very old company, but in the last 2-3 quarters, the results were bad. I mean, there was a kind of a degrowth. I would recommend him to hold for one more quarter and see what the management guidance is. Hold for one more quarter. If there is a kind of a turnaround, then keep on holding. Otherwise, exit.
All right, so that's with regards to where Morpin Lab stands. We've got our first caller for the day. Shailja is calling us from Hyderabad. Shailja, hi, a very good morning to you. How can we help you today?
Yeah, hi Mahima, good morning. Hi Alex.
Good.
I want to know regarding JSW Energy. So I took this 15 of shares in month of December.
Okay.
Set price of 585.
Okay.
So I want fundamental view for this for next 6 months. And is it good to average in the dips?
Okay, all right. Got your question. But Shailja, if it's 6 months, do you want a fundamental view for sure, or do you want a technical view on this one?
I need fundamental.
Fundamental. Okay, all right. Saurabh, I'll come to you on this one. JSW Energy, what is the outlook like for the next 6 odd months?
The utilities is a good place to be in, but what has happened in the current season, the demand for electricity was not as on expected line because of the unseasonal rains. With respect to JSW Energy, they have a good capex plan. Last year also they have raised some good amount of money also. And the June quarter results were great in context to the companies reported, the other companies reported numbers in the same sector. So my sense, it is a good stock to hold.
Okay, Nava, which is Nava Bharat Ventures, is the name of the counter that we're talking about next. And I'll come to you, Brijesh, on the charts. This is Manisha, who's writing in from Bengaluru. She's got 264 shares at a price of 456, so she's in the green. The stock is currently trading at 621.8. For the next 2 years, would you hold, would you sell, or would you buy more? What's the view, Brijesh?
So from the technical perspective, I think the stock is looking positive, and the recent the all-time high level of 667. That is what we can see on the immediate basis. So from the 2 years perspective, I think this can go for much higher. I would be doing some partial profit booking close to 700 levels, and balance I would hold for the long term. So, the structure is positive and the view also remains positive.
Okay, all right. So that's with regards to where Nava Limited is concerned. We've got our next question from Jayakumar, who's asking about ITC and wants to know if we can continue to hold from a longer term perspective. It's got 260 odd units bought at 414 a piece. Saurabh, I'll come to you on this one. How do you see ITC as a counter, and if at all in that space, if you find any other counter that's better placed than ITC?
It's a kind of a portfolio stock. This time around, I think the street was somewhat disappointed because of the erosion in the margins because of the higher raw material cost in case of because of tobacco leaves. But the management has already guided that the prices are going down, are moderating, and going forward, there will be a lower cost, which could help in conquering the margin, getting the higher margins. So all the other verticals are doing good. There was a 8-9% kind of a volume growth in the cigarette business. My sense it is a hold.
Hold, but would you not add at this point? Not an ad, huh?
Not an ad because would like to see next quarter earnings.
Okay, so let me very quickly get on the charts as well. Brijesh, quick view on ITC. At what point would you accumulate for the long term?
I think the current price is quite a decent level to make an entry because our understanding is that this can go back to 500 levels, maybe from the long term perspective, because this level of 400 and 390, 395 are the very decent support. So the downside is very limited. Maximum 15 points is what I can see as of now. And technically, this 430, 430 is a small trigger, but I do understand that this may be taken out in the near future. So the upside would be somewhere close to 500, and with very nominal risk reward ratio, one can make entry at the current price.
Got it. All right. Limited downside is what you would generally look for in a long-term holding. Angad is writing in from Indore and asking for a short-term view on Zuari Agro Chemicals. It's 1,610 crore market capitalization company, up and about in trade today, 5.6% higher. And in fact, wow, let's pull up the 3-month time frame for this company. You will notice that the stock price has moved up 84%. Question is, does that momentum continue? And would you take a bet for the short term? Brijesh, on the charts, does that momentum look like it's going to continue?
Slightly risky, but Alex, I think whatever the move has come, it is there is this has been the extension of the run, what I can say. So this level of 380 to 400 can be play out as a distribution zone or maybe some partial profit booking. So my advice is to take some profits from the counter, and if it doesn't cross 400 in the near future, then I think once the profit booking is there, entire position should be booked once.
Right. Okay, so that's with regards to where Zuari Agro is concerned. We've got our next question from Deepak, who is writing us from Chennai. He's bought 30 odd shares of TCS at 3030 a piece and wants to know for what target can he continue to hold. Brijesh, I'll again come to you on this one. What are the short-term targets that you would give for a stock like TCS?
Maybe I'll play for 3150 3200. That would be some short-term bounce in the TCS. So I would hold the long position. Close to 3150, 3200, I would review. If I'm a short-term player, I will book the profits, or else I would like to ride the trade.
Okay. An interesting question, and Brijesh, this is directed towards you, but I want Saurabh's view as well. ICICI Bank, of course, our viewers will know because we've been talking about it since morning. ICICI Bank has just announced the minimum average balance for all accounts, savings bank accounts that are opened from the 1st of August onwards will be set at 50,000 rupees for urban centers as well as metro cities, and it's going up for semi-urban and rural as well. Now, there you have the numbers on the screen. This, remember, is not related to salary accounts. It relates to savings bank accounts that are opened after the 1st of August. Now, the opinion is differing here. Is it going to be a positive because the bank feels, based on the data that it is obviously crunched and looked at, that anyway this is the customer base that it caters to, or will it be negative in the short term or the medium term, because ideally a lot of banks will look to seed customers that will eventually spend more money or buy more products. So Brijesh, on the charts, the question specifically on this from Balakrishnan, who is writing from Hyderabad, is should he short ICICI Bank futures in anticipation of a short-term negative trend?
Alex, there has been profit booking in the ICICI Bank since 1480, 1500 level, and now this level of 1400 is a very decent level where for the entire series the put writers are extremely aggressive. So even though if somebody wants to take a short bet, I think it's only a play of 25 points. 1400 is a very strong and very decent support. So it would take a lot of pressure to break the 1400 level. So I don't believe from here there is any fresh downside. It's a very small bet, like 20-25 points kind of a bet can be there. But for me, the support for the ICICI Bank is at 14 14 1400. I don't believe that this level will be easily broken.
All right. Don't think that so therefore don't go short is a view, right?
Yeah, don't.
Okay. Very quickly on this one, ICICI Bank, Saurabh, is this net positive, net negative? And you have to weigh in the sentimental impact also of this, because I think the view is, the question mark is, are you saying that you don't want to bank for Bharat?
See, what I believe is it is largely a sentimental effect. It is very difficult to take a call whether the step taken by the ICICI Bank will be positive or negative. But to my mind, I think the kind of extraordinary results they have posted over the last few quarters has shown the resilience, the kind of working that this bank is doing compared to the other peers in the industry. And of course, it should be an informed decision. I think the management should not have taken a decision unless and until they must be sure of this. So in my sense, I think it should be a positive for the bank going forward for the long term.
Got it. All right. Interesting. So we've got a question from Sachin, who's writing in from Mumbai, and he's got a question on the oil marketing companies. What he's asking is, what is the top pick from the sector? And the whole space is under pressure, contrary to expectations that there would be a red hot rally. Of course, they've dropped from the high point of the morning. The update, of course, for these three oil marketing companies is that 30,000 crore rupees has been announced as compensation for the losses that they incurred last year on the LPG subsidies. I'll get a view on this, but before we do, let me go to Somit to understand what has taken place and why this might just be a sentimental negative in the short term. It's not about the compensation amount, it's about what could happen from here, right, Somit?
Yes, a new overhang actually has emerged for the oil marketing companies, and that is the reason why all of them under pressure. In fact, HPCL is at its lowest point in trade. And the new overhang is that there might be that the government might announce a price cut in the retail fuel, that is petrol and diesel. Now, why that might happen? Because we have not seen any major cut coming in the retail fuel prices since May 22nd. On May 2022, Brent crude was trading around $110 per barrel. That time, petrol and diesel prices were around 90 to 97 rupees in Delhi. Currently, Brent crude is trading around $66 per barrel, which is lower by around $40 than what we had seen earlier. But still, petrol and diesel prices have dropped by just 2 rupees than what they were in May 2022. So this could be the biggest reason why the government might go ahead and announce a cut in retail fuel prices. And that is a major overhang that is there on the oil marketing companies. Now, if you know, retail fuel prices are deregulated. Petrol prices were deregulated back in 2010, and diesel prices were deregulated in 2014. And from June 2017, retail fuel prices were supposed to change on a daily basis, but that has not been happening since March 2021. And if you look at the marketing margins that the oil marketing companies are currently earning, that is in the second quarter of FY26, it's around 7 rupees per litre on selling every litre of petrol and diesel. Now, this is way ahead of what the historical average is. Now, over FY18 to FY25, if you look at the historical average, it stands at around 1.9 rupees per litre, while the current marketing margin stands at around 7 rupees per litre. Apart from that, there is festive and election period coming on. Festive season is starting soon, so government might decide to cut ahead of the festive season as well to boost sales going forward. And apart from that, election period. Now, in past also we have seen that whenever there are elections, oil marketing companies have cut fuel prices, and the next election in the country is in October, November. That will be the Bihar election. So keep an eye out for that. And if you look at the sensitivity analysis, you can clearly see who will get impacted the most. Every 0.5 rupees per litre cut in the marketing margin impacts the EPS of IOCL, BPCL and HPCL anywhere between 14 to 24%. And if you look at the EBITDA impact, it's anywhere between 8 to 13%. HPCL getting impacted the most, while IOCL will see the least of its impact.
Got it. Somit, thanks so much for that view. And clearly, it's not just the compensation that has been announced today. What happens ahead is going to be critical to watch. In fact, we spoke to a few analysts earlier in the day, and Prabal Sen did not want to stick his neck out to say that there may or may not be cuts at the pump level for these oil marketing companies for petrol and diesel. Saurabh, on balance, based on what you heard Somit say as well, would you be a buyer in any of these stocks?
If anyone has to buy OMC, I think out of the three, IOC is much better. But if you see, even if the marketing margins have expanded since May, the stock price hasn't moved much. If you see in the May also, IOC was trading around 140, and now right now also it is trading around 140. So there hasn't been much change. I think these stocks falls into a value category. So in my opinion, if anyone has to buy, it should be IOC.
Okay. So that's a pick out of the three. We have to slip into a very quick break. We'll be back on the other side to talk to the management of PG Electroplast and also take more of your questions, so do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching Ask Profit. Now, the earnings season so far, you've seen a few companies see their stock prices react very sharply, either on the upside or on the downside. And on the downside, usually it's because of a reset in expectations and outlook going forward. PG Electroplast is one of them. This is the fourth day in a row that the stock is seeing a downturn. Today, 15% lower at this point after that 20% downtick at the end of last week. And this is post the Q1 numbers and also after the management shared the guidance for FY26, where revenue guidance and PAT guidance are both significantly lower than was previously stated. Vikas Gupta, Managing Director of Operations at PG Electroplast, joining us this morning. Vikas, thanks so much for taking the time, and I think your shareholders will be very keen to listen to why this is taking place. Understanding was that there is going to be a little bit of an impact because of an early monsoon, but this seems to be more than that. Why is there such a big reduction in the revenue guidance and the PAT guidance for the year?
Good morning, Alex, and thanks for having me on your show. So I'll try to explain you piece by piece. Please understand, if you look at the quarter 1 numbers, in the quarter 1, the industry as a whole has seen a degrowth of 25 to 30%. Almost all the major AC players, AC brands or AC manufacturers have experienced a degrowth in their numbers for the quarter 1. We as a PG Electroplast has been able to deliver a growth of 14% in our revenue top line. Please understand. Now, when we dive deeper into this subject on how the slowdown in this AC is happening, please see there has been an early onset of monsoon. So because of the early onset of monsoon and due to the high channel inventory, the overall summer selling season for the air conditioners got compressed and it fell off beyond the anticipation of any of the industry players. So there has been a decline in the numbers of sales for the ACs. The tertiary sales or the secondary sales were very low. And in month of July and August, as we are seeing right now, the sales are practically not happening.
Okay.
Mr. Gupta, hi, Mahima joining this side. So I think what Alex was trying to ask you is that we understand that there has been an overall impact of early monsoons this particular quarter, but just want to get a sense that is that the only reason that has triggered the kind of guidance cut that you have given in terms of both revenue as well as the net profit guidance that you've cut, or are there other underlying reasons as to why the guidance that you gave last quarter has been reduced?
So good morning, Maina. Please understand that our idea of revising our guidance is that the visibility that we have from our business, we need to share as a prudent business practice with our investors. Please understand that. When we gave our first guidance on the revenue in May of 2025, we were already firing all engines. We grew our AC sales 70% in month of April. We grew our AC sales of almost around 25-30% in month of May. It was on the expectations of that we were going forward, and based on the order book that we had from our clients, and we were looking at a certain kind of a recovery which will happen in month of June, July, and August. We were hoping for better, and we were building the inventory. So based on those projections, we were giving one guidance. But as we move forward, as we are in the we passed with the month of July and we are sitting in the month of August, with the visibility that we have, the demand has totally gone down. It has fallen off the cliff. So that's why we had to revise our guidance.
So Vikas, therefore, what seems to be affecting the PAT number, and the net profit guidance, as I understand now, in a range of 300 to 310 crore rupees for the current financial year, which is down from the previous guidance of 405 crore. Inventory days has gone up to 123 days from 90 days in 2024 March to March 2025, and the working capital days now standing at 60 versus 35. These are the big drags, and when do you see that reversing, normalizing, and Q4, will you start seeing maybe some green shoots again?
So, Alex, this is a very pertinent question that you have raised because the margins have got impacted deeper. So there are three broad factors that have impacted our margins. One is the finance cost. So we were sitting on an inventory of more than 1,000 crores related to the air conditioning business, and the whole working capital got tied up in that. To manage our cash flows, we had to restore to some kind of discounting of the receivables that led to the hit on our finance cost. Secondly, please understand, the air conditioning business, the profitability is highly seasonal. We make our money, we make large amount of our money in the peak months when the peak production is happening. In the lean months, we are required to manage our fixed costs. But in the current year, as it has happened, the lean months are bigger and more than the peak months of the production. So in the lean months, we need to manage our fixed costs, which will have an impact on our margin. Third, but not significant, but third still there, that the commodities, the copper, aluminum, and the exchange rate are also not in our favor. So all these coupled together have played an impact on our margins.
Mr. Gupta, in terms of your orders, I understand that orders saw cancellations in June and July, and again, this was the impact of the early monsoons, correct? But today one of the AC sellers also came out with its earnings, and there were brokerage reports indicating that post this monsoon, we'll see a second summer that could probably play in favor of these EMS and consumer durable companies. Is that something that you are also reading? Have you seen orders coming back recently in August?
So, Mahima, what happens, like we always hope for a second brief spell of second summer, which usually happens in month of September, October. We are still keeping our finger crossed. We have the inventory to cater to that kind of demand. So we are already in touch with our clients. We are hoping that there will be some spurt in sales which will happen in month of October. We are hoping to see some spurt in sales in the festive season as well.
Vikash, now generally, and this is something that you've seen in certain other cases, I wonder if this will be the case in PG Electroplast as well. You've seen a substantial drop in the market value. And so promoters would generally look at the value and say, we would step in here because we believe that the business fundamentals are strong and the long-term growth story is still positive. And everybody knows that penetration of ACs, etc., is something that's not going away. But over the course of 1 year, the stake is dropped from 53.7 to 49.37. I'm just wondering if this is an opportunity that the promoters see to step in and steady the ship or calm nerves.
So, Alex, please understand the commitment level of the promoter family or the management is still very strong on this. We should try to define the business based on the long-term potential of this business. 1 week summer cannot define the destiny of the company. Please understand that regarding the opportunity for us to increase the promoter stake, definitely we can evaluate those options. Looking at going forward, we can look at it. But we need to see, still the promoter stake is around 44%, 45%, which is a significant stake. If you look at the peer group in our industry right now, our stake in the company is one of the highest. So that does not define the commitment, because please understand, we are already committed on a long-term basis with this business. We have been running this business for the last 25, 30 years like this.
So, but the question is, if the opportunity arises, would you look to add at certain levels if the stock price continues to drop?
Sure, definitely we'll look at it, because we have complete confidence on the long-term potential of this business, and we see the value in this business growing further.
Absolute pleasure speaking with you, and look forward to the next chat as well, and wish you all the best. As much as I hate to wish it, maybe a second summer would work for you, if not for me.
Thank you so much, Alex. Thank you.
All right. Well, let's go back to the questions that some of you have asked. And ITC Hotel is the name of the counter that we're talking about. Next, Kamlesh Dhar is asking, he's writing in from Guwahati. He's bought at levels of 202 rupees, so very attractive levels. He's asking whether he should hold or book profits. So Saurabh, on the fundamentals, since he's a long-term investor, would you book profit or would you add more at these levels?
I think hotel sector is a good space to be in. All the hotel companies are posting decent set of numbers. Even ITC hotels number, the June quarter's numbers were that great. I think the demand supply situation is still in the favor of hoteliers, and the average room rents have also been improving in the of late. Lemon Tree also announced results, and their average room rate also went up by 9-10%. So it is the case which is happening with most of the players. My sense is it is good to hold for the long term.
Good to hold for the long term is the view that Saurabh has on ITC hotels, and also, recently IT's BAT, which is the British American Tobacco Company, which holds stake in both ITC and indirectly in ITC hotels as well, because it holds stake in ITC, has gone ahead and said in their con call that they might sell their 15 point something stake in ITC hotels. So now that is one overhang, which was there on ITC earlier, will now also be there on ITC hotels, and we'll have to wait and watch out for as to how that pans out. All right, we've got our next question, but before that, let me introduce Amar Deo Singh, Senior Vice President and Research at Angel One, joining us now. Amar, hi. A very good morning to you. The next question is for you. Arjun is asking, this question is from Kolkata, about prospects of Power Grid. He's saying he's a short-term trader. He's not given us a time period, but he's holding 404 odd shares of Power Grid, bought at 298 a piece, and wants to know if he can continue to hold them or not. Your view on this?
Yeah, I would say that we've seen Power Grid correct from almost 310 to levels currently trading around 284 to 285 levels. It is inching towards a crucial support zone, so ideally he can hold on to his position. A very good support for the stock is somewhere around 279. Ideally, the stock has some resistance around 292, 93 level. If that is taken out, then the stock could witness higher, but more or less, the stock is clearly in a trendless zone, so it's more of a sideways movement for the stock in the coming weeks.
Okay, all right. Eris Life is the name of the counter that we're talking about next, and this is Dr. Venu Verma, who's writing in from Bhimavaram in Andhra Pradesh. Bought at levels of 1800, 20 shares is what Dr. Venu has, incurring a bit of a loss, but on the fundamentals, asking whether to hold or to exit at this point. On the fundamentals, therefore, Saurabh, what's the view?
I think it is a very good company in the pharma space. They are into various therapeutic areas, and the company is growing at a good double-digit rate over the last few quarters. In my opinion, I think it is the overhang because of the the statements by the US, and not many investors are favoring pharmaceutical at this point in time. But my sense, it is a very good company to hold.
Okay, so that's the view with regards to where Eris Life Sciences stands. We've got our next question from Vikram, who is writing us from Bengaluru. He's asking about Tilaknagar Industries. Now, his question is, the stock has seen a good growth in the past 1 odd month and wants to see, and has corrected in the last 1 week itself, wants to know if this is a good time to make an entry from a longer term perspective. He intends to invest around 1 lakh rupees. Amar, I'll come to you on this one. What are the charts indicating for Tilaknagar, and keeping in mind that the entire Maharashtra excise policy might have an impact on this company as well?
Yeah, I would say that the stock has rallied. It has rallied significantly, but currently it's witnessing some sort of profit booking. Overall, if I look at the trend continues to remain extremely strong across different time frames. So yes, a buying opportunity could emerge, but ideally a good level for entry somewhere around the 440, 450 zone. If that's a level where one can get some entry, then that could be a good opportunity for an upside of close to 10% from those levels.
Okay. All right. We've got our next caller. Murli is calling us from Bengaluru. Murli, hi. A very good morning to you. How can we help you today?
Very good morning to you, Mahima, and thank you for taking my query. My query is a recent listing called Ellen Berry Industrial Gases.
Okay.
I bought 500 shares at 527.18. While buying that is having a small market share, a dominant player in West Bengal, Telangana and Andhra. And it has about 3% market share. And number two, it has no debt equity and they are going to use maximum about 400 crores their loan, long-term loan. Okay. They raised 400 crores recently, out of 200 crores they will repay the loan. And they quote at half of the rate of Linde India.
Right.
And they are almost in every spectrum, whether it's healthcare or normal industrial, oil and gas, everywhere.
Right.
And it's a decent, seems to be a decent company, so I bought it keeping a long-term view. Because it quotes at half of the price of Linde, of course that's my MNC.
Right.
So what is your view? Or if you suggest any other alternative in any sector.
Got it.
So I bought it already.
Okay, Murli, got your question, and as always, your research is to the point. Saurabh, I'll come to you on this one. Ellen Berry, if at all you have a view, it's into industrial gases, and that's why he's comparing it to a Linde. Of course, that's an MNC, and this is a 7,000 crore market cap company. Would you recommend Murli to continue to hold the counter, or anything specific that you're liking?
Won't be able to comment, madam.
All right.
Any view on Linde India though?
Not covered yet, recently.
Okay.
Amar, any view on the charts? Do you have enough data on the charts? Too new.
Not much.
And anything on Linde then on the charts?
Yeah, Linde definitely. See, Linde has been on a sell side for some time, almost from 8,000 levels, currently around 61, 60. It's approaching crucial support zone. So ideally, if we go back and look at the stock, so somewhere the stock has got good support around the 5,700, 5,800 level. So maybe that is a level where one can look at some entry, not at the current levels.
All right. Unfortunately, Murli, we couldn't help you with Ellen Barry. What we will do though is we will ask down the line, and we'll see if there's an analyst that tracks this, and we'll get your view. I'm sure that you'll be tuning in, so you'll be able to catch it. Snigdha is calling us next, and Snigdha, hi. How can we help you today?
Hi. So my query is regarding Praj Industries.
Okay.
I'm having 500 shares at 450 rupees.
All right.
So as they posted very good results, I just want to know if as they are going to post their results today. So I just want to know if short-term and long-term view for this share.
Okay, all right. I see that there is a consultative process involved in getting your question asked, but we don't mind that. In fact, whoever's sitting with you can join the call as well, Snigdha. I got your question. We've got Veena, who is writing in from Cochin, who's also asking about Praj Industries. 515 is her buy price, and Snigdha, of course, has bought it levels of 450. Sort of view on this one, Praj Industries, the ethanol story is alive and kicking. Of course, they make boilers to facilitate that. That is why they have gone up so substantially in terms of valuations and multiples over the course of the last several years. What would you say about this one though?
I think the stock got re-rated quite handsomely, and now the stock is, adjusting its high valuation. And if you look at the last 4 quarters, there is a sequential degrowth, which is itself just not is not justifying the valuation. I would recommend her to get out of the stock till the financial stabilizes.
So that's with regards to where Praj Industries stand. There was one more question from Veena, who's writing us from. You've taken. Okay, so I hope that answers your query as well, Veena. We've got our next question from Suren, who's writing us from Nagaland. That's the first question I think that we've received from Nagaland. Yeah. Interesting. Suren, thanks for watching us. His question is on Oriana Power and wants to know if he can continue to hold this counter or go ahead and buy any EPC player or anything in the renewable energy space. So it's a long question, but I'll take this one with you. Any view on Oriana Power, or if not, anything that you're liking in the renewable and the EPC space?
Not specifically on Oriana Power, but in the hydropower space, we like NHPC. We expect that the profitability and the revenues and the profitability will grow at a decent pace in the next 2 years, because some of the capex plan will start operationalizing soon. And in the EPC space, one company that we like is KEC International, on which you get better point.
Okay. So you like KEC. Okay, I got your question. I got your answer. It's time now to hit the rapid fire round, and this is where we take as many questions as possible over the course of 2 minutes. So the first one is coming on Protean eGov. 60 shares bought at an average price of 1,392. The stock went into a little bit of a problem. Saurabh, the question is, would you buy on a SIP basis? Harshit wants to know. Yes or no?
No.
The next question is on NCC. Lucky from Ahmedabad wants to know his buying price is 352 and when will the counter come back to this price? Amar, your view?
I would say he can hold on to it. The stock seems to have done its worst, and only it needs to sustain above the 235, 240 levels for any meaningful rally.
Okay, Tata Investments is the name of the counter. Bala wants to know. Okay, this is a little complicated. Would you buy more at this juncture though? Saurabh, what's the view?
Avoid.
Happywest Minds is the next counter. Ravichandran wants to know if he can go ahead and buy at the current levels, or what would be the right entry levels. Amar, your view?
I would say the stock has been in a significant downtrend from almost 1,000 levels to currently around 580. I would say rather wait it out. If one wants to enter, then the level should be somewhere around the 550 level.
Okay, Gale. 41 is the buy price. Would you hold at this point or add more? Vishwanath wants to know. Amar?
I would say don't add at the current levels. If you need to add, then ideally 160 is a good level to add.
All right. Ashok Pai wants to know if IHCL is the right counter to continue to hold from the next 2 odd years. Saurabh, I'll come to you on this one.
Did not got the stock.
IHCL, Indian Hotels.
Yeah, it is good to hold.
Narayana Healthcare, would you buy at this price? Is this the right price? Ramesh wants to know. On the chart, Amar?
I would say the stock seems to be forming a base, but we need to wait for some consolidation. Buying above 1800 would be ideal. Then we could say that the trend change is there.
Patel Engineering is the next counter. Ajay from Hyderabad wants to know if you can continue to hold from a longer term perspective. Saurabh, your view?
Better change to HJ Infra.
All right. Well, that brings us to the end of the query segment. Gentlemen, thanks so much for taking the time and for speaking to us on Ask Profit, and viewers, hopefully that benefited you. By the way, on the subject of this increase in the minimum balance on ICICI Bank accounts that are opened after the 1st of August, we asked you on social media what you think and whether you'd open an account, and quite a few of you have said no, it's too high, 78%. In fact, only 13% have said that it's not a problem, and 9% have said they would choose another bank. By the way, we just set that poll up. You can go up and vote. It's on our social media platform X. Do let us know what you think, and don't forget to tell us in the comment section if you've got something else that you would like to share. That brings us to the end of this edition of Ask Profit. From Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you Hello and welcome. You're watching KYC. I'm Harsh Saita and today we're going to be understanding TVS supply chain slightly better. It's a logistics player listed in August of 2023, so not a very long listing history per se, but the stock is down 33% since that point. and you're seeing a bit of an uptick not only on the stock price but also on a likely performance parameters. They are looking at double-digit growth in FY26, which has been stagnant over the last 3 years. They're also looking at margins recovering sharply. The PBT margin will be 4% by FY27. That is what the company has guided for. And that's why this suddenly becomes very, very interesting, because compared to peers, this looks attractive in relative terms. Part of the TVS group as well, and having supply chains which are all over the world exposes them to some risks, of course. But what I really want to know, and I'll start off with that, the likelihood of the company doing a double-digit growth in FY26. It's not visible in the Q1 numbers yet, but you want to know whether in this uncertain environment they can actually manage that even now, and therefore what should the FY27 target be. The other piece that you want to know also with regard to this one is they're giving up some of their India business because it's lower margin. So they're not liking the lower margin business, they're giving that up and they're replacing it with slightly higher margin business. So some of that top line may not really grow as quickly. So that is the other piece I want to know. Which business vertical is likely to aid that double-digit growth? The likelihood of a 4% PBT margin by FY27, because that is the basis on which you would likely find this attractive, if at all. And of course, it's 4% PBT and therefore 3% PAT. That's likely the derivation that I have taken. But what will the levers be for a 4% PBT margin? They've spoken about a couple of their segments inching up in terms of their EBITDA margins, and there is cost optimization also happening at the back end. How much of that is already translating? How much of that will likely translate, and whether that will or not also is really the question. But currently the guidance stands, and the risk of global geopolitical and tariff uncertainty with everything that's happening, could this well be a sector which is going to be under pressure, and a company in a space which will likely be under pressure is what I'd want to know. Now, the other piece is how much are you growing and what's the next step with regard to the India business? They're giving up some of their low margin business. Who is taking up that pie, and how is it that they are planning to grow in India, which is currently just a quarter of their business, which is what the India business currently commands. So all of that and more is what I'd want to know, and we'll speak with management, of course. But let me first start off, as we always do, with regard to the company itself. I'll quickly breeze through this one. It's part of the TVS group. I did speak about that. It provides logistics, supply chain services. It's tech-led, it's asset-light in terms of its business model. Even though on its fixed asset base, you'll see 2,000 crore of assets, some of that being tech, some of that also being leases which they've taken some of their assets on. So it's just an accounting phenomena which they have to record as part of the assets of the business. So it's asset-light per se. They don't purchase any warehouses. It's all leased. They don't purchase any of their vehicles as well. All of that is leased. So all of their assets are leased. They're proud of that. They operate in 26 countries, and they have their headquarters, of course, in India. They have around 6,200 active customers globally, and they focus on long-term contracts with Fortune 500 clients. Very, very prestigious list of clients. I'll name a few and I'll take you through a little bit of the customer base as well. Now, in terms of services first, what do they provide? One is their integrated supply chain solution services. This is basically end-to-end management of a client's business. Say, for example, you're doing the business of plastic containers. So you will need to buy raw materials from someone. TVS supply chain will enable that. Will enable transport of that raw material to a warehouse where you can store it, will ensure transportation from the warehouse to your factory as you require it. Thereafter, finished product from the factory to another warehouse depending on distribution. And thereafter, they will ensure that it is seamlessly provided to distributors and thereafter to the retail customers. So that's broadly how integrated supply chain management works, and that's what they do. They provide solutions around that. And then the second major part is their network solutions, which is moving product efficiently. Now, this is not just from a global standpoint, but even within factories. They enable and they ensure that a product from one part of the factory can move to the other more seamlessly, more quickly. It could be that, or it could be product moving from, say, Mumbai to Hong Kong or otherwise. Wherever that is, they ensure that that product moves, which is what network solutions is all about. And you need to know these two businesses categorically, because you will get the split of businesses and the margins based on these two businesses, which is why I've tried to simplify this and covered only two parts of the business. So when you're looking at the segmental split, supply chain is integrated supply chain is 55% of the business, network solutions is 45%. This is based on top line segmental split. The other one is based on geography. Currently, India commands 27%, international is 73%. We did speak about this. And the third piece is the revenue mix based on sector. You want to know this because if one of the sectors slows down, then the other could well take its place. You want to know that. So that's the sectoral split that you should know about. Last off, customers. And in terms of the type of customers, well, it's quite a list there, but these are some of the big ones that they have. They also have global retail chains, both UK, Europe, US, all of the above, which they cater to and they take care of their needs and their supply chain requirements. In fact, out of the Fortune 500 client count, they have 91 of the Fortune 500 companies which they service as of FY25. Customer contracts are usually 3 to 7 years, right? And I'll explain this part just a bit. No, can we pull the perfect? So Europe, in terms of number of clients, is more than UK, is more than North America, is more than India in terms of customer contracts. And usually these contracts are 3 to 7 years. Now let's pull up the next slide and that will give us some perspective as well. The average contract duration is 4 years. You look at North America, it's around 4.2, and in Europe it's 7. So Europe is a far larger or far longer in terms of contract duration and certainty than North America and than India. So India is in fact a smaller contract duration or average contract duration that they have. And that gives you visibility of the business as well, right, going forward, because you have those repeat customers coming back to you, and this kind of gives you that picture, that texture, that where is it that there is most amount of certainty where the business is concerned. Now that's all about the business, of course. Let me start off with the metrics, the key metrics that we will highlight for you. And I'll start off with the income statement with regard to TVS supply chain, thereafter the balance sheet, cash flow, return ratios, shareholding, street cred, outlook, and valuations. And valuations is going to be a tough one, and I've made a few assumptions, so I'll try and explain that to you. Let me first start off with the income statement. And when you're looking at the top line, it's grown at just 3% on a 3-year CAGR basis, so really no growth. EBITDA too has largely been stagnant at 3%, margins stagnant at 7%, and profitability absent for the moment. So that's the broad take with regard to FY22 to FY25. Very average looking income statement. Let me talk about Q1 FY26. There's a one-off there which has caused a bump up in profitability that we've seen in Q1 FY26. So that 71 crore rupee of profit is due to an extraordinary item. Well, the QOQ YY numbers not exactly relevant, but broadly that's the set, and 6.8% is the margin that they've clocked. Let's pull up the margin trajectory as well if we can. And around 6.7 to around 7.7% is what the margins have fluctuated around. So that's broadly the margin take. Let me also tell you that this doesn't look entirely healthy, but when you're looking at it from an overall standpoint, if you're building a business where you have a couple of nuances which are impacting your top line for a couple of years, and you're able to pivot that, and mind you, this is a TVS group company. So you obviously want the margins to improve, and that's likely the guidance and the case. And they've also guided that going forward that they'll do likely better margins. So we've given this a neutral for now, at least no degrowth in terms of the numbers. Profitability awaited. and sustainable profitability also awaited. So all of those factors still awaited. We have given this therefore a neutral. Now let's look at the balance sheet, and when you're looking at the book value, it's at around 1800 odd crore. It's a 6000 crore market cap company and therefore sitting at around 3 times book. The borrowing number is quite elevated, and that's because of the increased working capital requirements that the business has. The borrowing is from, it's largely global in nature, and lower rates at which they borrow at because it's global in nature, and they have repayments. So as soon as they receive a payment, they're able to pay off that borrowing and close the account. So it's a back-to-back. But when you look at the cash bank balance, it's more than enough to somewhere fund the borrowing to a large extent, and therefore the net debt doesn't look all that large. Most of that borrowing number is sitting in short-term borrowing, so it's not even long-term in nature. But the cash bank balance continues to remain healthy for the company, something that you want to look out for, because for a 6,000 crore market cap company to be sitting on 600 crore of cash is certainly good. We've given therefore the balance sheet a thumbs up, even though the borrowing number is quite large. You want to be cautious about that, but that's the nature of the business. Now, third piece with regard to the cash flow, and when you're looking at the cash flow overall, the cash flow to EBITDA is quite good. The conversion is quite good. What you want to know therefore is what happened in FY24. Now in FY23, they were funding a large part of their working capital requirements through factoring. So they were selling the receivables, taking in the money upfront at a 2 or a 3 or a 4% discount, depending on the rate at which they were able to sell the receivables. So the money was coming in immediately. So the cash flow was strong. FY24, there was listing and they raised money through listing. Therefore, they did not require to do the factoring business, or they did not require to do factoring of receivables, which is why you saw a sharp shrink in CFO to EBITDA. So there was an unwind which happened over there, where receivables went up dramatically and were allowed to sit on the receivable side of the balance sheet. FY25 therefore has normalized. The amount has normalized in FY25. You had all the receivables come out and accrue in FY24. FY25, everything remains steady state, and therefore you have 100% CFO to EBITDA. That's broadly the way in which this has moved, and therefore we've given this a thumbs up as well. You look at the ROCs, not looking impressive though. So when you're looking at it from an ROCE perspective, it's definitely a thumbs down. You want the ROCs to go up, and we wait for that, and it may well happen if some of the guidances are achieved. Let's look at the shareholding pattern now. 43% owned by the promoters, FIs hold around 3 odd percent, DIs 2%, and public around 50 odd percent. The number of shareholders also have largely been steady. But what you want to look out for is the promoter holding, which is at 43%, not half bad. We've given this a neutral as well. Of course, it's not a 50% plus, which is where we normally give it a thumbs up. The street cred. Now, this is far from impressive. While today the stock is doing fairly well, 1 month the stock has been absolutely flat, 6 months 1% only, year to date 25% negative, 1 year the stock is down 30, and since listing the stock is down 32. So clearly under pressure, something like a TVS supply chain. So we've given this unfortunately a thumbs down, because shareholders clearly would be under pressure, and those holding it would be under some bit of pressure because there are no returns. Now let me talk about what the key piece of this is, the outlook. The company is expecting double-digit revenue growth in FY26. I'd also want to know what the FY27 outlook is, and I'll start with that. The company maintains its target of 4% PBT by FY27, and I've just run some numbers. I've said a 10% growth in FY26, a 10% top-line growth in FY27 with a 4% PBT margin, a 3% PAT margin will lead to the valuations, and let's pull that one up. So it's a neutral where outlook is concerned, want to see whether that is doable or not. And let's pull up valuations. And if that were to play out, valuations will be around 18 times FY26. So these are what the competitors trade at, where FY26 valuations is concerned. And that is where TVS will trade at, around 18 times. Competitors trade at 24 times, TCI Express. Delivery is another beast of its own, and Concor trades at around 28, 29 times. So broadly, that's the case for some of the competitors. Of course, no clear competitor there, but TCI Express could well be one of those. So clearly looking better versus other competitors is a TVS supply chain. Let's stack up all of the metrics that we've just discussed and give TVS supply chain its final rating. That's how it stacks up with regard to the first 4 parameters, the next 4, and this one will get a rating of 4 out of 8, I would believe. Let's pull that one up. Okay, so that's how the rating is. Let's go across. We have Ravi Vishwanathan, who's the Managing Director at TVS Supply Chain, who's come in to speak with us today. Sir, let me start off apologies. We have Ravi Vishwanathan, but we also have R. Vaidyanathan, who's joining us, who's the Global Chief Financial Officer of TVS Supply Chain. Apologies for that. Mr. Vishwanathan, let me start with you first. Let me try and understand, is this 10% growth FY26 possible in this environment? It is this high levels of uncertainty at this point. So give us a perspective on that first off.
No, thank you so much for having us, and it was good to see your coverage. Let me start by saying our business has got 2 components, right? The ISCS segment and the global freight business. Yes. The global freight business definitely has dependency on all of the uncertainty that's going on that we are all talking about on a daily basis, and that's something which is creating a lot of volatility. But if you look at the integrated supply chain business, it's a steady business. It's got large contracts, like you pointed out in your analysis. It is long term, and it gives us sustainable margin growth. So if I look at your question on, is the 10% possible? I look at the lead indicator. The lead indicators are the pipeline. The pipeline is 5,300 crores, and it's continuously been improving. If you look at it from what we've been publishing, and every year we typically have about 10% revenue coming from new business. So this is something which we are comfortable with. Our pipeline gives us good, I would say, confidence getting out of Q1. Of course, how the macro plays out is anybody's guess. At this point in time, I think the ISCS business is relatively calmer. The global freight business is definitely a bit more volatile. So I hope that gives some color to what I was trying to give as a response to your question.
Certainly does, Mr. Vishwanathan. And before I go to Mr. Vaidyanathan, let me ask you one more. FY27, what is that growth number that you'll be looking for?
So our guidance is to double-digit growth. We would like to get to mid-teens, given the pipeline and some of the advanced stages. Some of the large deals are in the pipeline. There's every confidence that in FY27 we should get to early teens, if not mid-teens, in terms of revenue growth. But I think the key for us is the PBT. We are on a strategic transformation program across the company, and our commitment towards a 4% PBT by Q4 FY27 is something which we want to make sure that we live up to. And towards that, we have taken a series of programs which are already on the way. And we clearly have a very, very strong roadmap in terms of managing our cost structures and driving leverage, which Vaidi can throw more color on, to ensure that we hit the 4% PBT target. So we are definitely going after both the revenue engine and the cost engine. A lot of focus right now. The market is what it is from a revenue. We have to live through the uncertainties, but what we can control is the cost much better, and that is where the strategic initiatives are playing out. And I think as we exit FY26, you will clearly see that linearity moving towards an exponential path.
Understood. Mr. Vaidyanathan, it's an uncertain environment. We did speak about that. In such an uncertain environment, how do you plan to drive operational efficiency within a business which hasn't done as well in the last 3 years as one would have hoped? So what changes?
Yeah. So I think as Ravi mentioned, what is in our control is only the cost, right?
Right.
I think we have taken a lot of series of actions in order to re-baseline our costs. One of the critical things is the IFM turnaround that we were able to do last year, which is giving results the current year. Similarly, the Project One, the initiative that we have taken to completely transform our UK and Europe business. Again, this is primarily driven at the market, but also there's a lot of cost benefit towards that. So all these things, these are under our control. Irrespective of the market, playing out, I think we will be able to control these first to improve the profitability going forward.
Understood. So, what could you give us specifics on what will help get you to the 4% PBT? What costs are you planning to control? Give us and our viewers some bit of clarity on that.
Sure. For example, right now we are about 0.5%. To reach that 4%, there are three broad levers that is playing on. One is the integrated final mile business in the UK, which should give us an additional 0.4% of profitability improvement. We have taken a lot of strategic actions there, including a one-time price correction, which will give us a significant improvement in the profitability of the IFM business. The second big lever is the project one, which is the integration of our ISCS business and IFM business in the UK and Europe. Again, that is expected to give at least 100 to 120 crores of cost benefit from FY27 onwards on an annualized basis. There will be benefits in the current year as well, but on an annualized basis, the benefits could be about 100 to 120 crores. The third big lever is for us the operating leverage. The cost reduction program that we are running across all the geographies, not only UK and Europe, but also in India, Asia Pacific, as well as in North America market, that will also significantly give us the operating leverage. So all these factors combined together with the double-digit growth which Ravi was mentioning to help us take it to the 4% PBT.
And sir, how quickly do you see this translate? So take us through the journey, Mr. Vaidyanathan. Will it be 2% PBT this year? Will it be 3% PBT this year and thereafter 4%? Will it be immediate 4% in FY27? Give us that color. Give us the timing.
Yeah. So I will not be able to give you specifically in terms of what we expect at FY26. Sure. But you can say that sequentially there will be an improvement in the PBT because all the actions that we have taken, when we start setting the benefit, sequentially we'll start seeing the improvement in the PBT.
So Harsh, let me just qualify that by saying, look, we don't want to guide the market towards FY26, but we will exit FY27 Q4 at a 4% PBT. So that you can then build that chart. Like Vaidhi said, about 0.4% coming from IFM, 1.2% coming from the Project One initiatives, and the rest coming from the leverage to a base of 0.5. And that's and with all of these measures already kicking in, that's why I said we will move from a linear to a slightly more exponential trajectory as we exit FY27.
Got it. Mr. Vishwanathan or Mr. Vaidyanathan, whoever this is may be relevant for, working capital, there was a one-off there in FY24. There was an adjustment which happened and we explained that to viewers. Is that a thing of the past or do you continue to believe that may be a concern in the future at some point as well?
The working capital is at an optimal level, I would say, the business that we are currently in. And it will continue to, as the business grows, the working capital requirement will go. I think the FY24 was a one-off because we came out of the factoring. But I think broadly, I think we are from an optimal point of view, I think we are very, very comfortable.
Mr. Vishwanathan, talk to us about the sustainability of this 4% PBT and talk to us about new order wins that are coming your way. What's the traction looking like in this environment at the current juncture?
Right. I think let me first talk about the opportunities and the orders.
Sure.
Clearly, our pipeline is continuously growing. We are winning large deals in the market. The ISCS segment typically has a longer gestation period in terms of converting those contracts. And we have contracts at multiple stages in the funnel when you look at the pipeline. And therefore, the confidence of having a sustainable double-digit revenue growth is pretty high. The key for us, of course, is the execution. We think the first step is to get to the 4% PBT. But as we exit FY27, a lot of things that we are doing today in terms of investment in AI, in agentic AI, all of this should play out, and that should start giving us incremental opportunities to increase our PBT from 4 and beyond. In the investor meeting earlier in the day, we said the best-in-class operate around 8% and some at a slightly higher number. So our first step is to get to 4 and then build a plan to get to the 8 in the mid to long term. And for that, we have to, as a company, imbibe AI. We have started multiple projects. We have AI deployed in scale in the US, in India, and also in the UK.
Right.
And we expect that to take more prominence as we go forward.
Right. Mr. Viswanathan, would it be prudent to say 8% by FY30 is the aspiration?
It's probably early to jump to that, but we will most definitely make a projection as we exit FY26 and as we see the trajectory evolving.
Sure.
But clearly, internally, we do have a plan which probably we can share by the end of the fiscal.
Excellent. Thank you so much, both of you, gentlemen, for joining us and giving us that perspective. We'll let you go on that note. And viewers, frankly, completely out of time on this edition of KYC. So we're going to close this show here with a 4 out of 8 on the current KYC rating of TVS Supply Chain.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Decent start to the week. Nifty holds up above 24,400. Sensex in fact gains more than 200 points. Adani Enterprises and Tata Motors gain the most. Meanwhile, PG Electroplast falls as Nuvama cuts FY26 EPS estimates by 35%, citing lower room AC growth, margin pressures, as well as higher interest costs. Target price reduced from 1,100 rupees to 710 rupees amid slower revenue growth and elevated inventory concerns. Union Cabinet approves rupees 30,000 crores LPG subsidy to oil marketing companies to ensure affordable cooking gas for middle-class households. Subsidy covers losses from underpricing over 15 months. And sources tell your channel that CCI is investigating quick commerce firms Blinkit, Instamart and Zepto over alleged anti-competitive practices, including deep discounting and unfair business irregularities. Good afternoon. You're watching Markets at 12 with me, Shreyanshi, saying first things first. Let's tell you how the markets are doing at noon. In fact, when you take a look at the Nifty, it's looking like a very decent week, decent start to the week for the Nifty, managing to hold up above that 24,400 level. As far as the Nifty is concerned, when you take a look at the Sensex as well, gaining about 200 odd points there, about 230 point uptick for the Sensex as well. When you take a look at the list of gainers on a sectoral basis, you have a PSU bank, defense, pharma, realty, auto, rural. Those are some of your sectors that are leading gains. In fact, just a couple of sectors on the back foot as we speak, oil and gas as well as media on the back foot. And when you take a look at the list of gainers, in fact, from within the Nifty 50 pack, you have an Adani Enterprises that is up 4.5% thereabout. Tata Motors managing to stay quite resilient after that weak set of numbers. Brokerages are also cautious on the stock, but managing to gain about 2.5%. That's Tata Motors for you there. Grasim Industries, SBI, Trent, Ultratech Cement, Cipla, Dr. Reddy's, some of your other gainers as well. On the flip side, when you take a look at the list of losers from within the Nifty 50 pack, there's a Hero MotoCorp, ICICI Bank, HDFC Life, Bajaj Auto, Bajaj Finserv, as well as Maruti Suzuki that are on the back foot. And when you take a look at the list of some more losers as well, you have certain stocks, the likes of PG Electroplast, down about 16% as we speak. Voltas as well, 6.5% cut coming in on that one. And PTC Industries also not doing quite well, 6% downtick coming in on that particular counter. Of course, we'll be getting you the word from the management of PG Electroplast a little later. Also talk to you about what the management of Tata Motors then had to say. In fact, let's begin with just that. We'll get you the update as far as Tata Motors is concerned. Before we go to the management, let's go across to Mahima and get a sense of what the earnings fine print then looks like.
Right, so it's a weak set of numbers when it comes to Q1 for Tata Motors, and largely led by JLR sales because that was impacted on the back of tariff. Now, in terms of margins, that's disappointed in terms of the passenger vehicle segment, and 10% luxury tax by China also remains as an overhang on the counter, and brokerages are seeing limited upside right now considering the entire uncertainty around JLR. In terms of the overall numbers, revenue down 2.5%, EBITDA down 35%, margins have come down to 9.3 versus that of 14% and net profit has come down by 63%. There's also a base year effect of around 4,900 crores from discontinued operations earlier, but in terms of the overall sales also, that's also been the weak space. In terms of the JLR wholesale numbers, they were down 10%, commercial vehicle sales down 6% and passenger vehicle sales down around 10%. In terms of the segmental split, in terms of revenue also, JLR down about 9.2%, commercial vehicles down by about 4.7% in terms of revenue, and passenger vehicles also down by about 8.2% in terms to where revenue stands. In terms of the overall EBITDA margins, downtick of around 650 basis points for JLR, that's a big one. The commercial vehicle vehicles segment margin downtick by around 60 basis points, and for passenger vehicle that's around 180 basis points. Lastly, in terms of guidance for JLR, that's been reaffirmed. They've said that overall JLR EBIT margins will be in the range of 5 to 7%. And overall, in terms of the EU-US trade also, that will be beneficial because the tariffs will come down for the company. In terms of the overall highlights, commercial vehicle segment is expected to be, the growth is expected to be anywhere between 3 to 5%, and passenger vehicle growth is expected to be around 5%. In terms of what brokerages are penciling in, Nuvama is retained reduced with a target price of 610 versus 670 earlier, and CLSA has maintained outperform with a target price of 805 for the counter. So this is the overall view of how Tata Motors Q1 has panned out.
Alright, then thanks Mahima for getting us that update as far as Tata Motors is concerned. So brokerage is also quite cautious when it comes to this particular counter. Let's also go across and listen in to the commentary coming in from the management. In fact, PB Balaji, who's the group CFO, weighs in on the performance impact due to the volume declines at JLR. Let's go across and listen in.
The company performance in this quarter was impacted by volume declines and a drop in profitability primarily at JLR, affected by the US trade tariff impact, where we had the full quarter of impact and then the trade alignment happened. In the current quarter, we have got hit by almost 250 million pounds on tariff charges, because even though the deal was announced on May 8th, it got ratified only on 30th June. And it is not with retrospective effect. So the current quarter is a full impact of 27.5 that you see. And that's the reason why the EBIT also went down to 4% in JLR. With the trade deals between UK-US and EU-US now in place, the tariff impact will ease in the coming quarters from 27.5% to 10% as far as UK is concerned, and 27.5 to 15% as far as EU is concerned. In light of this, our guidance for the FY26 EBIT margin of 5 to 7% remains, and we'll be near neutral free cash flows.
Alright, and that was the group CFO of the company talking about the JLR numbers. But tell you what, let's take a look at some of the other earnings buzzers as well. It's Voltas that is under pressure. On the flip side, there's a Yatra Online that is buzzing away in trade. In fact, Mahima is joining us yet again with the answer to that as well.
It's a Voltas overall weak set of numbers, and this is because the entire quarter was impacted because of unseasonal monsoon. That has impacted the sales and also caused channel inventory go up. In terms of volumes also, there were weaker volumes on the back of factory operations mid-seasons, and there's improvement in electromechanical project margins, but unitary cooling products margins were lowest in the past 10 odd years. Now in terms of the overall numbers, revenue down 20%, EBITDA down 58%, margins came at 4.5 versus that of 8.6, and net profit down almost 58%. In terms of segmental performance, unitary products revenue declined by 25%, margin declined to 3.6%. For electromechanical projects, revenue declined 3 odd %, and margins came in at around 5.3%, a slight uptick there. In terms of con call highlights, month on month market share has improved, is something that the management has guided for, and Voltas is carrying around 3 to 4 months of inventory as of now, and channel is carrying around 2 months inventory. In terms of what brokerages are saying, mostly all brokerages have maintained their stance, but some of them have cut the target prices. Jeffries has maintained buy but cut the target price to 1670, or 10 rupees target price cut. They're saying the new B rating and tactical cost control could help recovery in RAC, but they've also trimmed their EPS estimates by 2 to 3 odd %. Whereas Goldman Sachs on the other side has maintained sell and cut the target price to 1100 from 1180 earlier, and they're saying that it's another weak quarter and challenges still remain as an overhang. So this is the overall view of how Q1 has panned out for Voltas, but there is also Yatra Online, like you said, on the other side. On the flip side, that's done very well. Overall, gross bookings up 9%, gross margins continue to see uptick, and they've also signed 34 new customers in the corporate business this time, with an average billing potential of over 200 odd crores. In terms of the overall revenue, up almost 100%, net profit up almost 3 times, and EBITDA almost up 5 times. So this is the overall view of how earnings pan out for Yatra Online.
Alright, and thanks Mahima for getting us that update. Then there you go, that's Yatra Online as well as Voltas, couple of counters that you should be looking at in terms of their earnings. But let's get back to Tata Motors, because that particular counter is remaining quite resilient in trade at this point in time. After that weak set of numbers, brokerage is also remaining cautious. Despite that, you have that stock that's just managing to hold up quite well, as you can see on your screens as well, on the top of your screens as well as on your screens. In fact, let's delve a little deeper into what is helping the stock at this point in time. Let's get Ashwin Patil, Senior Research Analyst, LKP Securities, on board. Try and understand what he also thinks about these numbers. Ashwin, thank you so much for taking time out and joining us this afternoon. A very good afternoon to you. I wanted to understand, first things first, what do you think about the stock holding up that resilient?
Very good afternoon. So actually the company has reported weak set of numbers, as you said earlier. And we have seen, subduedness in the JLR numbers as well as the domestic passenger numbers. But if you see the commercial vehicles, maybe because that may be one of the reasons why the stock is holding up, where the company has reported some sort of market share gains, as well as some steadiness in some of the sub-segments of the commercial vehicles. And that is, I guess, that is showing that the the domestic commercial vehicle cycle is started showing some green shoots. So maybe that is, positive for the overall Indian commercial vehicle industry as well as for Tata Motors. Maybe that is one of the reasons why the stock is holding up at this moment. But apart from that, I don't see any, as such positive guidance also from the management. Like, on the passenger vehicle side also they are losing out on market share, and on the EV side also they are getting a stiff competition. Also, if you look at JLR, there is a lot of weakness in the European markets as well as in China. Also, there is this tax which has come up. So I guess going forward there will be difficult times for JLR in couple of these geographies. While in US it is doing good, but overall, if you ask me about the stock performance today, then it is anybody's guess why the stock has moved up. But I guess the commercial vehicle green shoots which we are seeing at this point in time, maybe that is one of the reasons why the stock is holding up today.
Well, absolutely. And I just wanted to add to that list that you've mentioned. Of course, you've highlighted stiff competition. But other than that, there's, of course, the China tax, there's warranty costs. You've briefly mentioned the aging models when it comes to JLR as well. What do you think about some of those concerns as well as market share losses when it comes to Tata Motors?
Yeah, that's what I said earlier also, that in China that new tax has come up. And also, competition is coming up. The competition is launching new, high-tech advanced and, models in the EV as well as the ICE space. Not only in India but also globally. Therefore, the domestic business is also facing tough competition over here from the likes of Mahindra, Maruti, etc. And in the global markets, if you see in Europe and all, the growth is very sluggish. There is hardly any, growth happening in the automobile sector over there, and overall the economies are not also growing at a good pace over there. So I guess, and that is Europe is close to about 20% of the top line. China is another 24%. So about, if you talk about 40-50% of their volumes are, in risk of slowdown. So and the US is doing good. But also UK is showing some sort of stability in volume performance. But China and Europe, the couple of big geographies for JLR, they are showing this weakness. So I guess the model launches are also pending. I mean, a lot of model launches are there in the pipeline. But at this point in time, the market is growing fast. The competitors are growing fast. So I guess that because of that, there is a lot of concern on the stock on that front as well.
Well, absolutely, lots of concern there, and we've managed to highlight some of those factors on both sides. But I just quickly wanted to get a word on what do you expect for the stock from here on, and also what do you think we should be doing when it comes to the stock? What is your recommendation here?
See, on the positive side, I would say that, this Iveco acquisition, which the company has done recently, that is, offering Tata Motors to expand its presence in the global CV market, and number 4 player it will be making it. Technology will be adding into it, but at the same time, in the European market, there is a lot of slowdown, and also the stock of Iveco has grown by, twice in the last 1 year. So So it's not a very inexpensive kind of acquisition that the company has done. It is also adding to the pressure on its balance sheet. So it has got both the advantages, this acquisition, and that will be adding up by April 26 to the financials. So suppose that the company will be getting some sort of reality check on this acquisition, but maybe like on positive side, we can see some sort of growth on the top line and a good presence in the global markets. But if you talk on the negative side, overall on the core business, if I say that there is a lot of pressure on JLR on the domestic PVs, but CVs are, which is a high ROC business, about 40% ROC is there on the domestic CV business. So I guess that is, on the positive side. So on and on, we remain neutral on the stock at this point in time with a target close to about 670 rupees.
All right, and thank you so much, Ashwin, for joining us and taking time out and helping us understand what are the triggers as far as Tata Motors then is concerned. There you go, Tata Motors holding on to a 2.5% uptick in trade despite a weak set of numbers. Brokerage is remaining cautious. Lots of moving wheels and moving parts to that entire story, but the stock is only moving in one direction. That's Tata Motors for you, but let's also look at one counter on the flip side. It's PG Electroplast that is in fact bleeding in trade. 16.5% thereabout downtick coming in on this particular counter. In fact, let's go across and listen in to what Vikas Gupta, who's the Managing Director Operations at the company, then had to say about what really weighed on the first quarter's results.
In the quarter one, the industry as a whole has seen a degrowth of 25 to 30%. Almost all the major AC players, AC brands or AC manufacturers have experienced a degrowth in their numbers for the quarter one. We as a PG Electroplast has been able to deliver a growth of 14% in our revenue top line. Please understand. Now, when we dive deeper into this subject on how the slowdown in this AC is happening, please see there has been an early onset of monsoon. So because of the early onset of monsoon and due to the high channel inventory, the overall summer selling season for the air conditioners got compressed and it fell off beyond the anticipation of any of the industry players. So there has been a decline in the numbers of sales for the ACs. The tertiary sales or the secondary sales were very low. And in the month of July and August, as we are seeing right now, the sales are practically not happening.
All right, and there you go. That's the management of PG Electroplast talking about their numbers. That stock is tanking in trade, 16.5% downtick, as you can see on your screens as well. But before we go ahead with the show, we bring you an exclusive conversation with SBI Chairman C.S. Setty. Let's go across and listen in to what he had to say about SBI's quarterly performance.
Hello and welcome to NDTV Profit. So we're here at State Bank of India after the bank has announced its Q1 results. And I have the pleasure of talking to Mr. C.S. Setty, the chairman of the bank. Mr. Setty, welcome to this conversation. I'll start this with the first question on profitability. You've reported a 13% increase, year-on-year increase on the net profit side, while the NII remains flat-ish. You've seen that growth come in because of the non-interest income. Can you tell us a little bit more about how this profitability is coming through for SBI?
Growth obviously, supported by the treasury gains, and we, as you know, we have the largest securities book, right? So we have used our treasury operations both by way of churning the portfolio, that is what we call trading gains, and also a bit of aid on the MTM gains. But broadly, what we have realized that, what is the earlier duration what we have obtained on the securities book, we took the opportunities of gaining on the trade front. So that is one of the reasons why it has contributed. But you also have to look at NII from a different perspective. The net interest income will be always under pressure because of the rapid repricing of the loans. Right. 30% of our book, when compared to others, of course, is a smaller size repo-linked book, but still gets priced very fast and almost immediately. But deposit will take some time. This lag also is something what we have pressure on the NII. But I believe that we were able to maintain the rate NII at a reasonable level than what people have expected. The third point what we have done is that we have contained our operating costs. If you see from year on year, the operating expenses have remained at the same level. So these are some of the points which have helped us to maintain the growth rate what you have seen in the profit.
All right. So on that note, I want to ask the second question, which is that the current global scenario is looking a little bit, off, right? If you were to look at the geopolitical tensions, that is receding a little bit. However, when you're talking about the global market scenario there, because of the trade tensions, the pressure is still on. So I just want to understand from you, as a lender to a large number of SMEs as well as exporters, how exactly are you seeing the tariff tension play out in the world?
So I would like to answer this question in two parts. One is the direct impact of the tariffs. From that angle, the asset quality or issues on the corporate or MSME side is limited. Because most of our exporters are broad-based, both in terms of geographical spread as well as the nature of exports, what happened from India. But having said that, the US is still a significant trade partner for us. And the tariffs issue is not localized to India. The tariffs is impacting several other countries, which means that, as you mentioned, the trade tensions are there across the globe, which will have definitely an impact on our exporters also. Even if they are not directly exporting to the US, are not directly involved in the sectors which are impacted. But general sentiment is something what probably is a larger worry than actually direct impact. So the uncertainty surrounding this tariff is something what needs to be resolved or addressed. I'm sure a lot of effort is going on the Government of India part to sort it out. And the Government of India obviously has to take care of the interests of the nation and the interests of the various stakeholders and negotiate on the trade front to arrive at a very win-win situation for everyone.
Okay. I want to ask you two more questions. The first one on the credit growth side of the story. So you've shown 11.5% credit growth, which is looking quite strong. However, if you were to look at the corporate book, there the growth has actually been flattish. I just want to understand, what the outlook looks like for the rest of the financial year.
First of all, let me explain why it looks muted. I think in any declining interest rate scenario, most of the well-rated corporates look for repricing. The refinancing opportunities where the pricing can be readjusted, particularly those high-priced loans and all.
Sure.
They have various options. Either you negotiate with the existing lender or go to another lender who is able to give a better price or access the market. And all of them are happening now. So which means that wherever we feel comfortable, the risk is priced properly, we are able to reduce the price and give to them. And in many cases, if we are not very convinced that the price is properly taking care of the risk, we are letting that go. So there have been significant prepayments in the Q1 because of the price adjustment. Number two, the working capital utilization by the large corporates has come down because they were able to access the CP market. So both in terms of access to the CP market as well as repricing which is happening in the market, which is really led to this. But our guidance is that overall credit growth, we are still sticking to 12% credit growth, out of which corporate will come back to double digit in our estimate. Around 10% is something what we are looking at.
All right, the final question is around the asset quality front. Of course, if you were to look at the Q1 slippages, that's a little elevated. Of course, a lot of it is seasonal. But are you seeing any elevated stress, any enhanced stress anywhere in your portfolio right now?
We are not seeing any enhanced. And I also mentioned that, you need to look at the Q1 of the last year. And very marginal, 300 or 400 crores on a book of 42 lakh crores is not really material to us. And even from these slippages, we pulled back almost 1,600 crores worth of slippages, which means that there's no concern on the asset quality at all.
All right. Thank you so much for joining us in this conversation, Mrs. Sethi. Pleasure talking to you as always.
All right, and there you go. That was a slice of that NDTV Profit exclusive. But with that, we're completely timed out on this edition of the show. Thank you so much for tuning in.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात खौफ किस लिए?
Hello and welcome to NDTV Profit. You're watching Profit Bazaars. This is Hiral Datia. Let's quickly take a look at what markets are doing at this hour. Interesting start to a Monday. If you see in terms of Nifty 50 as well, we've receded from the day's highest levels, but still trading in the positive with gains of 0.3% coming in there, and you're still above the 24,400 mark. What's interesting is that 24,000 has been breached as well in intraday trading session. Let's quickly look at Bank Nifty as well. Around 130 to 140 points is the kind of gains that you're seeing there. 0.3% higher in terms of Bank Nifty. Let's look at the sectoral heat map to understand where the gains are coming in from and which are the segments that are losing out. Consumer durables is the top losing sector today, and this is taking into consideration the kind of commentary that's coming from a PG Electroplast that has had a bearing with regards to stocks like Voltas, which has also reported a weak set of numbers. Amber Enterprises is another one which is seeing a rub-off effect, as well as a EPAC durables is another one that you should be looking at on the back of the commentary that has come in with regards to cautiousness and a cut in guidance. Media is also trading under pressure today. Oil and gas under pressure as well. What's gaining is the PSU Bank Index, which is seeing a strong up move today. Defense is also seeing buying interest in today's session. Realty has seen a bounce back today with gains of 0.8% coming in there. And you have healthcare, which is seeing some good gains. But moving on, let's quickly look at the broader markets as well. You have the mid-cap and the small-cap index that will be in focus. And the kind of gains that are coming in there you go. 0.3% in terms of mid-cap 150, similar to what's happening in terms of Nifty as well as Bank Nifty. But small-cap index is pretty much on the borderline, though trading towards the negative. In terms of individual counters, let's look at the heat map in terms of Nifty 50. And then we look at, what the broader market stocks are doing in trade. Clearly, what's losing out is the ICICI Bank, and that's on the back of the 50,000 minimum, balance that you need to have if you're opening a new account with the ICICI Bank, and that's what is causing a backlash on that stock. You have BEL also, which is trading under pressure. Maruti also under pressure. What's interesting is that Tata Motors, in spite of a weak set of numbers, strong moves coming in on that one. SBI is trading with gains. Grasim also seeing some smart moves in today's session. Trent as well as the Tata Motors, which are trading in the positive. But staying with the gainers in trade, you have a Grasim Industries. Q1 numbers is what the stock is buzzing with. Let me head across to my colleague Varsha to get us more in terms of Varsha. With a Grasim, the stock is seeing gains of 2%. What is it that has worked for the company?
Yeah, thank you for that. So, though the numbers came out in market hours, it's the positive stance by brokerages which is actually, making this stock to surge. Let's just, focus on the key highlights. How were Q1 FY26 numbers? If you see, cement business were the key growth driver or the key earning driver for this company. And EBITDA growth that you're seeing is led by higher profitability in cement and, of course, chemical business. Improved realization in caustic soda and gains in chlorine derivatives have also lifted EBITDA for the company. Now, talking about why the stock is up because of the positive stand by the brokerages. Let's see what Nuvama has to say. They've retained hold rating. They've revised their target price, which determines a potential upside of 7% for the stock. What they say is weak CSF, that is cellulose staple fiber environment, negates chemical EBITDA margin improvement. Paints and B2B e-commerce business is scaling up well. And the capex for FY26 is estimated at rupees 2,300 crore. And what Nuvama is saying that despite huge capex, net debt EBITDA, if you see, would stay less than 3.5x once revenue stabilizes. Well, let's see what Citi has to say about it. They have rated by and they have increased their target price, which determine upside potential of 24%. They expect stock will be driven by the cement and the paint business. We all know how Grasim is, scaling up its capacity when it comes to paints business. They've also hiked FY26, 27, 28 standalone EBITDA by 10%, 2% and 2% respectively on better chemical profitability. So it's the positive view by the brokerages is what has led to stock surge when it comes to Grasim Industries.
That's for Grasim Industries. Thank you, Varsha, so much for that one. In fact, let me get in Sharmila Joshi as well to give her view. Sharmila, welcome to the show. Always a pleasure to speak to you at NDTV Profit. How are you looking at a Grasim Industries? A good up move in terms of today's session on the back of an earnings reaction. Would it be a buy for you at this point?
No, not really. I think, in terms of valuations, it's looking a little expensive. So yes, I think that given that numbers were good and commentary is good, you could see a bit of an upside. But overall, I think that it might be better to wait a bit before you buy.
Okay, so that's aggressive. Valuations are expensive. But moving on, Tata Motors is in focus as well. And this is as the auto giant's JLR business was massively hit by tariffs. Though the stock is seeing gains of nearly 3%, what's really stood out most over here is overall, if you talk about the profits, they've dipped around 63%. Margins have disappointed across the passenger vehicle business. The brokers have gone ahead and trimmed the outlook as JLR is facing trade as well as market headwinds. And the revenue impact and the margins which have been weak for JLR and passenger vehicle is what brokerages are indicating. What they've said is 10% luxury tax by China on vehicles is an additional negative for a Tata Motors, though brokerages are seeing a limited upside due to the uncertainty at JLR. In spite of all of this, you're seeing a stock which is up nearly 3% in trade. Sharmila, what is it that is actually enthusing the streets for a Tata Motors? A 3% up move in spite of the weak commentary and the weak set of numbers, and majority of the brokerages are still citing negativity.
So possibly, I think, just as, for Grasim, valuations didn't look attractive. I think if you were to look at a longer term perspective for Tata Motors, then I think, it's corrected to a good price where if you think going forward, a lot of these concerns will get addressed, especially with all their overseas concerns, then, this could in fact be a very good level to really enter into this stock. And, let's not forget that market is also sort of looking for these opportunities when you see the kind of correction we did last week, where you could be liking some names and you've not bought because, valuations were, where the stock prices were higher and you felt the valuations look stretched. And now you could look at it as an opportunity to enter some good stocks. So I think whether it is a Grasim or whether it's a Tata Motors, I think, because both the stocks are of such good quality that if you have investors who've been waiting to buy, they could use this as an opportunity to really enter into a good place.
Okay, so that's with Tata Motors. The stock is nearly at the day's highest levels. Interesting moves on that one. But moving on, PG Electroplast, that is bleeding in trade today as well. The stock is really down around, 34-35% in the last two trading sessions. In fact, let's first listen in to what Vikas Gupta, Managing Director and Operations at PG Electroplast, had to say about what has weighed in terms of the first quarter, because the company has gone ahead and reduced their guidance as well.
In the quarter one, the industry as a whole has seen a degrowth of 25 to 30%. Almost all the major AC players, AC brands or AC manufacturers have experienced a degrowth in their numbers for the quarter one. We as a PG Electroplast has been able to deliver a growth of 14% in our revenue top line. Please understand. Now, when we dive deeper into this subject on how the slowdown in this AC is happening, please see there has been an early onset of monsoon. So because of the early onset of monsoon and due to the high channel inventory, the overall summer selling season for the air conditioners got compressed and it fell off beyond the anticipation of any of the industry players. So there has been a decline in the in the numbers of sales for the ACs, the tertiary sales or the secondary sales were very low. And in month of July and August, as we are seeing right now, the sales are practically not happening.
It's practically not happening in July, August, and that's a strong word coming in from the management of PG Electroplast. Sharmila, before I get in my colleague Mahima to give us a deep dive in terms of PG Electroplast and the rub-off effect it's having on other companies, how are you looking at the company? Would you think this is an opportunity to buy, taking into consideration a 34-35% correction in the last two trading sessions and the outlook going ahead? And with that, you have to look at an Amber or a, EPAC. All of them are having some bit of a rub-off effect as well. So if you have to look at room ACs, the segment itself has been bleeding. Your view?
Yes, absolutely. And, I think that, as you said, maybe this could be an opportunity to really enter the stock, give it another day or two, because, this kind of commentary really does sound grim, where you're talking of the kind of impact they've seen on their sales numbers. So I think that, given where the basket is and, the players that you have a Voltas, you have a Blue Star, you have an Amber, and then you have other players like EG Electro, which are more into compressors, etc. So I think in that sense, probably if there were further correction, the stocks that I would actively look at would be probably an Amber, Voltas, Blue Star, and then an PG Electro. Though I do agree that valuations are now looking fairly good. And also, I think, in terms of consumption as well as the kind of white good requirements that you see going ahead, given the fact that we are seeing this growth in real estate as well and, more and more sort of aspirational buying coming into air conditioners, I do think that this is a good stock to be in, but the commentary certainly was quite grim, as I said, and perhaps it might be a good idea to wait a bit. But now I think the valuations for PG Electro in particular do look fairly good.
Valuations look attractive, so probably this could be an opportunity. Wait for a day or two and look at a PG Electroplast. Before we go ahead to go across to Mahima to get us a deep dive on it, let me first just address the flashes at the bottom of your screens where Sun TV has come out and said that the legal notices have been withdrawn. The legal notices do not pertain I'll just take that down. All legal notices issued by family members to the promoter and his relatives have irrevocably withdrawn. That's the line we are picking up. And the issues that the family had have been resolved as well. On the back of which, if you see the stock price itself is up around 6%. Legal notices do not pertain to businesses or managements of the company. And apart from that, what else they've indicated is that all of them that were, any of the legal notices that were issued by any of the family members that have been withdrawn and all the issues have been resolved. On the back of this commentary, the stock is actually inched higher, 5 to 6% upside coming in on a Sun TV. Very quickly, Sharmila, how would you look at a Sun TV? Because we were talking about a legal battle within the family that could have an overhang. Now they've said that the legal notices have been withdrawn and all the issues have been resolved. Do you think this is a positive and a time to look at a Sun TV?
So definitely it's a positive, because I think that if you hear of family issues getting resolved, and because we have seen in the past how these things sort of tend to drag out if you don't resolve them quickly, and if a resolution is reached without going to courts, I think it's always the best thing for the stock, because in any case, market doesn't like uncertainty. Coming to the stock, possibly I'll still continue to stay neutral, largely because overall, it's a market I don't understand. I think the South Indian market sort of behaves very differently from the rest of the GEC market. And overall, I think GEC as a space is not something that I've really liked in the last couple of years with the kind of moves OTT platforms have made. Of course, everyone is now positioning themselves so that they have an exposure to OTT as well. But that said, I think I will continue to stay neutral on Sun TV. But the news is certainly good. I think when you hear this kind of a resolution, I think the market will definitely be very positively inclined to hear such news.
Right. Moving on, let me come back to a PG Electroplast. In fact, Mahima is standing by with all that she's gathered in terms of what's not working for a PG Electroplast that an investor needs to know. Mahima, over to you.
Right, so Hiral, the stock has tanked, and how? 34% in the past 2 odd sessions, and this is on the back of course, its Q1 earnings and guidance cut and a lot more other things. In terms of what's gone wrong, we've tried to pull up a couple of things. First one being weak Q1 and of course reduction of the guidance by the management which they gave earlier in the quarter. The overall order cancellation in June and July remains an overhang. High inventory levels could also be one of the concerns. Increase in working capital days in the past 3 odd years, that's increased significantly. Overall, there's deteriorating cash flows as well, and there's promoters that are reducing their stake in the company. Now let's take a look at each one of these in detail. In terms of weak Q1, well, overall if we see a sharp decline in Q1 profits has been seen, and that's been a major disappointment for the investors. Margin down 183 basis points to around 8.06% versus that of almost 10%. In terms of the overall PAT number also, it's down 20% YOY basis and 54% on QOQ basis. And in terms of the growth guidance that we were talking about in FY26, now that's been slashed. So that's an interesting one to watch out for, because revenue growth guidance, which was earlier 30%, has been slashed around 17 to 19%. So that's a significant cut there. And even in terms of the overall PAT guidance as well, in terms of the numbers, the earlier guidance was 6,345 crores, which is now around 5,700 to 5,800 crores in terms of overall top line that they'll do in FY26. The PAT guidance is also lowered. Earlier it was around 35%, and now it will be anywhere between 17 to 21% is what, sorry, this is the product's revenue that we're talking about, not the PAT guidance. So the product revenue growth guidance in terms of their products, the growth earlier was 35%, which will now be around 17 to 21%, and electronics revenue growth, which was earlier of 43.4%, is now going to be around 29 odd percent. Even in terms of PAT guidance that I was talking about, the earlier guidance was anywhere between 400 odd crores, 405 odd crores is what the management had said, but that they've brought it down to 300 to 310 crores. So almost more than 100 crores of downtick here. Overall, in terms of order cancellations also, because that is an interesting one, and this is the PAT guidance in terms of percentage that's changed. So in terms of the order cancellations in June and July, this is something that was observed in their con call, that the order cancellation stood at around 70%. So that has impacted, and of course that also has an overall impact of early monsoons hitting the company. But in terms of inventories, that's an interesting one, because inventory at a 1350 crore is huge, and almost that 97 to 98% is raw material. And although the expectations are that it will normalize in Q3, but inventory days have also significantly gone up, because that was at 73 days in March 23, which has gone to almost 123 days in March 25. So this is something to keep in mind from a longer term investment perspective as well. In terms of the overall working capital days, now there's a significant spike here as well, because 9 days to around 60 days. So it's nearly more than 3 times in terms of where working capital days stand. Lastly, in terms of promoter stakes, this has been an interesting trend, because March 23 the promoter holding stood at around 61.3%, but that has come down to 49.4% in March 25. So promoters have been reducing their stake in the company. In terms of what brokerages are saying, well, Nuvama has retained buy with a target price of 710, but they've slashed their FY 26, 27 and 28 EPS estimates by 36%, 25% and 10% respectively. And this is, of course, on the back of the guidance cut that the management has made. JM Financial again has cut the EPS estimates by 13 to 27 odd percent, but they're saying that the expected average ROE is supposed to be at 14% over FY 25 to 28 is what they're penciling in. Now, it's not just PG Electroplast. The ripple effect or the domino effect has also been felt by counters like Amber, which touched an intraday low of around 7.5%. And EPAC Durable has also seen the impact of how guidance cut and Q1 panned out for something like a PG Electroplast, and also saw a downtick around 5.8% in trade today. So this is the overall view of what's happened with PG Electroplast, and of course the ripple effects in the EMS space as well.
Right. Thank you so much for that one, Mahima, because this actually puts into perspective everything apart from the guidance that has not been working for the company so far. And that entire room air conditioner market has been ruling under pressure on the back of an early monsoon, lower sales as well. So it's going to be interesting to see how this industry picks up, because probably your second half of the year could be better on the back of a base effect as well. But let's see. But moving on. ICICI Bank is another stock to focus on, because now we have the RBI governor's first reaction coming in on the new minimum balance hike rule, but they have said that 50,000 is the new minimum balance that a customer will have to maintain if they are opening a new account. The stock is at the day's lowest levels. Let's quickly listen into what he had to say.
देखो ये जो मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000 कईयों ने माफ भी किया हुआ है, लेकिन ये रेगुलेटरी डोमेन में नहीं है आज।
In fact, let's also get in my colleague Subhana, who has more details. Subhana, you know, clearly a 50,000 balance from 10,000 earlier, though salary accounts are exempted from this new rule. What are you picking up?
India's second largest lender, ICICI Bank, has raised its minimum monthly average balance requirements to 50,000 rupees for urban and metro customers from August 1st. While previous account holders, old account holders, will continue to maintain 10,000 rupees as their minimum monthly average balance, the new customers, new accounts opened from August 1st will have to maintain 50,000 rupees or pay up a penalty of 6% of the shortfall or 500 rupees or lower. Now, this move is a big development because it's a 5-fold jump from 10,000 rupees. And also, what sources have told NDTV Profit is that this has come as the bank plans to tap premium customer base just like foreign banks. They have also increased the minimum average monthly balance requirement for semi-urban customers and rural account holders to 25,000 rupees and 10,000 rupees respectively from 5,000 rupees earlier. Now, this has come at a time when several state-owned banks have actually waived off the penalty on maintaining minimum average monthly balance. State Bank of India, the largest lender in the country, had done that back in 2020, while other big PSU banks such as PNB, Bank of Baroda, Indian Bank, they've also waived off such penalties. So it's a big development.
Thank you so much, Subhana, for getting us the details. Sharmila, a quick view. Minimum balance to be increased. Would you say this could have a negative bearing on ICICI Bank because this is the highest that you're seeing?
No, I personally don't think it will have much of an impact for 2-3 reasons. One is that, you know, they must have already grown their customer base to a certain level because this balance requirement doesn't impact old accounts. It is going to impact accounts which are opened after whatever August. So in that sense, it's a move that will impact the new clients new customers that they onboard. Secondly, salary accounts are not exempt from that. So if there are any, and they must be having so many corporate accounts, because, you know, there to maintain a minimum balance could be a challenge if you are a salaried employee and you have EMIs going out, etc., etc. So that again is exempt. So what they're saying in short is that going ahead, they want to offer that kind of a premiumization in their service, and which is why they want to slowly get in new customers who would be able to maintain 50,000 kind of a balance. And very honestly, I think if you look at where they would be having their branches as well as their, you know, like I doubt how big their rural network, for instance, is to have, because, you know, this could be a big sum from that perspective. But if you're talking of the metros and the larger cities, this 50,000 amount is not a very large amount. So I don't think it's going to really have any kind of an impact on ICICI Bank. I think what you're seeing today is a bit of a knee-jerk. But going forward, I really don't see it impacting much.
Got it. So no major impact that Sharmila sees on the ICICI Bank. But moving on, let's quickly look at a few of the earnings reactions in terms of today's session. The stocks which are seeing top gains: TVS Supply, Acom Drugs and HBL Engineering. Jasmeet joins us to tell us more as to what's working for them. Jasmeet, over to you.
Well, right. Yes, thank you for that, Hiril. The first one on my list is TVS Supply. We recently spoke to the management and they have reset their guidance on double-digit growth. Let's quickly understand what worked for the management and the key 5 takeaways from this result. The stock is buzzing and is up 8% in trade today. While the key takeaways are, firstly, the profits is an uptick, but the margins are slightly under pressure. When you look at the order book size stands at 5,300 crore for FY26. The integrated supply chain business has grown at 4%, while the company has also integrated their services, their segments in the UK and Europe, which has additionally caused the management a restructuring fees of 53 odd crores. When you look at the restructuring program, that aids the profits and the revenue of the company. When you look at the earnings of the management, the financial figures, the revenue is up 2%, while the EBITDA is down 2%. The margins remain at 6.83%. That's a slight downtick of 29 basis points. And the net profit stands at 70 odd crores. Well, this has a one-time gain from the subsidiary which turned into an associate of TVS Infrastructure Trust. So after that, the post-exceptional profit stands at 17 odd crores. The next one on the list is Akam Drugs. While the stock is up 7% in trade today, the key takeaways from this particular results are the net profit misses the estimates, but the company marks that 1,000 DCGI approval, and in this quarter they have gotten an approval of 27 such drugs. When you look at the segmental performance, the international business and the domestic business both have seen an uptick. Now talking about the financials of the company, the revenue is up 0.5%, while the EBITDA is up by 1%. The net profit is up for 5% for the management. The next one on the list is HBL Engineering. Now what worked for the management will be they have been strong margin expansion. Margins have expanded on the basis of work in progress reduction, while the work in progress in the previous same quarter was at 6 odd crores, while in this we have negative 70 crores, which helped the margin expansion. Now the other incomes are up by 260%, while the employee benefit expense is also up by 36%. Talking about the segmental performance, the electronics segment has grown roughly 100 odd %, while the defense segment saw a slight downtick. Talking about the financials of the company, the revenue is up 15%, while the net profit is up 79% of the management. So these are the stocks to watch out for in the trade.
Thank you so much for that. In fact, let me also now get in Vansh to tell us more in terms of which are the ones which are losing: Intro Health, High Tech Films and PTC. Vansh, what are the reasons for these stocks to underperform in terms of earnings?
Yeah, so let me start off with Intero Healthcare. Now the stock is down 7%. Now this is on the back of the EBITDA miss that the company has reported in their Q1 results. And however, the lower tax has aided the net profit for the company, and the management has reaffirmed the 30% revenue guidance for FY26. However, this is the clear miss of EBITDA that the street is disappointed, which is reflected in the stock earnings right now. If we talk about the numbers, the revenue was up 28% at 1,400 odd crores versus 1,000 odd crores, and the EBITDA was up 66% at 50 crores versus 30 crores, and the margins were at 3.6% versus 2.7%, and the net profit was up 43% at 30 crores versus 21 odd crores. Second on the list is Garware High Tech. Now the stock is down 9% in trade. Now this is on the back of the muted numbers and the weak operational performance that the market is penciling in for this particular counter. There has been a shrink in the margins, and the net profit has been largely dragged by the EBITDA. If we talk about the results, the revenue is up by 4% at 495 odd crores versus 475 odd crores, and the margins are at 22% versus 25%, and the EBITDA is down 7.6% at 110 crores versus 120 odd crores, and the net profit is down at 83 crores versus 88 odd crores. Third on the list is PTC Industries. Now another muted set of earnings. However, it is the recent acquisition that has impacted the earnings for this counter. The cost of materials for the counter has grown by 2 times, and this is on the back of the increase in the employees and other expenses for this particular set of numbers. If we talk about the numbers, the revenue was up at 97 odd crores versus 46 odd crores. The margins were at 9% versus 21%, and the EBITDA is down 12% at 8 crores versus 10 crores, and the net profit is up by 5% at 5 odd crores versus 4.9 odd crores. So these are some of the stocks that are buzzing in trade today.
Thank you so much for that. In fact, Sharmila, 6 to 8 companies that we just discussed about in terms of earnings reactions. Anything that comes to your radar which you would advise investors to buy or sell?
So I think that the 2 numbers that really stood out for me and which looked interesting, both from the perspective that I've liked the stocks in the past as well as the results looked interesting, the sectors they are in looked interesting, would be TVS Supply and HBL Engineering. Out of these 2, I think HBL Engineering, still the valuations look a little expensive, but I think TVS Supply seems to be at fairly good levels. But yes, these are the 2 stocks that, where the results really stood out. I think TVS Supply order book was very good. HBL, I think overall the performance is definitely is excellent, as well as going forward. The visibility also looks good. So I think from both these stocks one can expect higher levels. So these would be the two stocks that these are the two stocks that I liked in that entire list.
Right, so two of the topics coming in on the back of an earnings reaction. But thank you, Sharmila, so much for joining us on the show and sharing the views. We'll quickly slip into a short break. Up next, we'll be joined by the management of Yatra Online. We'll speak to APJ Park Hotels as well as Quality Power. Lots more lined up, so please stay tuned to NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insight.
Bioenergy, Vishnu Som, Group Executive Editor, NDTV, Akhilesh Mishra, Managing Editor, NDTV, esteemed guests, dignitaries, invitees, ladies and gentlemen. First of all, it is a great pleasure and pride for me today that today, particularly in the field of transport, the India's position is really well recognized and respectable, particularly in the case of bioenergy and alternative energy. India is the most important and largest growing economy in the world. The wasteland in India is 55 lakh square kilometer. That is 17% of the total land. And our 55% of the population belongs to agriculture and rural India. The economic contribution from agriculture sector in our GDP growth is only 14%. Actually, manufacturing sector contributes 24%, and from service sector, it is 52%. There is a big migration of the population from rural India to urban India. That is because of non-viability of agriculture. And at the same time, the most important problem is we need to create more employment potential in the rural India. The problem in agriculture is also very crucial. Because of green revolution, the agriculture production is now surplus. We are wheat surplus, rice surplus, sugar surplus, corn surplus, and that is the reason it is difficult for farmers to get remunerative prices. Today, this is the first time in India our government has taken the initiative by which it is to be a success story, that is diversification of agriculture towards energy and power sector. हमारे किसान केवल अन्नदाता नहीं है, वो ऊर्जादाता बने हैं। ऊर्जादाता नहीं, ये ईंधन दाता बने हैं, और ईंधन दाता नहीं, अब बिटुमिन दाता बने हैं, और अब बिटुमिन दाता नहीं, एविएशन फ्यूल बना रहे हैं, और अब हाइड्रोजन दाता भी बनेंगे। और ये जो एक रिवोल्यूशनरी चेंज हुआ है, वो हमारे देश के तस्वीर को बदलने वाला है। और मुझे ये भी विश्वास है कि आज हम बड़ी तेजी से हमारा ऑटोमोबाइल सेक्टर प्रगति और विकास की ओर आगे जा रहा है। एक समय वर्ल्ड में हमारा नंबर 7वां था, आज हमारा नंबर 3रा है। अभी 4-5 महीने पहले हमने जापान को पीछे डालकर अब हम 3रे नंबर पर आए हैं। हमारा अमेरिका का पहला नंबर है, जिनकी ऑटोमोबाइल इंडस्ट्री का साइज 78 लाख करोड़ है। चाइना दूसरे नंबर पर है, 49 लाख करोड़ है, और अब इंडिया 22 लाख करोड़ है। ये इंडस्ट्री है जिसने अब तक 4 करोड़ युवा 4.5 करोड़ युवाओं को जॉब दिया है। ये इंडस्ट्री है जिसने जीएसटी के रूप में भारत सरकार और राज्य सरकार को कंट्रीब्यूट किया है। पर इसके साथ साथ आज हमारे यहाँ इसका दुष्परिणाम भी एक है कि हमारी टोटल पोल्यूशन में आज हमारा 40% पोल्यूशन ये हमारे फॉसिल फ्यूल के कारण हो रहा है। और मुझे लगता है यही हमारा सबसे बड़ा चैलेंज है। ये जो एयर पोल्यूशन है इसको कम करने के लिए हम सब लोग ने संकल्प भी किया है और नेट जीरो की ओर हम जा रहे हैं। ये जो नेट जीरो इमिशन बाय 2070 ये टारगेट जो प्रधानमंत्री जी ने हमको दिया है उसके लिए ट्रांसपोर्ट सेक्टर में हमको काफ़ी बड़े कार्य करने की आवश्यकता है। 22 लाख करोड़ का जो हमारा फॉसिल फ्यूल का इंपोर्ट है, इतनी सब कोशिश करने के बाद भी ये बढ़ रहा है। और हमारी पॉलिसी यही है कि इंपोर्ट सब्सटीट्यूट, कॉस्ट इफेक्टिव, पोल्यूशन फ्री और इंडिजिनस। मुझे खुशी है कि अल्टरनेटिव फ्यूल और बायोफ्यूल पर हमारे देश में बहुत तेजी से काम हो रहा है। इलेक्ट्रिक, इथेनॉल, मेथेनॉल, बायोडीजल, एलएनजी, सीएनजी और ग्रीन हाइड्रोजन, इन सब बातों में जोरों पे काम हो रहा है। मुझे लगता है कि आने वाले समय में जो जो भी पर्याय उपलब्ध है उन पर्यायों का उपयोग करके ये 22 लाख करोड़ के फॉसिल फ्यूल का इंपोर्ट हमको कम करना है और प्रदूषण को भी कम करना है। मुझे इस बात की खुशी है कि आज हम आत्मनिर्भर भारत बनने की कोशिश कर रहे हैं। हमारे किसानों ने इथेनॉल की शुरुआत की, शुगर कैन जूस, मोलाइसिस से। फिर कॉर्न से इथेनॉल बन रहा है, ब्रोकन राइस से बन रहा है, बाम्बू से बन रहा है और परली से भी बन रहा है। आने वाले समय में निश्चित रूप से फ्लेक्स इंजन की ओर हम जा रहे हैं, जिसमें हमारी बड़ी बड़ी ऑटोमोबाइल कंपनियां अब फ्लेक्स इंजन लॉन्च कर रहे हैं, जिसके कारण हम 100% बायो इथेनॉल का उपयोग करेंगे। दूसरी ओर पेट्रोल में भी 20% तक इथेनॉल अभी तक आया है। अभी ट्रायल चल रही है क्योंकि ब्राज़ील में 27% इथेनॉल जो है वो डाला जाता है और यही हमारे यहाँ जो ऑटोमोबाइल ब्रांड्स हैं वही ब्राज़ील में उपलब्ध है। हमारे देश में ये ट्रायल चल रही है ARAI में। उनके बाद ये ट्रायल सक्सेस होने के बाद वो पेट्रोलियम मिनिस्ट्री को रिकमेंड करेंगे, इसके स्टैंडर्ड्स भी निश्चित होंगे और उसके बाद भी उसका निर्णय भारत सरकार करेगी।
All right, so that was Nitin Gadkari addressing his views on how alternative energy will be the next big thing for India and what India is doing with regards to that space. But, you know, shifting focus to stock-specific action, one stock that is making significant moves in trade today is Yatra Online, and the stock is up in how? 20% locked in upper circuit as we speak, and this is on the back of its earnings. Overall, revenue up 108%, net profit up 3x, EBITDA up almost 4x, and margins also improved significantly to that 11% mark versus that of 4.6% mark. And to discuss as to, you know, what's worked for the company, we are joined by Dhruv Shringi, CEO and whole-time director of Yatra Online, joining us now. Dhruv, hi, a very good morning to you. Always a pleasure speaking with you. You know, before I go on to, you know, specific questions, just wanted to understand what is it that's changed this quarter and what is it that's worked this quarter, because this quarter has been impacted because of a lot of geopolitical tensions as well. But despite that, you've managed to grow so well.
Firstly, thank you for having me on your show and good afternoon to you as well. See, our numbers have been trending in the positive direction now for the last almost 5 quarters, right? So it's not a sudden turnaround that's happened. It's been a gradual process that's been going on. I think it's taken the markets a while to recognize that this is a consistent trend which is happening and not just a one-off. What's been driving this change is the rebalancing of our business towards more corporate focus. Corporate business is a much more stickier business. It does offer higher operating margins. And as our business has moved more in favor of corporate versus B2C direct, we've seen performance improve and profitability margins improve meaningfully. So that's been the trend that's been going on now for the last 5 quarters.
Dhruv, in terms of your guidance, does anything change? Because this quarter sets a tone for the entire financial year 2026. Do you think for example, for FY26, revenue less service cost guidance is at 20% plus. But do you think you'll be able to do much more than that 20% mark?
See, I think it's a case of once bitten, twice shy. Last year, we were maybe a bit more aggressive in our guidance. This year, we would just let the numbers do the talking. and hopefully come out and consistently beat the numbers that we've guided up.
And what about the margins? Because margins have also significantly taken off. What is the normative range that you're expecting when it comes to FY26?
So for FY26, the way we are defining margins and how we are indicating to the market is that margin, which is EBITDA margin as a percentage of revenue less service cost, is currently around 21%. We expect that to continue to improve maybe by 100 bips to 150 bips Q on Q over the next 2-3 quarters. And for next year, we would be indicating more towards a 25% number.
Okay, and in terms of the operational metrics, in terms of both your air passenger business and as well as the hotelier business, if I'm not wrong, a large chunk of your top line has been driven by the hotel segment side of things. In terms of the air passenger volumes, that's down around 9%. And again, this is because of multiple reasons, the geopolitical tensions being one, the Air India crash being two. Just want to understand as to now, what is the trend that you're observing? Because, it's been time since the Air India crash has happened. Do you think there's still fear in the minds of people who are traveling through flights, or that's not the case and air passenger volumes are actually bouncing back?
I think volumes have bounced back for sure. We've seen this in the month of July and also trending into August, that volumes continue to improve. There was obviously a meaningful setback in the month of June on account of the incident that you mentioned. I think what's happening is that there is a lot more consumer awareness at this point of time. I've seen customers, writing in to figure out what kind of aircraft will they be flying. So those kinds of things are great from a customer awareness point of view. But I think overall customers are still fairly confident about aviation as it being one of the safest means for transportation. So we do think numbers anyways are trending positively overall from an industry point of view, and that growth rate will remain steady.
Okay, Dhruv, thank you so much for giving us those insights, and all the best for a stronger FY26.
Thank you. Thank you for having me.
All right, the next company that we're putting focus on today is Quality Power. The revenue of the company has surged around 187%, and we spoke to the management, the MD of Quality Power, about the quarter gone by and outlook going forward. Listening to what he had to say.
If you see, Q1 saw an exceptional revenue growth of almost 188%, but there was a significant drop in EBITDA margin. Was June 2024 an exceptional year, and now we can see the margin at 17 to 18% going forward?
Morning, Varsha. Thank you for the interesting observation. We had a fantastic quarter. All our operating businesses are at the highest margin at this moment. Our current coil products business is working at about 34% margin individually. Power quality business is at about 27%. The dip in the margin is because of the consolidation of Mehru, which we recently acquired. Even Mehru went in from about 6.5% to close to 10%, a 45% growth in margins in the past one single quarter. So we believe we should be able to pull Mehru up in the next few quarters, which increases our total consolidated margins. When you compare QOQ, last year we had one single aberration and event where we had a net forex gain in that quarter, which indicated a very high profit margin. But that's one single quarter. I believe the guidance that we have given of about high teens margin should be okay for the year.
Okay, understood. Well, a high teen margin is what you're expecting when it comes to FY26. Just talking about the revenue also, what kind of revenue target have you set in when it comes to FY26 and beyond that as well? If you see in the last 3 years, if I were to talk about 60% is what the CAGR growth in the revenue that has been seen by Quality Power. Now, will you maintain this, or you're expecting, a more revenue growth when it comes to 26 and beyond that?
The current guidance that we have given to the market is between 700 and 800 crores. I believe we are quite comfortably placed at this moment because first quarter normally is the weakest quarter internally for large manufacturing companies. With regards to next year, I believe we should again look at some solid growth because we have some capacity coming in from our current expansion, and we are also aggressive with regards to Mehru in improving their margins and sales with the kind of tailwinds that the transmission sector is facing. and the HVDC orders that we are seeing, not only in India, across the globe, we believe we are in for some good times.
Understood. Also, Mr. Pandian, when it comes to the capacity expansion that you were just speaking about, what is the total estimated capex that you have set in? Because I understand that you have large capacity expansion in progress when it comes to Sangli, Cochin and Bhiwandi as well. So how are these projects funded and what are the completion timelines, if you can share us the details with?
So Bhiwadi is where Nehru's placed our instrument transformer product line. I believe they should be up 45% by the end of the year. So I think for next year, they should be working at full capacity. Cochin should be again, by the end of this year, they should be ready. The largest capacity addition is in Sangli, where we are making coil products for HVDC and fax business. Fax is basically another terminology for STATCOMs, where we see a lot of growth potential in the renewable energy integration. We have guided the market to second quarter next year, but the construction is going on faster than expected.
Understood.
And the total capex we are looking at this moment is less than 125 crores for the expansion in Sangli.
Okay, understood. And so total, what will be the consolidated capex for FY26?
FY26, I think it should be for across the group about 140 crores, but we are sitting in excess of 250 crores of cash in the company, cash and cash equivalents. We are generating quite a bit of profit. Even the last quarter, we generated almost 44 crores profit before tax. So most of the capex should be funded internally. However, as a family, as promoters, we have also pledged to fund the capex to be able to ensure that the free cash is available on the books for any inorganic acquisitions, if any.
Understood. Okay. Also, Mr. Pandian, when it comes to your order book position, if I'm not wrong, that stands at around 750 odd crores, and also you have a bid pipeline of around 1,000 crore. I just wanted to have two questions on that. One is the execution timeline when it comes to the 750 crore order book, and also when it comes to the bid pipeline of 1,000 crore, what is the conversion ratio that you typically have?
The current order book is about 775 crores. The guidance we have given the market is another 500 crores before the closure of the year. Because all the equipments that we do are made to order and not stock or sell. So these orders are normally delivered close to the contracts to us. So we believe most of these orders should be executed between 12 and 15 months from today. And we are sitting on a huge pipeline also in offers across various businesses. Currently, our problem is in execution and supply chain rather than on the order book.
Understood. And onto the conversion ratio when it comes to 1,000 crore pipeline, Mr. Pandian?
We are in a very good position to deliver the orders or get the orders if we are able to deliver them on time. So currently, globally, I would not just say in India, globally, the problem is capacities. Most customers would like to have them in about, say, 6 to 9 months, whereas in high voltage transmission segment, we are already shifting 24, 36 months. That is a mismatch on capacity to the requirements in the market.
Understood. Also, Mr. Pandian, so when it comes to your export mix, wanted to have a sense on how much is the export contribution currently, and what was the export growth, and where you want to take this contribution, say 2 to 3 years ahead.
So the past 2 decades, Varsha, we have been spending a lot of time in the global markets, working with a lot of global utilities, some of the most prestigious global utilities. We have even the last, I think, few weeks got back some great orders from Israel, Abu Dhabi, US, Finland, and different parts of the world. At the current moment, I believe it's between 50-50 or 55-45 in the export to domestic mix, and we would like to keep it that way because globally, the tailwinds are even higher than India.
All right, so that was the management of Quality Power. The stock doing well in trade today, up 3.5% as we speak. But it's an earnings specific market as we speak. And APJ Sundar Park, which is also known as Park Hotels, is the other counter in focus, down by about 4%. And this is on the back of its Q1 earnings. Now, we spoke to Vijay Diwan, Managing Director of the company, about the quarter gone by and outlook going forward. Listening to what he had to say.
My first question coming to you is, has the quarter met your internal expectations? Because on a year-on-year basis, yes, there is growth, but if I have to compare it to the fourth quarter of FY25, there has been a decline, and I think that is what the street is reacting to, because the stock is down nearly 4 to 5% right now.
So firstly, I'm really delighted to be back on NDTV, India's most formidable and fast-growing channel. And I must say, in terms of your question, that thanks to the dedication and commitment of our teams, we have been able to produce an extraordinary and best ever Q1. And this actually sets this strong momentum for the year ahead. If you look at the operating level, we have been able to achieve a revenue growth of 14% and an EBITDA growth of 16% on a Y-to-Y basis. Most significantly, we have recorded India's highest occupancy of 92%, and we have maintained our leadership in the RevPAR in the industry. This is very, very significant. At the profit level, if you see, we have recorded a growth at the PAT level on a Y-to-Y basis. We have increased the profit by 805%. So for us, as far as we are concerned, it has been an extraordinary performance, and really it is one of the best ever Q1 we have produced.
Right. So this is the best ever Q1, though there is a profitability decline that has happened on a sequential basis. If you could highlight that aspect as well, because the operating profit to interest ratio has also reached its lowest point in the last 5 quarters, which potentially tell you that there could be challenges in managing the interest obligations. What would you have to say to that?
Firstly, hospitality works. The Q1, Q2 are generally weak quarters, and Q3 and Q4 are very strong quarters. And our results are reflecting that. It has been a very, very strong quarter, as I mentioned. It has been an extraordinary quarter, and we have been able to produce one of the best quarters as far as Q1 is concerned. We have a very, very strong balance sheet. With a net worth of about 1,300 crores, we remain net cash positive. We have a very strong, stable position as far as finances are concerned, and we are going to remain net cash positive throughout the cycle of our development. This year, if you will see, we are being powered by accelerated increase in the number of rooms. We are going to add about 600 rooms to our inventory. Out of this, 411 rooms are going to be on the asset-light side of the model, which is going to be a 41% increase in the number of rooms on the asset-light side of the model. And there is going to be a nationwide rollout of the Fleury's brand, which is currently at about 102 outlets. This is going to rise to about 140 outlets by the end of the year. And this is really going to scale up our growth, and it is going to protect and improve margins as well as provide for extraordinary value to our customers.
Okay. So to add up to all of this, you've mentioned about the RevPAR, you're talking about the number of rooms that you're adding. If you could help us understand what is the occupancy and ARR working out to be in terms of the first quarter itself?
So the first quarter, as I mentioned, we have recorded India's highest occupancy of 92%. Some of our hotels have done exceptionally well. Our hotel in Calcutta recorded an occupancy of 100%. Our hotel in Chennai recorded an occupancy of 95%, followed by 2 other hotels, that is Bangalore, as well as Navi Mumbai. They have recorded occupancy of 93%. Our hotel in Delhi recorded an occupancy of 88%. There has been an increase of 13% as far as the ARR is concerned, which is very, very significant. And RevPAR has actually grown by 12%. So this makes it really an extraordinary performance. And as I mentioned, at the operating level, The top line has grown by 14% and the EBITDA has grown by 16%, and PAT is up by 805%. So it is a very significant performance.
All right, so that was APJ Surendra Park, and stock tanking around 4% down as we speak, although the numbers were not that bad. But with that, it's a wrap on Profit Bazaars, but more news and stories lined up for you on the other side, so do stay tuned.
100 crore was for additional projects.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. Well, after a tough last week, markets have been seeming off on a good trend. The Nifty benchmark index is up over 120 points, while the Nifty bank index is up more than 250 points in trade, Varsha.
Yeah, absolutely. You know, just talking about the contributors, you know, when it comes to Nifty 50, you have, let's see who are the contributors. You have HDFC Bank, SBI, L&T and Tata Motors, which are on the gaining side, while ICICI Bank, Bharti Airtel, BEL and Hero Moto are on the losing side. But you know, let's shift our focus on the stock specific if I were to. Let's see which are the stocks which are buzzing on the back of Q1 FY26 earnings. You have HBL Engineering, you have DOMS, you have ACOMS, you know, which are buzzing. This is on the back of good Q1 FY26 that these companies have posted. Even you have PTC India, if I were to talk about, you have Yatra and Sangvi Movers are also buzzing when it comes to, you know, small cap companies. TVS Supply Chain Solutions, even Heikel, if let's see what Heikel is doing, because the company did not post good Q1 FY26 result. There you go, Heikel is down almost 6.7%. Satin Credit Care is down on the back of Q1 FY26 number as well. Let's see what PG Electroplast is doing, because on Friday company cut its guidance, and because of that PG Electroplast is down almost 13%, and because of that, you know, Amber and Voltas are also under pressure because of the guidance cut by PG Electroplast. There you go, Amber Enterprises is down 5.8%, Voltas is down same by 5.8%. Home First, let's see what that counter is doing. Home First Finance it's up 5.8%, as there was a clean trade by Warburg Pincus, equity worth 1,307 crore exchange hands in block deal window. Let's see which are the other companies which are buzzing. You have Sarda Energy, you have Hariom Pipes, you have Uniparts, D Development Engineers, Dhanseri Ventures. You know, these are all the other stocks which are in focus on the back of some of the news flows, and of course Q1 FY26 numbers as well. So Amit, overall, you know, quarterly earnings are what is making, you know, all these stocks buzz in trade today.
Let's Varsha, one of the stocks that has been buzzing on the back of the quarterly numbers is Sangvi Movers. Strong set of numbers, revenues were up 80% on a YOY basis, in fact more than 80% on a YOY basis to close to 273 crore rupees. EBITDA grew 34% to close to 100 crore, margins came in at 36.4%, Net profit grew around 24% on a YOY basis to close to 50 odd crore rupees. Now, what led to this strong top line growth? It was more contribution coming in from the wind EPC business that led the 80% or more than 80% growth in the revenue. However, margins contracted due to higher mix of wind EPC business, given the fact that wind EPC business contributes low on the margin side, hence margins contracted a bit. But on absolute basis, not only the revenue but EBITDA and net profit also reported a solid set of growth. Also, the company's order book was quite strong at more than 767 crore rupees. Let's get in the management. Rishi Sanghvi, the MD of Sanghvi Movers, now is joining us to give us more details on the company. To firstly start off with, sir, at the current juncture, what is your order book likely and what is the kind of order inflow that you're expecting for the remaining part of this financial year?
Hi Soumit, good afternoon and thanks for having me. So as you rightly said, our order book today is 767 crores, of which we have already delivered 273 crores in the first quarter. We're confident of continuing to book orders throughout the balance 3 quarters of this financial year, which will reflect in our top line in this year. So all sectors of the economy are creating a strong demand for cranes, and the renewable sector itself is firing on all cylinders.
So, but what is the kind of order inflow that you're expecting, given the fact that Saudi Arabia could also be a good juncture for new order wins for the company, right?
So we have expanded our operations internationally to Saudi Arabia. The current order book does not reflect any business coming in from Saudi Arabia. We are in the go-to-market phase, so initially we don't see any bottom line contribution coming from Saudi Arabia. However, we expect strong demand coming from steel, cement, hydrocarbons, oil and gas, nuclear, thermal, power, renewable wind energy, metros, railways, and bridges. So we expect the next 3 quarters to look significantly better to what happened in the last year. And we see that our top line will definitely grow between 20 to 30% going forward.
Right, sir. And so you also had a capex plan of around 246 crore, but of that you have already spent around 114. So any revision in the capex plan for the remaining part of the financial year?
Absolutely right. So after our board meeting, the board of directors has approved a capex plan of 321 crores for the Indian crane rental business. On top of this, we will do anywhere between 150 to 170 crores for the same crane rental business in Saudi Arabia. So we should end the year between 450 to 490 crores of capex.
Right. Hi, Mr. Sanghvi, Varsha this side. Pleasure to have you on NDTV Profit. Mr. Sanghvi, the crane rental segment, has historically been strong, but has recently faced, headwinds and due to increased competition. Now, with the EPC and now contributing meaningfully to the crane rental revenue, how are you seeing this business going forward? And if you could just give us outlook, because considering the Saudi Arabia business also that you are venturing into.
So we are very bullish on the crane rental business. We are the largest player in Asia, India, and the 5th largest in the world in the crane rental space. So we believe that we will be able to maintain margins around 56 to 58% going forward in our core business, and at a yield of around between 2 to 2.1% on a blended average yield on our crane rental business. The renewable business is adding significantly to the top line, but I must say that it is also contributing to the bottom line, where we're seeing a 20% contribution to the bottom line from the renewable business. And we see that this business will grow significantly going forward. Now, when it comes to Saudi Arabia, we are also in the crane rental business, where the yields are higher in Saudi Arabia as compared to India, but the operating costs are much larger, and therefore the margin is lower. We don't see any significant contribution coming from the Saudi Arabia business in this financial year, but going forward, we are very bullish on building a sizable and scalable business in Saudi Arabia, something that would be similar to and on the lines to what we have in India.
Understood. Mr. Sanghvi, also if you see there's a good cash sitting on your balance sheet, how are you going to utilize that? Any outlook on that if you can help us with?
So the surplus cash which is on our balance sheet is prudently judiciously invested in liquid short-term debt instruments and mutual funds.
This year, India's plan is to add around 5 gigawatts.
Right. Also, so overall, Mr. Sanghvi, if I were to talk about, for FY26 and of course beyond FY26, any targets that, have you set in for when it comes to revenue and of course margin as well?
So, Varsha, generally as management, we don't give forward guidance, but what we can say is that this year we will end with a historical top line of 20 to 30%, and it will reflect not only in the top line, but as well as the EBITDA and the bottom line. So we are confident of setting historical numbers this year, and going forward, we only hope to build on this positive momentum.
Also, Mr. Sanghvi, now, India has planned to add 5 gigawatt of renewable asset this year. Are we on track? Any outlook or any update that you can help us with?
So last year, the country added 4.2 gigawatts of wind energy. And this year, very much, I believe that the country will be on track to add 5 gigawatts. This is primarily driven by the increase in the size of the wind turbines, where we have moved from the 3 megawatt platform and we are scaling up to the 5 megawatt platform. Secondly, most IPPs have built a lot of infrastructure in the preceding years, which will now pan out into project execution. As a company, we can erect 500 megawatts per month. That is a capacity ramp up of Sanghvi movers. And we are confident in aiding the country's ambition to add 5 gigawatts in this year.
Understood. Also, Mr. Sanghvi, I'm moving back to the Saudi Arabia business. The expected yield, is it more in Saudi Arabia as compared to India?
Absolutely, Varsha. The yield in Saudi Arabia is higher as compared to India. But we must bear in mind that the operating costs are also higher, and therefore the EBITDA at the end would be lower than our Indian business.
Sure. Also, Mr. Sanghvi, just wanted to have a contribution per se. So, how much wind EPC contributes to your overall revenue, and any target that you have set in for next 2 years that you want to take to contribution to X percentage?
No. As of this year, more than 50% of our revenue comes from outside wind. The balance is being contributed from the wind sector, be it rentals or EPC. And we are confident of maintaining this ratio, which was a historical number. Going forward, the revenue contribution coming from our renewable business will depend on the type of business model we adopt. And we are in the process of understanding and pivoting the business model going forward.
Understood. Well, thank you, Mr. Sanghvi, for answering all the questions. And it was pleasure to have you on NDTV Profit. All the best for the business.
Thank you, Varsha. Have a good day.
Well, this was Sanghvi Movers on the Q1 FY26 numbers and the outlook ahead. But July mutual fund data is out. Industry net inflow stands at 1.78 lakh crore versus net inflow of around 49,000 odd crore in June. My colleague Alex joins us with more details on that. Alex, over to you.
Right, let's take a look at the print from the month of July, and it's a very good set of numbers. But the devil is in the details. Let's start with a bird's eye view. As has been pointed out, the net inflow stands at 1.8 lakh crore rupees, a large part of that coming in the form of fixed income mutual fund schemes. The inflows in that broad category stand at just over 1 lakh crore. In fact, to be exact, 1.06 lakh crore rupees. Now understand that this is the start of a quarter, July, and so you generally see significant inflows into overnight funds, into liquid funds, as well as into money market funds. And that indeed is the case. Liquid funds seeing inflows of 39,000 crore rupees and money market funds 44,000 crore rupees. The more interesting talking point is going to be the equity mutual fund schemes. And you have inflows of 42,700 crore rupees in actively managed equity mutual fund schemes. And that compares with an inflow of 23,587 crore rupees in the previous month. Good news, right? Well, if you think about it, yes, of course, it's good news, but there's also an element of new fund offers and the amount of money that has been collected on account of new fund offers. And that is quite substantial at close to 9,000 crore rupees in this category. A total of 10 schemes were launched in the month of July, and they managed to mop up close to 9,000 crore rupees. A large number of these were in the form of sectoral and thematic funds. 7 were launched, and 7,400 crore rupees was mopped up during that NFO stage. By the way, sectoral thematic continues to be the largest category, now having cumulative assets under management of over 5 lakh crore rupees. And very interestingly, there are as many as 224 schemes now in the category. Flexi cap funds have actually seen a pretty substantial inflow. Interesting because they don't have or did not have new fund offers in the space, but 7,650 odd crore rupees coming through on a net basis into flexi cap funds. Both mid-cap as well as large and mid-cap funds have seen inflows of close to 5,000 crore rupees each. Small cap funds have seen inflows of about 6,500 crore rupees, and that is quite substantial. Even large cap funds actively managed have gotten inflows of over 2,000 crore, and multi-cap funds where there was a new fund offer have seen inflows of close to 4,000 crore rupees. Let's move to the hybrid category, and this is where you have traditionally seen quite a bit of an inflow into the arbitrage funds, because people are now increasingly gravitating towards arbitrage funds for their short-term money requirements. And that category has gotten an inflow of 7,300 odd crore rupees. Interestingly, the multi-asset fund continues to garner interest with inflows of about 6,200 crore rupees. Now, beyond that, of course, we're also looking at other ETFs, which include the equity ETFs, and there were a few launches in the month gone by. 4,500 crore rupees coming through in that category. Index funds seeing a decent inflow of about 2,329 or 2,330 crore rupees as well. I will be very curious to find out what the SIP inflow is. Of course, even in the month gone by, it remained steady, which a lot of investors took heart from. Incidentally, it seems like a lot of people have deployed money through lump sums in the month gone by as well. At least that's what the data seems to suggest, with significant inflows in the form of new fund offers. But if you remove that 9,000 odd crore rupees from the actively managed fund category, you still have inflows of about 33,000 crore rupees into equity mutual fund schemes. And here I'm talking about actively managed equity mutual fund schemes, compared with about 23,000 crore rupees in the last month. We're soon going to have an industry participant to talk about the implications of this. But broadly speaking, I would take heart from the fact that most actively managed equity mutual fund schemes have seen inflows. The one category that has seen outflows, and you can't read too much from that, is the equity-linked savings scheme category. And remember, this is where a lot of money used to be parked for tax-saving purposes, but with more and more people moving away from the old tax regime to the new tax regime, the benefit accrued from this equity-linked savings scheme dissipates. You no longer utilize it for your tax-saving purposes, as a result of which, as and when there is that redemption or completion of 3-year period, people seem to be pulling money out and fresh money is not going in. So as a category that is now shrinking, it has an assets under management of about 2.5 lakh crore rupees. In terms of the largest categories, though, I mentioned that your sectoral thematic funds stand at 5.09 lakh crore rupees. They had eclipsed the previous big category, which was the flexi cap funds, but the gap, I must say, is closing between the two. As of the end of July, you had a total assets under management of about 4.93 lakh crore rupees in the flexi cap category, which, if you weren't aware of this particular category, it is a scheme that allows the fund manager to invest in any stock based on market capitalization. So, Varsha, a good set of numbers seemingly. I will still wait for the fine print on new SIP accounts that have been started and the gross inflows through SIPs, which will come through. Okay, I believe that we've got Mr. Anand Vardraj, who's joining us right now to talk about this in a little bit more detail. Anand, thanks so much for taking the time. Let me ask you about what you thought about the active fund inflows and equity mutual funds, right? 42,700 crore rupees is the number. But if I account for that 9,000 odd crore rupees that has come through in the form of NFOs, despite that, it's a pretty decent number. Would you agree?
Yeah, I think make no mistake, there is strong liquidity which is coming into the market. So if you were to look at multiple categories, be it large and mid cap, small cap, flexi cap, I think all these categories have seen the highest flows in this year so far, this financial year so far, which becomes a strong indication of what kind of interest there is in equity as an asset class. So I don't think this flow is stopping.
It's not stopping. And let's talk about a few of these categories, Anand, because flexi cap as a category, despite a lack of any new fund offers, 7,600 crore rupees, 654 crore rupees to be specific, have come through in the month gone by. Does that indicate to you that people are now gravitating back towards the more diversified funds? Or would you say that because of the sectoral and thematic fund category, which continues to garner interest, as many as 7 schemes launched in the month gone by and mopping up over 7,000 crore rupees, that continues to be red hot?
See, I would think it's the former, because clearly think about it, it gives you flexibility to invest across market caps. And I think investors are being well served, not trying to get into any market cap specific funds, rather than looking at flexi caps favorably. So clearly, I think at 7,600 odd crores, I think flexi cap is a category where we're seeing fair bit of interest. I think that's been the trend also. Even in the last couple of months, if you were to look at it, I think it topped the various categories in as far as equity is concerned. So this is more in line with trend.
What would you say about the significant? Sorry. Okay. What would you say about the inflows into small and mid cap funds as well? Because if I put them both together, it's about 11,000 plus crore rupees, and as much as 6,500 crore rupees getting poured into small caps yet again. And this is at a time when the markets have seen a little bit of a drop over the course of the last 6 weeks. So July wasn't the best month. You've seen declines, but despite that, you've seen inflows. What does that tell you?
See, there's a bit of a change in sentiment, looks like, because small cap this year so far has seen the highest number this year, as in I'm talking about the last 4 months at 6,500 crores. Previously, it was somewhere in the range of 4,000 odd crores April through June. Clearly, I think it's turn of events, maybe change in sentiments. This category hasn't done much for some time in as far as flows are concerned. And I think the dip in the markets were used as an opportunity to add more. That having said, if you were to look at the last 1 year number, I think roughly about 55,000 crores went into small cap. So last month, which is July, is really not too much of an aberration from the trend. If you were to look at it, I think it's just that it's a large number for the month, but I think for the year, I think it's still been a favorite category for investors.
So therefore, Anand, and my last question to you, particularly because I'm speaking to you, I want to ask, should more mutual fund schemes consider pausing lump sum investments into small caps? Because after a point, the AMC has to take a call, as yours has done.
See, we took that call in June or July 2023 for lump sum investments, and we had shut the fund for lump sum investments, and only SIP STP was available. We really feel small cap valuations are still on the higher side, and clients will be better served coming through SIP STP. obviously to each their own. Can't really make a statement on what someone should do, but I think I can say that we've chosen the path of shutting the fund for lump sum subscriptions till we think there are very many opportunities which are emerging in the category.
And Varadarajan, thanks so much for joining me today. It's a pleasure speaking with you, and look forward to the next chat as well.
Thank you.
Marsha, back to you.
Well, thank you so much, Alex, for giving us all the details. Well, moving on, let's shift our focus to Satin Credit Care, came out with its numbers. If you see, net interest income was up 5%, interest expense was up 16%, operating profit was down 9%, and provisions were up 95%. But, to speak more on the numbers and what lies ahead, we are here joined by Mr. H.P. Singh, who's the MD and Chairman of Satin Credit Care. Hello, Mr. Singh. Welcome to the show, and always pleasure to have you. I'm really sorry to keep you waiting because we had, mutual fund data coming out. Thank you for, joining us. Let me start with AUM. If you see, the AUM growth was muted at 4% year on year, and even saw a decline quarter on quarter. Just, I know the primary reason for this is slower disbursements, but if you can, give us update on that, what's the outlook there, and when we can see the jump when it comes to, AUM growth.
So technically, the first quarter is always muted. Why it is muted is basically because we have the harvesting seasons as well as the heat waves in the entire country. That leads to a muted growth during this first quarter. But having said that, I think for us, it's still been a good quarter relative to our year-on-year growth of about 4.5%, which we did for this quarter. But to add to that, I think, if we look at the other results which are coming in the entire sector of ours, there's been actually an industry degrowth of about 21%. Now, looking at that industry degrowth of about 21%, having still done a 4.5% growth year on year, I think that's pretty good. And looking at that, I think, the future, what bodes for us is that we are also looking at probably, we haven't given a guidance as yet, but we are looking at a growth which is going to be better than what we have it in the first quarter. And to top it all, I think we are also doing is that we are adding about close to about 188 branches, new branches, which will come up in this quarter to bolster our growth further for microfinance.
Understood. Mr. Singh, so if you see the credit cost, which has increased significantly, how do you foresee credit costs evolving over the next few quarters, particularly in the light of industry-wide asset quality concerns that we are seeing?
So yes, I think that is a fact that microfinance has gone through stress, and there's been headwinds in the sector. But even having said that, I think we've been able to maintain our GNP at about 3.7%, which was for the last quarter also. So that has been maintained over there. There's been a slight uptick in terms of our credit costs. I think the last year guidance was the last year we did about 4.6%. It is about 4.8% for this quarter. But we are giving our guidance for credit costs that this will be lesser than the last year. So 4.6% is what we touched last year. And we will definitely be going below that for this whole year in total, if you really look at it. First quarter, definitely a slight uptick, which normally happens because of the base effect of also the denominator being lesser than what it was.
Right.
Yeah.
Well, thank you, Mr. Singh, for joining this conversation. Completely out of time on this edition of show, but thank you so much for joining in. Well, viewers, this is all the time that we have on this edition of Small Cap Bazaar. Stay tuned to NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really?
Welcome, you're watching India Market Close at NDTV Profit. I am Mahima Vachrajani. With me is Soumit Sarkar. Well, markets not a bad day for sure for the markets. They've bounced back from the lows, currently trading almost at its day's highs. The Nifty 50 is up 0.7% as we speak. The Bank Nifty also up 0.7% as we speak. Let's try to pull up. That's the gain that we're seeing on the Nifty 50, around 167 odd points, 170 odd points at large. In terms of the Nifty 50 heat map, let's try to pull that up and see what counters are actually trying to pull the entire Nifty up. There you go. It's Adani Enterprises topping the chart, up 4.7%, followed by Tata Motors seeing gains of about 3.2%. Trent, Eternal, SBI, Grasim, Ultratech, all counters doing well in trade today. There's also Hero MotoCorp, slight bit of pressure, profit booking there. ICICI Bank down by about 0.4%. Bharti Airtel and Power Grid, some counters under pressure. Let's try to pull up the advanced decline ratio, because that's going to be an interesting one to watch out for, since the markets have turned tide a tad bit. There you go. Right now there are 1245 odd advances versus that of 1068 odd decline. So the ratio is slightly more than that 1:1 in favor of the buyers, of course. Let's try to pull up the broader markets and see how Midcap 150 and Small Cap 250 is doing. There you go. The mid-cap 150 in tandem with what the benchmarks are doing, up 0.7%. The small-cap 250, although slightly lower but higher at 0.3 odd percent, but almost at its day's high point, and in fact at its day's high point as well. Let's also try to pull up the BSE 500 and then also go to the sectoral indices. There you go. Some counters that are doing well includes JM Financial up 6%, Home First Finance also up 6 odd percent. Adani Enterprises, a Nifty 50 counter, top gainer on the BSE 500 as well. There's Supreme Industries up 4.3%, Ashok Leyland up 4% as well, and there's Data Patterns that's up 4% as well. But something that's not doing well, there's Hikal down 6.5%, Indigo Paints down 6.5%, Amber Enterprises down 6.3%, Akzo Nobel also seeing downtick of around 5 odd percent. But that's with regards to where the counters in the BSE 500 are concerned. But Sumit, how are the sectoral indices looking like?
Well, when it comes to sectoral indices, the top gainer is the Nifty PSU Bank Index, and this is largely led by the gains that we are seeing in SBI. When it comes to Nifty Realty Index, after a downturn that we had seen previous week, the index is up 1.5%, followed by Nifty Pharma, Nifty Auto. Most likely all the sectoral indices are trading in gain. The least gains that we are seeing is in the Nifty PSU Index, and the least gains could also be because despite that 30,000 crore LPG subsidy, oil marketing companies continue to remain under pressure. Nifty Energy Index is also up just 0.5%. With that, let's go across to Hemant Kapadia from DR Choksi FinServ. So last week was quite tough for the Indian benchmark indices, specifically for Nifty 50, Nifty Bank Index. So is this the rally that we are seeing, or this is the gain that we are seeing in trade today, just kind of a relief rally, or do you expect this to sustain over this week?
A very good afternoon to you, Sumit. Thank you for having me on the show. It's always a pleasure. I'd go with what you said. I think it seems more like a relief rally than a sustainable move. We've been down significantly. We've come off almost 1,200 points from the high. So, and we are, frankly speaking, 24,492. The 24,500 support was pretty significant. It got breached, which was a bit surprising, and now maybe it's playing with a lag effect. But long story short, yeah, it's a recovery, not a rally. I think I'll just digress a bit. IT as a sector should bounce and take the market higher.
And your view when it comes to the Nifty Bank Index, that's also up more than 350 points today.
Oh, I think whether you said or Mahima, I think the PSU banks, because of State Bank, it looks relatively better. But yeah, I think if you look at the Bank Nifty, we've spent 3 trading sessions, going just below the 55,000 level, Summit. But we have not closed below it. We almost closed below it on Friday, but too little to be counted. So same logic applies. Oversold, bounce coming. We'd see some more traction above 55,650. But as of now, once again, we've fallen off a cliff from 57,300 to 54,900. That's 2,500 points. Bounce is underway. But once again, I repeat, it's a bounce.
And what about your top picks for the day, Hemant?
Okay, my top picks would be a buy on SBI. I think there's a monthly supply line is trying to overcome. But yeah, it's a positional buy on SBI at 820. Stop loss 800, target 860. The second stock, which the buy call is on TCS. TCS is oversold, downside limited, oscillators giving a crossover buy. It's set for a recovery. I mean, the whole sector is, like I said. But yeah, buy TCS at 3040, stop loss 2990, target 3140.
Okay. Hemant, any quick view on PG Electroplast? I mean, the last 2 sessions, it's tanked and how? Almost 34% of downtick for the counter. Any view with regards to where charts are concerned? Do you think that this is the time it is bottomed out now?
Well, Mahima, that's a horrid chart when you look at it. But yeah, I mean, if you're saying you bottomed out, see the price volume action, we've seen 4 crore shares as far as the volume. Yesterday, we were around 2. This is gross, not delivery marking. But 4 crore shares after at a 6-8 month low, I would say we should be close to a bottom, at least the price volume action suggests. But today's low needs to be held from a slightly longer term point of view. I mean, only if this holds for the next 3 or 4 trading sessions. Is this view valid, Mahima?
Right, sir. And sir, how's Paytm looking like on charts? Despite the weakness that we have seen in the overall market, that is one stock that has not shown any kind of weakness. Today also it's up around 3.5% in trade.
Well, Somit, in a funny market, not funny market, in a sad market, Paytm shines. So short term, medium term, long term, any time frame that you look at, Paytm is in an uptrend, and I believe above 1120, further upside seems like a cinch. So yes, and 1000 has been psychologically, but technically a very important level for the last 6-8 months. I think now we look like sustaining above it. Okay, we are 10% above that. I believe further upside is around the corner.
Right, sir. And how's Manappuram looking like? The numbers were not that great, but it seems like the worst seems to be priced in on fundamental side. And on technical, I believe 260 is a strong support zone for the counter.
Yes, but we walked into an intermediate correction, Somit. Thing is, we've had a phenomenal move from 140 to 285. This needs to be digested. By that, I mean a time price retracement in technical terms. So we're taking a small breather. A short-term close about 265 should see some sort of a spike coming in. Since it's been down for multiple weeks, it's oversold. I believe it would give a bounce in line with the market.
Right. Oil marketing companies, another sector that has been buzzing in trade. In fact, the 30,000 crore LPG subsidy burden that was announced by the government on Friday should have led to a bigger rally on the share prices, but then again the shares are languishing in trade. Now, what could be the reason behind this? Well, what I believe or what I'm hearing from the market analyst is the fact that the new overhang on oil marketing companies is the fact that now the retail fuel price cut is an overhang that will remain for oil marketing companies. And why that overhang will remain? Because crude prices or retail fuel prices, that is petrol and diesel prices, have not changed largely over the last 3 calendar years. Now, in May 2022, when Brent crude was trading around the $110 per barrel level, that time petrol and diesel prices in Delhi were around 97 to 90 rupees. And right now, when Brent crude is trading around the $66 per barrel level, retail fuel prices, that is petrol and diesel prices, are trading around 88 to 95 rupees. So not not much a change that we have seen in retail fuel prices, despite the $40 per barrel downtick that we have seen when it comes to Brent crude prices. Now, retail fuel prices, that is petrol and diesel prices, are deregulated in India. Petrol prices were deregulated back in 2010, while diesel prices were deregulated back in 2014. And from June 2017, retail fuel prices were supposed to be changing on a daily basis, but that is something that we have not been seeing that is happening. And oil marketing companies have actually not changed retail fuel prices in a bigger way since March 2021. And if you look at the marketing margins that oil marketing companies are earning at this moment, it stands at around 7 rupees per litre, which is way higher than the historical average. The historical average number stands around 1.9 rupees per litre. That is the average that we are seeing over FY18 to FY25. Along with this, there is festive and election period that is coming up. Festive season is starting, so that could also prompt the government to go ahead and cut retail fuel prices. And in past also, we have seen that whenever there are state elections or general elections, OMCs have cut retail fuel prices, and the next state election is scheduled in October or November 2025. That is the Bihar election I'm talking about. And if you look at the sensitivity analysis, you'll clearly understand which OMC stands to be impacted the most, and it's HPCL, because HPCL's delta to the marketing segment is much higher compared to IOCL and BPCL, and every 0.5 rupees per litre impact or drop in marketing margin impacts HPCL, EPS by around 24% and EBITDA by around 13%. For IOCL and BPCL, this number stands anywhere between 8 to 16 odd %. So HPCL is also the reason why HPCL is trading in red and why BPCL and IOCL are still in green trade today.
Got it. That's quite a comprehensive view on what's happening with the OMCs right now. Hemant, quick view on these OMCs. Anything that you're liking on the chart specifically?
Ironically, or actually it's matching with what Somit said. HPCL is the strongest, but that also makes it more susceptible. Longer term point of view, IOC on technical parameters looks, but has been a laggard. Both of these, BPC and IOC, have both given sells by mechanical indicators on the weekly chart. So nothing very copacetic, nothing very sanguine. Okay, once again, HPCL strongest, but none of them quantify the buy as of now.
There's a breaking news that was just flashing on your screen. In fact, it's flashing on your screen right now that Finance Minister tables a new income tax bill 2025 in Lok Sabha. Earlier, we had mentioned that the earlier income tax bill proposed was withdrawn, and now there's a new income tax bill that is being proposed in Lok Sabha. Of course, income tax bill is dedicated towards simplifying the Income Tax Act of 1961, and we'll have to see and wait and watch as to how this new bill is going to simplify further taxes for individuals like you and me. So that's with regards to where the income tax bill is concerned. But the stock market today, Harsh, it's interesting moves coming in the last hour or so.
Yes, very much.
And it's bouncing back. So not Monday to be sad about, for sure.
Not at all. Brushing off the blues, in fact, as the Monday has gone by. Let's pull up the intraday chart on the Nifty and you'll see exactly that. Let's pull up the Bank Nifty as well, and that will give us the indication of exactly what I'm trying to bring out, or what Mahima is trying to bring out. 0.7% on both of those. So you're seeing sustained strength as the day has gone by. I wonder if, Hemin, if I were to quickly pose to you a question, more upside possibility than downside at this point on the Nifty, how are you viewing it? And what are the key levels that one needs to look out for?
More upside possibility than downside, absolutely. Levels to watch out now, support would be 24,492. Resistance would be 24,792, 25,002 and 25,212. That's a very important level. But yeah, I would say we'd go up first before going down.
Go up first before going down. Sorry, I mean, so you see a material downside here, and what's the sense like on that?
Frankly speaking, if you just give me 30 seconds.
Sure.
We spent 7 weeks between 24,500 and 25,200. One would have thought that after that consolidation, a breakout should see test the earlier high. Didn't happen. We fizzled out by 500 points. After that, 24,500 was broken again, which is obviously not a good sign. Very important level. Sorry, 25,200. So 25,200 was broken, not a good sign. This time we broke 24,500 and we are, clinging on for life and staging a comeback. Levels have lost their relevance. We've gone down on low IVs. Something doesn't seem right somewhere. Okay, it's a different market, different world, different politics. S&P 100, NASDAQ all-time highs, and we are floundering here. Friday, the OI and the Bank Nifty shot up considerably. And like I said, we're going down on low wicks. Okay, wicks has now come to above 12. But we've gone down on low wicks, which frankly speaking defies logic. So I am not sure how I would be worried about, how much worried I should be for the texture of the market. If you give me a year's time, I'll say 26 is going to be a great year for equities. 25, I'm not that sure. We have to take it as it comes.
Okay, all right. So that's the day coming in. Hemen, thank you for that quite detailed opinion piece. But ICICI Bank, it's been in focus all weekend. In fact, they've sharply raised the monthly minimum average balance requirements to 50,000 rupees from the earlier 10,000 effective the 1st of August. Salary accounts, though, are exempt from the new requirements, and customers who have opened accounts before the 31st of July, 31st of July and before will continue to attract their current existing rates itself. So no changes made there. So ICICI is surely in focus, while stock not reacting much, in fact largely brushing off pretty much any concern. We're down just about 1/3%. But we also brought in RBI Governor's first reaction, and that one's coming in on ICICI Bank's new minimum balance hike rule. Let's listen in to what he had to say.
देखो, ये जो मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000 रुपये उन्हें माफ़ भी किया हुआ है, लेकिन ये रेगुलेटरी डोमेन में नहीं है आज।
All right, so that's the take coming in. Himen, just want to, okay, so we don't yet have Himen. Okay, let me quickly pull out some stocks which are also making news, and again on the back of some announcements. You have, can we pull up the Adani twins? In fact, the Adani Enterprises stock price is up 5% in trade. I wonder what Adani Ports is doing as well. That one also seems to be doing fairly well for itself. A percent and a quarter of a percent odd higher. You're seeing Shilpa Medicare is the other one which is up. JM Financial on the back of numbers up 3% odd. Birla Corp also up 3 odd percent. But I'll stick with that ICICI Bank story, and we're bringing in Alex to give us perspective on what this means actually for, and obviously Alex, you track personal finance very, very closely since a while now. What happens when you keep such a large chunk of money in savings accounts? And by large chunk, I mean relatively large, 50,000 rupees. Take it away.
Well, the argument that has been made for some time is that you shouldn't leave too much money lying in your savings bank account. And the reason for that is pretty simple. The rates that are currently being offered hover anywhere between 2.5 to 3% for the large banks. And if you think about it, if you're leaving money in those accounts, you're losing money over the long term. And the reason for that is that this interest is taxed at slab rate, and post-tax, post-inflation, you effectively lose purchasing power. So what are people saying? And I've spoken to several advisors over the years, and what they say is that you should have 1 to 2 months worth of your expenses in your savings bank account because of the flexibility that gives you for spending. And beyond that, for your emergencies, you should have a credit card. Swiping that is something that you should consider doing, not just for your points, but for your emergencies. And you should have 6 months to 12 months worth of expenses. And this is something to build towards. Nobody can build that at the start in an emergency fund. You divide that into your liquid funds, which are mutual fund schemes that invest in short-term debt papers, and in arbitrage funds, which are effectively something that plays on derivatives as well as the cash market in the equity space that gives you equity taxation and slightly better returns than the liquid fund. This is something that you look at for your emergency requirements. Now, why should you, what should you do if you want to keep 50,000 rupees? Should you do that in the first place? If you have 1 to 2 months of expenses that are more than 50,000, then the answer is simple. It doesn't affect you at all. But you should keep that 50,000 balance if a bank is giving you something that no other bank is giving. For example, it might just offer you a credit card and certain rates on loans that other banks are not giving. If that is the case, it is a great proposition to consider. But that's an important question to answer in the first place.
Yes, very, very important, Alex. I wonder what this entails, and I'm keenly watching this space to try and understand better, one, on the ICICI Bank side of things, as to what happens and what are the trends that they start to see. And we will only know that when the con call happens at the end of Q2. So we still have 2 months to go for that. But interesting times, Mahima. Does this essentially lead to more banks following through? Doesn't seem like the case, at least at this point. Banks have fairly refrained from keeping this as the benchmark for the others to follow suit. But interesting times. Would you keep 50,000 in your bank account?
I mean, it depends, you know, like Alex said, that if your 2 months spending is more than that 50,000 mark, it won't make a difference. So by that, I'm not going to tell whether I'm going to keep it or not. But yeah, understanding should be there, and that's important for our viewers also to understand that beyond that, it will not make sense for you. But if your expenses less than that 50,000 mark for 2 odd months, then it'll hit you badly. You rather park your funds somewhere that gives you fetches you better interest, as simple as that.
Okay, interesting. We have Himen with us. I'm curious to know his view on this. Sure. I know Himen. I know this is off topic, out of syllabus question. What advice do you have for our viewers? Give us perspective.
The way I look at it, I'll buy some PSU bank stocks first. People are going to get fed up of this, and like Mahima also said, I think I would, if I remember correctly, at least half a dozen PSU banks have zero interest for maybe 2,000-3,000. So I think that's good. Probably that's why State Bank has already gone up today. But I'm not sure if everything gravitates towards that. Metros, yeah, 50,000 might not seem that big, but if you have EMIs on your head, I'm not sure what's the logic for doing it. But like I said, I'll buy PSU banks.
Yes, absolutely puzzled, but buying PSU banks, Hemen, on a day when the PSU banking index is up 2%, clearly the market seems to be agreeing and agreeing very, very well with you. Hemen, off topic, there's a Garware High Tech. Now, on the back of numbers, I know that move has come, but 9% lower. Give us your perspective. What are you seeing on charts with regard to this one?
Oh, okay, 9% lower on results, but frankly speaking, we've been lower since quite some time, Harsh. If you see, the stock has peaked way back in December 24. Markets peaked in September 24. Stock has peaked in December 24 at 5378. So we've been doing yo-yo since then, but we've virtually fallen off a cliff and nothing changed. Yes, what does happen is there's a bearish gap because of the results, which is not a good sign. On the other hand, you had very high volume as highest since, I think, 21st May. I believe strong hands would have bought at this level. For that, we need the level to hold. I mean, today's low to hold for a few trading sessions. But if I go back in April, there was a bullish gap which was left open. Normally, markets and stocks, at least out of 10 times, there's not a thumb rule, but 7 or 8 times, they have a tendency to cover up these gaps. So that bullish gap is now getting covered up. And this is after we're coming up from 4,800 to 2,800. 2,000 points. I'm not sure there's too much of a downside, at least in the near term.
All right. Okay, Hemen, I believe we'll have to let you go at that. But thank you so much for taking out the time and giving us those insights.
Thank you for having me.
All right. With that, it's also time to slip into a very short break. But we leave you with important word from MK Global CEO and Head of Research. They shared their top picks from this space. Listen in to what they had to say, and we'll be right back.
Our starting hypothesis is that we've seen rate cuts, and we still believe that there are rate cuts in the fray, despite the fact that RBI has done what he has done, which means that it's a great benefit to all the NBFCs. So within banks and NBFCs, we clearly believe that you've got a 2-3 year run for NBFCs. And the reason for that is that if you actually look at private sector banks, as we see now today, their 2-year earnings CAGR is about 9-10%, which is a bit of a problem, right? And maybe because your provisions are coming back to average or whatever it is. If you look at most of the well-run NBFCs, when I talk about well-run, I'm talking about corporate-led, AAA rated NBFCs. They have grown at about 25% in the last 3 years. The guidance is to grow at 25% over the next 3 years, and therefore the divergence between the growth rate for NBFCs and banks is huge, which means that there'll be big flow of money that gets into that, right? This is a heavily owned sector, which is not probably going to do as well till the time credit growth picks up, and therefore that's an pocket of growth that comes out. I already referred to platform companies. You should be bullish on something like L&T, the domestic infrastructure. Some of the sectors over there are very, very cheap. So barring consumption, which is again a valuation-led issue, I think that at least some of these sectors, I remain fairly constructive. Sam may want to add.
Yeah, in addition to that, consumer discretionary, which has had 4 to 6 bad quarters, and we see a recovery coming. Some of those valuations have now moderated.
So you mean the AC compliance appliances businesses, those?
No, consumer discretionary is mainly autos if you look at weightage. Okay, but there is also that consumer electricals.
You think autos will come back?
Yes, I would selectively start looking at autos at this stage on a forward-looking basis. In a short-term cyclical cycle, I would prefer to look at two-wheelers, but from a longer-term perspective, four-wheelers as well. And some of those stocks, if you've seen, despite the numbers being weak, have already started doing quite well in the last 5 or 6 months. And industrials, as he was alluding to, that is the other sector there where we are overweight. Some of the other themes that we are looking at are the airlines. We think that airlines is set. The entire airline ecosystem, the long-term structural growth is very strong. You're seeing 2 new airports come in the next 6-8 months. You're going to see an increased capacity. So there's a lot.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy.
Welcome back. Thanks for staying with us. This is India Market Close. I'm joined by Neeraj, of course, right next to me, and Mahima, who has been with us. But it's time, that time of the show, where we go across to Somit, who's also joined us in the studio, to give us a perspective on everything that he's been listening to while speaking with dealers, heard on the street. Somit.
Well, multiple stocks in focus. Firstly, it's NTPC and Power Grid, where dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade. They believe that valuations are cheap, and in current market volatility, these two counters come in as a safe and stable income bet. When it comes to Asian energy, dealers are indicating that there are buy flows on HNI desk on anticipation for large order win that could be announced soon. For Ashapura Mindchem, large prominent investor. Now, a large prominent investor has been a buyer in trade today is what dealers are indicating. For Engineers India and Titagarh Rail, high HNIs have been accumulating Engineers India on anticipation of strong numbers, while they have been selling Titagarh Rail on anticipation of weak Q1 numbers. For Tata Motors, despite the weak set of numbers, there are buy flows on institutional desk as the worst seems to be priced in is what dealers are indicating. And lastly, when it comes to PG Electroplast, that counter has been under pressure for the last couple of trading sessions, but dealers are indicating that the selling for this counter most likely will get over in trade today.
Okay, I think we just need to change that stock, because what Somit was talking about when it says that worst seems to be over was PG Electroplast. So we were showing Tata Motors there.
No, for Tata Motors, its worst is also over.
No, worst of the selling pressure getting over is for PG Electroplast.
Yeah, that is for PG Electroplast.
Yeah, because Tata Motors is up 2.5% today. So if you can just highlight that the fourth stock on the list is PG Electroplast, for where the worst of the selling seems to be over. I think that's the point that dealing rooms are making. Now, Somit, just one quick follow-up and with regard to Tata Motors. Why this buying? Is it, I mean, theoretically when I think of it, coming closer to the demerger date, etc., all of that is positive.
Right.
The stock is also corrected quite a bit. Is there something else that the street may be missing?
So, firstly, the stock has already corrected because of this volatility that we have seen because of the Trump tariff, and hence valuations are not that expensive. And whatever negative commentary has come in is something that the street was already expecting. So, there is nothing incrementally negative that has come in for Tata Motors. And that is one of the key reason why there are these buy flows. And for PG Electroplast, one more thing that we also need to focus is the fact that the stock might enter F&O ban. So that could also be one of the reasons why there could be not much of a downside from current levels.
Got it. Okay.
The other piece, sorry, if I can just chime in.
On Tamo?
On Tamo, yeah. Swami, 2/3 of the top line comes from JLR.
Right.
And JLR manufacturing doesn't happen in India.
Right.
Largely unaffected by the tariff,
50% tariff that is
the news,
right,
the absolute fresh news which has come through. So technically,
there is no negative.
Exactly.
There is no incremental negative there.
Exactly.
No, I'll tell you the incremental negative. To my mind, the incremental negative is they not being able to compete on the global front with the high price cars the way BYD is.
Fair. Yes, that's for sure a negative.
That is there.
If BYD is hitting Tesla, and presumably if JLR is going all electric and their price points might be in or around Tesla, will they be able to get incremental sales?
That is a question.
It's a question mark, right?
That's a question, right.
Yeah, and that could possibly be a big negative, because we're seeing BYD pick up in a substantial fashion globally, and Tesla lagging on the back of that. So okay, excellent. I guess this discussion set it up very, very well. Thanks, Amit, for that.
Well, it set up the markets very well too. We are trading at the day's highs. What a turnaround and what a start of the week. Akshay Bhagwat joins in to talk about that on the technicals. In a bit, Siddharth Khemka. In fact, not in a bit. Siddharth is here with us. And Siddharth, I remember we wanted to talk about rare earths the last time. We'll do it this time around. But first, Akshay, thank you for joining in. Day's high. Where do we go from here? What kind of trades do you initiate?
Good afternoon, Neeraj. So yes, a good start for the week. 24, 300, 350, second time retested in the morning. We have a recovery scenario back again. And in all probability, with the data points, we look on the price charts, the derivative indicators, the chances of Nifty heading back for levels of 24,800 soon looks a higher probability. An excellent risk-reward ratio offered for Nifty buyers at the current levels. So makes a lot of sense to buy here for trading targets till 24,800.
So, Akshay, are you playing this via options, or are you going long plain vanilla futures at the current levels? 0.85% higher.
Yeah. So even in options, it works. You can actually consider buying a 24,600 call for Nifty if you are playing a directional vanilla call bet for the 14th of August weekly expiry. So almost just out of the money call. And I think if we have Nifty moving till 24,700 also for this coming week, you can see easily 50% premium gains in Nifty from the current market prices.
Okay, Akshay, picks for this afternoon?
Yeah. So a couple of picks, both on the buy side. The first call is in Varun Beverages. If you look at the price traction, an excellent positive setup for today. Overall, the broader view also is very strong for Varun Beverages, the way the last couple of months the recovery have been. Looking forward for targets of 532, extended target till 541 with stop loss at 489. That's the first trade. Second trade is in Hero MotoCorp. The stock has cooled down a bit today, but I believe the broader technical setup is extremely strong, and this stock should regain its lost momentum in the last couple of days and move for targets of 4700 and 4727. These two targets would be on your radar, and stop loss would be 4467 on this trade.
Okay, Siddharth, let me bring you into the conversation as well. Good afternoon, good having you. Siddharth, what do you make of this take that Somit has just given us? This is what he is hearing from dealing rooms, that there is some amount of bottoming out where Tata Motors is concerned. There's also a view which Neeraj just put forth, saying that China and BYD could be big competition for Tata Motors from a JLR standpoint. How much of some of those factors warrant merit at this point, and what are you advising viewers to do with a Tata Motors stock?
Yeah, good afternoon. I think yes, there is a lot of debate going on within our dealing desk as well with regards to Tata Motors. Is the current price factoring in the worst, or there is still room for further downside? What we believe is that there are several multiple headwinds that JLR is facing, which include, and the biggest of all is the tariff-led uncertainty for exports to the US. As we know, a lot of that JLR products being manufactured from UK, Europe, and is getting exported into US. So that is the biggest concern. Demand weakness in key regions like Europe, China, that is also a big concern, and especially given that some of the newer emerging brands such as BYD are eating away into the market shares of the likes of Tata Motors, Tesla's. Even Tesla is facing a similar headwind in terms of weakness in demand. Plus, you have the rising costs with related to warranties, emission costs, all those things. So given these factors, what management has refrained from giving any guidance, but what we see is that we expect margin pressure to persist for JLR. We have factored a 150 basis points decline over the next 2 years, so over FY25 to FY27. Even in India, both CVs as well as the passenger vehicle business are seeing some moderation in demand. And due to these lack of triggers, while the stock seems to have fallen, corrected, and a lot of these is already in the price, we don't see any near-term triggers except for the price, and hence we continue to remain neutral on Tata Motors.
So that's the view with regards to where Tata Motors stands. But one stock that has been in focus on Friday also and today also, and that's PG Electroplast. The stock has tanked, and how? Almost down 34% in the past 2 or trading sessions, and this is on account of a couple of things that's not worked for the counter. Now, we've tried to list down what has not worked, of course, in Q1, and certain pain points for this particular company. And, as I mentioned, down 34% in the last 2 trading sessions. In terms of what's not worked, weak Q1, and plus management has gone ahead and reduced the guidance overall. In terms of the order cancellations in June and July, that was very high, and this is on the back of early onset of monsoon. High inventory levels were also observed, and inventory days have also gone up significantly. Working capital days have also been significantly increasing in the past 3 years. Plus, there is deteriorating cash flows, and promoters are also reducing their stake in the company. Now, let's take a look at each of these metrics one by one in detail. Weak Q1 FY26, of course, well, overall sharp decline in the profits, plus a major disappointment for investors, and margins down by around 183 basis points to that 8.06% mark. Versus that of almost 10% earlier. In terms of the overall PAT, that's down 20% on YOY basis and a 54% on quarter-on-quarter basis, and margins have taken a hit. Overall, in terms of the growth guidance, that's been reduced by the management. Let's take a look at it one by one as to what's happened there. Overall consolidated revenue guidance, which was earlier a 30%, has been brought down to 17 to 19%. The number expectation in terms of consolidated revenue, that was around 6,300 500 odd crores. That's been brought down to around 5,700 to 5,800 crores. In terms of product revenue growth, which was earlier guided at 35%, has been brought down to 17 to 21%, and electronics revenue growth, which was earlier 43 odd percent, has been brought down to 29%. Even the PAT and EBITDA margin guidance has been lowered. The PAT guidance lowered from that 400 crore to around 300 to 310 crores, almost a 100 crore downtick there. In terms of the overall percentage, the expectation was around 39%, but that's brought down to around 7 odd percent. In terms of the order cancellation, now this is interesting because June and July have seen order cancellations up to 70% for this counter, and this is because of early onset of monsoons, and that could probably impact the operational leverage of the company as well. In terms of inventory levels as of June ending stood at around 1350 crores, and 97 to 98% of that is raw materials, and inventory is expected to normalize only by Q3. So Q2 will also be under pressure on the back of high inventory levels. In terms of inventory days, well, that's gone up from 73 days in March 2023 to almost 123 days in March 2025. With regards to where the working capital days stands, that has also significantly gone up 9 days to 60 days in March 2025. Overall, promoters have also been reducing stake in the company. The stake stood at around 61.3% in March 2023, which is brought down to around 49.3% in March 2025. Lastly, what brokerages are saying, well, Nuvama has maintained buy and maintained target price of 710, but they've slashed their 26, 27 and FY28 EPS estimates by 36%, 25% and 10% respectively. In terms of JM Financial, they've retained buy with a target price of 790. Here also they've cut their EPS estimates between 13 to 27%, but they're saying that it's expected to deliver average ROE of 14% over FY25 to 28. Lastly, because of PG Electroplast cutting its guidance and being under pressure, there has been ripple effect or domino effect on Amber Enterprises as well as EPAC Durable. Amber Enterprises touched an intraday low of around 7.5%, and EPAC Durables also touched an intraday low of around 5.8 odd percent. In fact, we also spoke to the management today, listening to what he had to say.
In the Q1, the industry as a whole has seen a degrowth of 25 to 30%. Almost all the major AC players, AC brands or AC manufacturers have experienced a degrowth in their numbers for the Q1. We as a PG Electroplast has been able to deliver a growth of 14% in our revenue top line. Please understand. Now, when we dive deeper into this subject on how the slowdown in this AC is happening, please see there has been an early onset of monsoon. So because of the early onset of monsoon and due to the high channel inventory, the overall summer selling season for the air conditioners got compressed and it fell off beyond the anticipation of any of the industry players. So there has been a decline in the numbers of sales for the ACs. The tertiary sales or the secondary sales were very low. And in the month of July and August, as we are seeing right now, the sales are practically not happening.
Okay, stock of course has halved now. Siddharth Khemka, views with regard to a PG Electro?
So, we don't cover PG Electro, but definitely you see a lot of pressure in these AC companies. Voltas has also come out with weak performance. Management commentary highlighted that Q1 has been a challenging period, especially because of a weak summer and then early onset of monsoon. I think there is still one more quarter of weakness. All the commentaries suggest that the management are hopeful of some recovery in the festive season. Till then, I think estimates have been brought down, and I think the stocks could remain under pressure for some more time. Voltas, we have a neutral rating as of now.
Siddharth, here's the question though. The Voltas management has said that inventory cleanup as well as festive demand would actually help. Now, my question is this baking in the works, PG or a Voltas or some others? Are they baking in the works? Because these seasonal disappointments are not new. We know that could happen every time, and it's not that it will happen again the next time. Next time it could actually be a really good quarter as well, right? So is this an opportunity to add or would you wait for some more time?
I think, Neeraj, very good question. We were debating about this in our morning meeting today. So what looks like, yes, these seasonal effects do come into picture, especially for some of these seasonal products. And even last year, we saw post-festive season, some of these products, especially the likes of Voltas and some of these other consumer durable companies, started to pick up even in the December quarter on back of strong recovery in the growth. So I think we are hopeful that festive season could see some improvement in terms of numbers. And some of these companies, as you rightly highlighted, yes, for example, a PG Electronics, we don't have coverage, but the trailing P has compressed sharply from excess of 100% to now about 60 odd P, which is in line with the others in the industry. So I think, yes, some of these stocks, be it a Voltas, PG Electro, Amber, I think these are good levels for someone who has patience to start accumulating, because good prices and good news don't come together. You will get good prices to enter only in times of bad times where the things are under pressure, because the core business is not changed. I think the long-term structural story, demand for air conditioners in India, that remains pretty strong.
Buying PG, right?
Yeah.
Well noted. Now, just before we get the technical view, I think it's worthwhile highlighting the flashes on your screen. Because there are some irresponsible, unnecessary comments by select band of army personnel and the army chief in Pakistan. ME has responded saying that we'll never give in to nuclear blackmail, and nuclear saber rattling is actually Pakistan's stock in trade, and the international community will actually verify some of this as well. So India is making it stand clear, as it should. I don't personally think it was necessary, because those things can happen from the other end whenever it comes about, but good to see that response nevertheless. So just wanted to mark that. The flashes on your screen give you a sense of that. Okay, just taking it to Akshay. Akshay, any of these stocks near some key support levels? Voltas, maybe a PG, maybe an Amber?
See, at least the way PG Electroplast is reacting the last couple of days, it makes a lot of sense for the dust to settle, because although it is highly oversold, you might get some bit of respite buying around 460 odd levels. But really, from a technical perspective, first we need signs of stability before we call it a support. At least what I understand is that Voltas is better placed out of the entire lot of stocks which we are looking at. Here, the stock has tested its key support zone of 1200. If you look at the daily charts, there have been multiple instances where the stock has a tendency of recovering from 1200, and when it recovers till 1400. So following this traditional buy at support kind of a scenario, I think today post gap down, it has recovered well, and bodes well for a good risk reward trading bet, where the recovery can see 1300, 1325 on the short term trading charts. So I think Voltas is better placed among all the names which we discussed.
All right. Okay. So that's with regards to where these EMS companies and consumer durable companies stand. But speaking of earnings, a lot of earnings per se are under pressure on the losing side of end, of course. And there's something like Entero Health. There's always also Garware High Tech Films and PTC Industries, which are under pressure. And we have Javansh joining in with more details on what's not worked for these companies.
Yeah, so let me start off with Entero Healthcare. Now the stock is down post the Q1 FY26 results, and this is on the back of the EBITDA estimates that the company has missed the EBITDA estimates, and the street is clearly disappointed from this. And the EBITDA, however, the EBITDA margin has been expanded by, which has been led by the value-added services, and the lower tax has further aided the net profit for this company. However, the management has reaffirmed the 30% revenue growth for FY26. If we talk about the numbers, the revenue was up 28% at 1400 odd crores versus 1097 odd crores. The EBITDA was up 66% at 50 odd crores versus 30 crores, and the margins were at 3.6% versus 2.7%. The net profit is up 43% at 30 crores versus 21 crores. Second on the list is Garware High Tech. Now this again a weakest set of numbers from this company. There has been a weak operational performance which has been supported by the shrink in margins, and the net profit has been largely dragged by EBITDA. If we talk about the results, the revenue is up by 4% at 495 odd crores versus 475 crores. The EBITDA is down 7% at 110 crores versus 119 crores. Net profit is down 6% at 83 crores versus 89 crores. Last on the list is PTC Industries. Now the stock is down 6%. Now this is on the back of the Q1 FY26 earnings, and this is the set of earnings has been weak. This is backed by the recent acquisition that the company has done, and also the cost of materials for the company has grown by two times, and the profit has been aided by other income. If we talk about the results, the revenue stood at 97 crores versus 46 crores. Margin stood at 9% versus 21%. And the EBITDA was down 12% at 9 crores versus 10 crores. And net profit was up by 5%. So clearly a weak set of numbers that the market is penciling in for all these counters.
Weak set of numbers on those counters. Thank you for that, Vansh, for bringing us all of those highlights. Siddharth Khemka, any perspective you could give us in terms of numbers which are standing out for you in trade today? Anything that for you was an observation from some of the results that have come out?
Yeah, I think a lot of results, and we are in the last leg of earnings season. So if you look at from the large cap perspective, I think State Bank numbers clearly stood out. We saw steady quarter. Although if you look at from a broad numbers, it looks like treasury gains. But if you look at the finer details, it looked like growth all across. Advances was up about 12%. Strong traction in retail loans, SME lending. Corporate growth was supported by robust sanction pipeline. Asset quality continued to remain healthy. What some of the other operational initiatives that the company has taken, the AI-led Project Sectoral, they are leading to improving efficiencies as well as customer service. One thing which generally we have a perception that PSUs don't have, but over the past few years, we have seen SBI customer service be it at par with some of the larger private players. So definitely a leg up for SBI in terms of that. So overall, I think very strong earnings from SBI in the large cap space that we saw today.
Okay, all right. Thank you for that view coming in on an SBI, Siddharth. Of course, the stock doing very well for itself in trade today. But Siddharth told we're going to have to let you go. So thank you so much for coming in, giving us all of those views. And with that, what we'll also do is we'll slip into a very short break. On the other side, we'll get you top buy today, sell tomorrow picks. And if we can just pull up the stock price of NSDL, because in a few days, this is the first time it slipped into the red. We're going to discuss this as well as the top BTST picks along with some of the other things, including bull versus bear. Stay with us.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company?
Welcome back. You're watching India Market Close. Now we are focusing on something important here. Let's cut across to Green Rev Summit 2025, where Adani Total Gas ED and CEO Suresh Manglani is involved in a conversation about India's blueprint for 15% gas-powered future. Listen.
Domestic gas production or midstream, building up the national gas grid across the country, or building the RLNG terminals at various strategic locations. And the last, on the downstream side, again, if you see, barring one or two islands, maybe Lakshadweep or something, entire India, regulator has now already given the authorizations. So at the moment when I'm speaking to you, large number of CGDs companies are building city gas distribution network across pan-India basis. Similarly, national gas grid is expanding, almost becoming double. RNG terminals are getting constructed or commissioned. So I think we are on a right path to move from a 6.5% to 15% by 2030.
Right, sir. Now, NDTV has, very strongly campaigned for cleaner air, and especially when it comes to our cities, when it comes to our national capital. So to explain this to, people who are watching who may not understand our energy needs as, as much as, what we're explaining, as detailed as it is, what this means for cleaner emissions and, air quality in our cities, in our industrial areas.
So, as compared to other fuels which is being used today, whether in the industrial units they use liquid fuels or solid fuels, at homes we use LPG, likewise commercial establishments are also using LPG and several other fuels. So as compared to those fuels, natural gas is far cleaner, almost 30 to 40% you save on carbon dioxide. Then similarly you save on sulfur dioxide and many other NOx levels. So naturally, natural gas is far cleaner, and it is the government policy, the government has been promoting usage of natural gas. And you have seen in NCR itself, when there was a lot of pollution was happening, this Honorable Supreme Court itself took the PIL and they started promoting CNG as a fuel even for a transport. So it is an undisputed fact that adoption of a natural gas will bring relief for all the cities, urban areas, and also the rural areas for breathing the fresh air and clean air.
Absolutely. So let's hope this adoption happens, as fast as it can. Sir, so you spoke about, this ambitious...
Okay, so that's obviously the take coming in from Adani Total Gas. But just before we went to break, we were speaking about State Bank of India, and we spoke about the fundamental factors which are aiding the stock price today. Also joining me, Avinash Gorakshekar, Director, Research, Profit Mart Securities on the show. So yes, we did speak about State Bank of India, but along with it, some of the PSU banks also doing fairly well for themselves. A PNB, a BOB, a Canara Bank are some of the top gainers. In fact, 4 of the PSU banks are the top gainers on the Nifty Banking Index. Avinash, PSUs versus private banks, do you have a view? And a quick one, because of the outperformance that we're seeing in PSUs today specifically. Avinash, I believe you're on mute.
Yeah, sorry. Harsh, I think I would say that, the valuations wise, if you look at the public sector banks and the private sector banks, the discount of the PSU banks compared to the private sector banks is quite significant. And I think hopefully the second half for this financial year will be a stronger quarter in terms of credit growth, in terms of both government and corporate, private corporate capex. I would not be surprised that, the first quarter has been disappointing for most of the PSU banks. If you look at numbers from Bank of Baroda, Canara Bank, or that way PNB, I think SBI has shown a decent number, but I would say the bigger performance would obviously come in the second half. And hopefully, this is a sector which is driven by domestic demand. So, the US tariff issue is not going to bother them. My sense is that valuations are attractive. So you are seeing a little bit of bounce back effect after the SBI numbers. But overall, we remain constructive on Canara Bank, Bank of Baroda, because our sense is that, at these levels, there's nothing to lose. And I think if the economy grows a little better in the second half, hopefully the tariff issue is also resolved. Domestic corporate capex also gets speeded up. Government is also going to spend a lot of money on infra. So all these things definitely mean good news for the banks. And I think asset quality, Q1 numbers, post Q1 numbers. I mean, one thing is very clear, that maybe the profit growth was either flat or negative, but the asset quality remains to be quite strong. So, that is one point which is very important when you look at, the PSU banks. So net, I think we are constructive. I think you need to take a slightly longer term view here. But yes, at these values, definitely the risk reward could be better if one takes a slightly medium to long term view.
Neeraj, if we can just pull out the breath on the Nifty today, and that's what's really standing out for me. After what's been a tough few weeks, we're seeing such strong breath, and I'm talking the Nifty 50. We can pull up the heat map. That'll give us perspective. 47 stocks sitting in the green as we speak. It's not a specific stock-led rally that we're seeing today. We're 1% higher on the Nifty now. We're seeing the breadth really pulling its force behind the Nifty, and that's what's pushing the index higher. Of course, we've not hit that 1%, but directionally, we're slowly and steadily inching towards the 1%. So it's been a solid Monday pretty much all through the day, because it's been a stable one-way move on the index. Avinash, are you buying absolutely anything in this market at this point? Are you playing wait and watch? Is tariffs bothering you at this point?
So I think we would prefer the domestic facing sector, Harsh. I think something like cement has done very well in the Q1. If you look at most of the companies which have come out with results, I think normally the first quarter is not a great quarter for the cement companies, but this time, most of the larger players have done well. I would say that, a stock like Ramco Cement, Ambuja Cements, typically even Ultratech, these are stocks which have shown much better than what the street expected. So I think, we have been telling our clients to also accumulate, stocks like JK Cement. So numbers have been pretty good. And I think the other sector which is really expected to do well is the hospitality and the hospital sector. I think hospitality is one sector where we have seen players like Indian Hotels, BLS International, very strong numbers in the first quarter. Typically, this sector does very well in the second half, but the first quarter itself has been quite strong. If you talk about hospitals, Apollo hospitals from the large cap, the smaller ones like Yatharth hospitals, almost 40% jump in their Q1 profit. So typically, I think hospitals is also one segment where I think the markets could look at them very positively, because typically now what is happening is the hospitals are breaking even much earlier, and this is an area where the risk reward is getting better because there's a huge kind of supply crunch. So I think players which are offering specialized services will definitely continue to do well. So I think hospitals, hotels, the hospital sector, and typically the consumer facing sector, like typically with a good monsoon, agrochemicals, fertilizers, consumer durables, these are going to be also segments where you could see a strong second half coming in, because the monsoon effect would obviously be felt from the September quarter onwards.
Okay, all right. So Avinash, thanks for that.
Okay, interesting. So agrochemicals, cement, hotels and hospitals is what Avinash is liking right now. But, talking about the consumer durable space now, that sector has been in focus. And, while for agrochemicals, a good monsoon is positive, for consumer durables, an early monsoon definitely is a negative. And Voltas is one of those counters which has been impacted because of unseasonal and early monsoon. So we've tried to do a bull versus bear case on Voltas today. In terms of where the Q1 performance is concerned, overall there's a month-on-month improvement in the market share in the RAC segment specifically. That is something that the management guided in the con call. But overall weaker volumes and the scale back of factory operations in the mid-season plus the early monsoons onset has impacted the overall earnings, and that's also led to higher inventory in terms of where Voltas is concerned, both in terms of the company as well as the channel inventory. In terms of the overall margins in the segmental performance, there is improvement in the electromechanical projects margins, but when it comes to unitary products, there was a significant downtick in margins there, and that stood at around 10 years low as well this quarter. So that's something that is concerning as of now, but hopefully once the inventory gets cleared, the margins will bounce back to the normative levels. In terms of Voltas's inventory, they are right now sitting on 3 to 4 months of inventory and 2 to 3 months of channel inventory as well. So that's a concern right now, and probably by Q3 they will be able to get rid of this entire inventory that's stacked up. But the positive side in terms of where the entire Voltas is concerned, this actually should be opposite. So that's the bear case. But in terms of BE norms, if that gets confirmed, that should be a positive when it comes to Voltas. In terms of Jefferies, now that's an interesting report, because what they're saying is that the company is currently trading as 6 times FY27 forward PE, 22% below its historical 5-year average PE. So that probably even at 36 times make the stock attractive. But on the other side, they've also cut their FY27 to 28 EPS estimates by 2 to 3 odd percent and have estimated a 19% CAGR growth over FY25 to 28. In terms of lastly where ANR stands for this particular counter, there are 21 buy calls, 13 hold calls and 7 sell calls with an upside potential as per Bloomberg estimates at around 12%. So that's Harsh with regards to where Voltas's bull versus bear case stands, and of course where the ANR also stands.
Excellent. Let's quickly ask Avinash for a view. Avinash, what's the view with regard to Voltas?
No, I think in the very near term, Harsh, we expect that earnings are going to be impacted, and this is definitely going to be not a great, quarter, the September quarter also. And I think, the markets have been quite surprised that this time the weather has spoiled the performance for a company like Voltas. So I think, we have been telling our clients to continue to hold, but no fresh buying is advisable because even the July to September quarter, according to me, is going to be either a muted or a flat quarter. And I think earnings growth is definitely now going to be a big question mark. So maybe in the next 2-3 months, if they're able to ramp up sales, but typically the main season, if it gets lost, then I think, for a company like Voltas, they'll have to wait for the next financial year for the new season to come in. So I think it's going to be a little tough for the company. So prefer a hold and no fresh buying suggested at these levels.
Prefer a hold, no fresh buying. Ajit Mishra, welcome. Good afternoon from Religare Broking, joining us on the technical side. Ajit, what's the view?
Hi, good afternoon, Harsh.
Good afternoon.
So basically what we are seeing in most of the consumer durable name, in fact, in the recent months, the participation was muted, means we were seeing a bit of a recovery or a rebound for the last couple of months. But if you talk about specifically for Voltas, around close to around 1140, 1130 was the area basically where it tested twice in the recent past. And there was a marginal recovery towards 1380 area where the short-term averages are placed on the weekly charts. After retesting that level with marginal volumes, again, we are seeing a drift towards the lower band. So this indicates that consolidation is likely to continue. So in case if somebody is having the short-term view, this stock might continue to consolidate in this band of around 1100 to 1380, 1400. So it's prudent that one should refrain from any aggressive longs at current levels. But yeah, in case if you have any existing positions, you can stay put with 1200 as a closing stop loss.
Okay. Ajit, hi, good afternoon. Your top picks for the day?
Yeah, good afternoon, Vigma. So currently we are seeing that the PSU banking counters are, back with the bang, and Indian Bank within the space is leading from the front for almost like several months now. The stock have made a new record high post the consolidation range breakout today, and we expect this momentum to further continue. The 700 is what we are eyeing in the near future, so one can accumulate at current level with 655 as a stop loss. Another stock that we like is the heavyweight from the capital goods space, that is L&T. Post numbers, we were seeing that stock was consolidating in a very tight range, and currently we are trading around the upper band of the same. So possibility of trend resumption seems high, and 3800 is what we are eyeing in the near future. So with stop at 3590, one can accumulate L&T also at current levels.
Okay. Avinash, anything in the Alcobev space that you're liking? Sula is the one stock that's been beaten down post its earnings, and quite a possibility on the cards that next quarter, considering how they've come down to around 1.5 crores of profit only, they might also turn into a loss-making company the next quarter. But considering everything that's happening in the Alcobev space, the Maharashtra liquor policy as well, anything specific that you're liking in the space?
No, I think as far as Sula wine is concerned, I think, the numbers have not actually shaped up to the market expectations. I think the wine market, according to me, is yet a new market. And I think, getting incremental volumes has been a challenge for the company. So I think, even the second quarter, July to September, is going to be equally challenging. So I think except for that, if you look at Radico Khaitan, Associated Alcohol and Breweries, these are companies where, we have coverage. And I think I would be more positive on both these players, considering the fact that recently, a small player like Associated Alcohol reported its Q1 numbers, very strong EBITDA numbers, profit numbers. The management commentary also has been very encouraging. So I think, we have been putting out views on these companies largely because we feel that the upside is clearly visible. I think in case of Acetate Alcohol for FY26 also, we expect that earnings growth could be at least 20 to 25%. And valuations look pretty attractive. The company has a very lean balance sheet, very little less debt on the books. They also are now getting into ethanol, which I think which also will add to their revenue and profitability. So I think overall the space is attractive. I think, these stocks have always been fair to expensive, but I think maybe Radico Khaitan and Acetate Alcohol, one can definitely look at buying, in a SIP way if one looks at the medium to long term kind of time frame.
Okay, stay on, gentlemen. Some more counters to talk about, but before we get there, let's get in, Jasmeet, to talk about some key buzzing stocks, including DOMS and Akums Drugs, and as well HBL, which Jasmeet, I thought came out with very good set of numbers.
Well, right, as rightly said, now I have three buzzing stocks in the market on the back of earnings. The first one on my list is DOMS Industry. While we see there has been recovery in the core sector, which has grown 18% for this quarter, that's why the stock is up and buzzing. While the margin delivery was in line with the management guidance as for the previous quarter. Looking at the key numbers of the management, the revenue is up 26%, while the EBITDA is up 14%. The margins are in line. They see a slight pressure compared to the previous year, while the net profit is up 10% in trade. The next one on my list is HBL Engineering. While the stock is almost up 13% in trade today, there have been a strong expansion in the margins, while this has come on the back of reduction in the work in progress. So last time it was a positive 6 crore, but this time quarter we see it's a negative 70 crore, which has helped in the expansion of the margin and reduction in the cost. While when you look at the other income, that has also grown, while the employment expense has also risen in this particular quarter. Looking at the key financial and key numbers for this particular company, the revenue is up 50%, while the EBITDA is up 74%. Now the margins have come up at 31% versus 21% in the previous quarter, expansion of 1,000 basis points in this quarter. And net profit is up again 79%. The next one on the list is Akums Drugs. While the stock is buzzing and it's up almost 7 to 8% in trade today, what led to this growth would be firstly, the net profit misses the estimates on a slight basis, but the company achieved the 1,000 mark of DGCI approval. In this quarter, they have received an approval for 26 such drugs. Looking at the overall segmental performance, both domestic and international market have grown each by 3 and 2% on YOY basis. Talking about the key financials and key numbers of the company and how they have performed, the revenue is up slightly 0.5%. It's roughly muted from the last time, but the EBITDA is up 1%. The margins have remained flat at 12.6%, while the net profit is up 5%. So these are the stocks buzzing in trade today on the back of earnings.
Yep. Okay. Thanks for that, Jasmeet. So HBL is, of course, a no-brainer. Avinash, I don't know if you track HBL, and if not, if you track Akums Drugs, because I think they're doing some pretty interesting domestic CDMO work.
So I think, Neeraj, HBL, we do track. And I think, as a company, we have found that it's got a very unique and a very strong product base. They cater to the defense, aerospace, railway sectors. The order book has been very strong. And in this quarter specifically, margins have improved quite significantly. Typically these companies are now in the limelight because the railway and the defense business are going to be the growth engines for this company. And I mean, in terms of their technical capabilities, in terms of the scale up opportunity, I would say that, there's a lot of risk reward left even going forward. So somebody who's got a 12 to 18 month time frame can definitely look at accumulating the share, because we believe that the order book has got a very strong revenue visibility for the company. As far as Akums Drugs is concerned, we don't have a very direct coverage, but I think, as you rightly said, we need to have at least maybe another 1 or 2 quarters of consistent growth. The long-term performance definitely will get visualized only when we see consistency in the numbers. This quarter has been good, but I think clearly what kind of management commentary and what kind of growth comes in from the new, initiative which you mentioned. I think CDMO is a large space. If they're able to strike some new deals, then I think the market should re-rate this counter. But for the time being, it would remain in a narrow range. So I think we prefer a hold here. But HBL, I think one can definitely accumulate on every decline.
Ajit, before I go on and take a view from you on VST, I want your quick BTST strategy.
So, we are seeing, be it all the sectors, means all the key sectors, be it realty, auto, all are participating in the move. But we are seeing that the rate sensitives are one which is leading from the front. So in case if you are okay with high volatility, then Poonawalla FinCorp is one name wherein we have seen very strong recovery of late. And After a marginal dip on Friday, we are again seeing that stock has recovered strongly. We have almost paid all the losses of Friday, and we are ending closer to the day's highs. Probably we can see this momentum continuing and stock inching towards 460 area. So with stop at 432, one can accumulate Poonawalla as a BTST candidate.
Okay, all right. There's one counter that's locked in upper circuit as we speak. That's Yatra Online, and overall great set of numbers. I mean, revenue up 108%, net profit up almost 3 times, EBITDA up almost 4 times, and margins have improved to that 11% mark from a 4.6% mark. Overall, even operational metrics have improved because gross bookings have seen a good growth. The 34 new customers were signed this quarter. That gives them a revenue potential of around 200 crores for FY26. In terms of the guidance also, they've maintained their guidance so far, but the management also said that this guidance is from a conservative approach and they could do better than this as well. In fact, we also spoke to Mr. Dhruv Shringi of Yatra Online and listening to what he had to say.
I think volumes have bounced back for sure. We've seen this in the month of July and also trending into August that volumes continue to improve. There was obviously a meaningful setback in the month of June on account of the incident that you mentioned. I think what's happening is that there is a lot more consumer awareness at this point of time. I've seen customers, writing in to figure out what kind of aircraft will they be flying. So those kinds of things are great from a customer awareness point of view. But I think overall customers are still fairly confident about aviation as it being one of the safest means for transportation. So we do think numbers anyways are trending positively overall from an industry point of view, and that growth rate will remain steady. So for FY26, the way we are defining margins and how we are indicating to the market is that margin, which is EBITDA margin as a percentage of revenue less service cost, is currently around 21%. We expect that to continue to improve maybe by 100 bips to 150 bips Q on Q over the next 2-3 quarters. And for next year, we would be indicating more towards a 25% number.
Okay, all right. So that's the take coming in from a Yatra. Avinash, do you have a view on this one?
So I think, Harsh, after a very long time, Yatra has delivered very strong numbers. In fact, this has been one of its best quarters, margins improving, gross bookings also improving. And as I was telling you, this forms part of the hospitality space. Companies like Thomas Cook, Yatra, typically these are companies which are going to obviously benefit from the tailwind seen in the hospitality sector. So definitely at these levels also, if one were to take the next 12 to 15 month kind of time frame, it definitely looks promising. I believe the management guidance is quite conservative, and in fact the second half for this company could be much better because typically second half is supposed to be a far better period for travel oriented companies, and I think definitely there could be good risk reward even from the current level. So definitely we are structurally positive here.
Okay. Keep in mind, European shares have opened higher. The US futures are ticking higher. So all of that is looking okay for people who are thinking of going home with long positions. So that's to be borne in mind for sure. I mean, a 20% stock higher need not really get a tech check going per se, but Yatra is certainly making it count in the session today. So that's very nice. The other one which has had a couple of false breakouts, actually two stocks out there, Ajit. One of them is transformers and rectifiers, breaks out and then breaks down consistently. Is this today's move worth buying into? The second one that I would urge you to give me a view on is Sai Life. Was up on Friday. We spoke to the management, up another 6% today. Is there more here?
Right, Neeraj. So yes, you rightly pointed out that transformer and rectifier, there was strong volume breakout, with strong price action on 4th, followed by a decisive candle on the downside as well, negating this breakout. But at the same time, Neeraj, again, we are seeing that bulls are trying to hold the short-term and medium-term averages placed around 480-500 area. So probably this kind of like earlier, in case if this breakout would have continued, then momentum could be much higher. This time around, I believe that 565-80 could be the area where it might again face resistance from the sellers, which coincides with the previous swing high. So as of now, the risk reward is 1:1.5. So if you are okay with that, means with 500 as a stop loss, then definitely one can consider with 560.65 as a target area for trail. And coming to the Sai Life, so volumes, price action, all coincides. The stock is at the record highs. So positioning is fine, but it's a very volatile counter area. So I would recommend one should wait for any dip. In case if we get any dip, let's say around 860, 850 zone, then the risk reward is going to be much better with strong support at 790 area, and then keep on trailing your stop losses on every rise. Let's say once the stock reaches to 1000 plus zone.
Okay, so Ajit and Avinash, thank you so much for taking out the time and giving us all those insights at NDTV Profit today. Let's take a quick look at how the markets are going to close on a Monday. Let's try to pull that up, the Nifty 50 as well as the Bank Nifty. Well, trading on definitely closing on day's high point. Nifty 50 up 0.8% as we speak. The Nifty Bank also up almost 0.9% as we speak, up almost 200 odd points. Let's try to pull up the Nifty heat map and see how the counters have done in trade today. Top gainer clearly Adani Enterprises up 4.2 odd %, followed by Tata Motors, Eternal, Grasim as well as SBI, all seeing gains of about 3 to 2 odd %. Trent also doing well in trade today, up 2%, but some pressure in Hero MotoCorp, down by about some profit booking there after the gains it saw on Friday, down by about 1 odd %, followed by Hindalco, BL, some counters in pressure. Let's try to pull up the advanced decline ratio, because as Harsh mentioned, it's a good day for the markets, and look at that breadth, 1275 odd advances versus that of 1000 odd declines. So that ratio is now much more than that 1:1, 1:1 ratio as compared to where we started the show at. Let's also try to pull up the sectoral heat map, because probably all sectors today will end in green, and yes, except for the consumer durable side of things, because PG Electroplast, Amber, Voltas all under pressure. It's down by about 0.8%, but largely led by the PSU banks sector, that's up 2%, followed by Nifty Realty 1.8%. Nifty Defense also back in the green, up 1.2%. There's Nifty Healthcare, Nifty Auto, which is also done well. In terms of the Nifty IT, slight gains of about 0.2 odd %, followed by metal also slight gains of about 0.3 odd %. But in terms of where the broader markets stand, let's try to pull up the broader markets and see where the mid-cap 150 and the small-cap 250 are. The mid-cap 150 up by about 0.6 odd %, so gains there as well, almost in tandem with where the benchmarks are, a tad bit lower though, and the small-cap 250 up 0.4% overall. In terms of the BSE 500 and some counters to specific that deserve specific mention.
Yeah, Home First up 6%. That's the one stock which is doing well. Heikel is down 7%. In fact, the top loser on the BSE 500. But along with it, some tech stocks. So you'll see a 197. Also, PB Fintech has done fairly well for itself. Voltus, we discussed that, and then you have those host of EMS players, and Amber is sitting there as well among the top losers. Of course, we don't have a PG Electroplast featuring in this BSE 500, and therefore not standing out there in terms of the names. But let's quickly look at what to watch out for tomorrow as well. And there will be a whole host of earnings which we'll be watching out for, and some of the reactions on those earnings will also be crucial to understand. But circling back on the top story as we come to an end of the trading day today is with regard to where ICICI Bank is concerned. ICICI Bank, of course, the new policy which requires customers to open accounts from August 1st, 2025 onwards in metro and urban areas to maintain a monthly average balance of 50,000 rupees or incur penalties. To gauge public reaction, my colleague Shubhana spoke with a slew of customers to understand how they are perceiving this development. Here's the report.
Imagine this. You've been maintaining 10,000 rupees in your savings account for years. But now your bank comes and says that you'll have to maintain 50,000 rupees or pay a penalty. Well, this is essentially what ICICI Bank has done over the weekend. They have increased the minimum monthly average balance requirement to 5 times over. Now, the accounts that are opened with the bank from August 1st will have to maintain 50,000 rupees as minimum balance. These are for urban and metro customers. And also, if you are not able to maintain this balance, you'll have to pay a penalty of 6% of the shortfall. Now, we've hit the streets to ask customers what is their first reaction on the steep hike.
From 10,000 to 50 is not the advisable amount. They could have made it 50% more or some percentage wise, 10 to 15 or 20. It is from 10 to they made all of a sudden 50,000. So it will be how many percentage? 500 percentage more. It should not be.
Since this is for new account holders and this hopefully won't affect the old account holders too much, they don't want the average Joe to come in anymore. They want elite customers, and hopefully it's not a fair thing actually.
महंगाई बढ़ाई है लेकिन कम रहना चाहिए था मेरे हिसाब से तो ये
कितना रहना चाहिए आपके हिसाब से?
ज़्यादा से 20,000 होना चाहिए.
We are students and parents can't afford. Not us, but not every parent can afford to give their children 50,000 to just open a bank account. So I don't find it very visible for everyone.
There are PSU banks. Go to any other bank. There are so many private banks, so many smaller, thousands of banks. I mean, there plenty of opportunity. These guys probably taking a call that will basically hurt them, I feel.
Well, for ICICI Bank, it's a move towards premium banking. But for many customers, it's a push towards finding a new bank. Either way, the 50,000 rupees minimum average balance requirement has stirred a pot in India's savings account space. And a debate over balance has just got more expensive. This is Subhana Sheikh from NDTV Profit with camera person Vijay Sartape.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, the benchmark indices claimed through the day to end the trading session near intraday highs. The Nifty and 30-pack Sensex concluded with gains of over 0.9% each. Nifty heavyweights such as Reliance, SBI and L&T uplifted the frontline indices, while Hero Moto, ICICI and BEL dragged a bit. Both the indices outperformed the broader markets, with the small cap index gaining the least. All sectors ended the day with substantial gains, with PSU Bank, Realty and Defence leading the rally. The least gains were observed by media, metal and the IT index. The advanced decline ratio also posed a healthy market breadth, with more than half the stocks in favour of the bulls. Gold prices slid over 1% today, with spot gold down to $3,362 an ounce as investors await clarity on the potential US tariffs on bullion bars following a White House statement on the issue. Attention is also turning to upcoming US inflation data, which could which could actually signal the Federal Reserve's next moves on the interest rates. PG Electroplast shares tanked 34% over 2 sessions after a disappointing Q1, with net profit plunging 20% year-on-year and staggering 54% quarter-on-quarter to 67 crore rupees. Margins shrank to 8.06%, which is hit by order cancellations, high inventory, rising working capital days and weakening cash flows. So while promoter stake sales added to the investor concerns, and that also makes it the stock of the day. Tata Motors reported a challenging Q1 of FY26, with consolidated net profit dropping 63% year-on-year to 3,924 crore rupees, missing the estimates of 3,972 crore rupees due to a 4,975 crore one-time gain in the base quarter. So revenue has fallen 2%, EBITDA declined 36%, and margins at 9% versus 14% year-on-year. JLR's 10% wholesale degrowth, US tariffs and China's 10% luxury tax on the Range Rover models dented its profitability. So brokerages trimmed the outlook, citing JLR uncertainties. Voltas reported a disappointing Q1 of FY26, with consolidated net profit crashing 58% year-on-year to 140 crore rupees, missing the 160 crore estimate. Revenue has fallen 20% below the 4,100 crore forecast due to unseasonal rains and high channel inventory. EBITDA has dropped 58%, with margins shrinking to 4% from 8%. And this is driven by weak unitary cooling product volumes and 10-year low UCP margin of 4%. So electromechanical projects margins improved to 5%. Management expects edge to recovery with festive demand. RHI Magnesita reported a 52% year-on-year drop in Q1 of FY26 consolidated. So net profit the FY26 consolidated net profit to 35 crore rupees, missing, and they have actually missed the estimates of 50 crore rupees. So this is due to rising raw material costs, and revenue has grown 9% to 960 crore rupees, which is in line with 965 crore expectations, and this is driven by cement and iron making demand. So EBITDA fell 33% to 102 crore rupees, with margins shrinking to 10% from 17%, as material costs rose to 63% of sales from 55%. So the refractory market remains competitive, with pressure from the Chinese imports. Entero Healthcare reported a 28% year-on-year revenue increase in Q1 of FY26 and missing the 1,421 crore estimate. So net profit rose 43% to 30 crore rupees, which is below the 34 crore forecast, and this is aided by lower tax expenses. EBITDA has surged 66% to 50 crore rupees, with the margins expanding to 4% from 3%, driven by value-added services like specialty pharma and diagnostics. So management reaffirmed a 30% FY26 revenue growth target. This is supported by acquisitions and market share gains as well. HBL Engineering delivered a stellar Q1 of FY26 with consolidated net profit soaring 79% year-on-year to 143 crore rupees, and they've beaten the estimates of 120 crore rupees. Revenue rose 16% to 602 crore rupees, which is in line with 600 crore expectation. So this is driven by a 106% surge in the electronics segment. So EBITDA has jumped 74% to 192 crore rupees, with margins expanding to 32% from 21%, and this is fueled by operating leverage and cost efficiencies. And other income also surged to 60%, though employee costs rose 36%. So defense segment sales also dipped, while work in progress inventory fell. State Bank of India reported a 12.5% year-on-year rise in the Q1 of FY26 standalone net profit to 19,160 crore rupees, which is beating the estimates of 17,095 crore rupees, primarily due to 6,320 crores in the treasury gains. So revenue fell 0.3% to 1.18 lakh crore rupees, and they've missed the estimates, while EBITDA grew 15.5% to 30,544 crore rupees. Margins faced pressure, with domestic NIM down 33 basis points year-on-year to 3.02%. Asset quality has improved, with gross NPA at 1.83%, and brokerages are mixed. Jefferies and Morgan Stanley are positive, while Macquarie sees limited upside due to margin and treasury challenges. BEML, a state-owned company under India's Ministry of Defence, has clinched its first international rail and metro contract from Malaysia, valued at $1 million, awarded on August 9 of 2025. The contract involves retrofitting and reconditioning Malaysia's mass rapid transport system, marking BEML's global debut in the rail metro segment. So the deal aligns with BEML's strategy to expand internationally, leveraging its expertise in rail, defense, and aerospace. Meanwhile, BEML also reported its Q1 earnings, with revenue holding steady at 634 crore rupees, which is matching the last year's figure. However, the company has posted an EBITDA loss of 49.3 crore rupees, which is slightly improved from a 50.1 crore loss year-on-year. So the net loss narrowed to 64.1 crore rupees from 70.5 crore rupees. But BEML remains in the red amid challenges, aligning with market expectations. Shilpa Medicare has received Central Drug Standard Control Organization approval for Norutka tablets, making it the first company globally to launch a treatment for non-alcoholic fatty liver disease in India. So the approval announced on August 9 follows successful phase 3 trials showing 83% liver fibrosis reversal and 90% alt normalization in 165 patients. So NAFLD affects 188 million Indians. The company plans immediate India launch and global regulatory outreach. Edgy Infra Engineering, in a joint venture with DEC Infrastructure and Projects, has been awarded 2,100 crore rupees of contract by the Rail Land Development Authority for redevelopment of New Delhi Railway Station. Announced on February 6 with appointed date set as August 6, the 45-month EPC project aims to modernize the station into a world-class transport hub with a multimodal integration and transit-oriented development. Now, Goodyear India's Q1 of 2025 earnings show a tough quarter. Revenue has dropped 5.1% to 656 crore rupees from 691 crore rupees year-on-year. Net profit has fallen sharply by 43.6% to 14.1 crore rupees from 25 crore rupees. EBITDA also declined 21.2%, now with margins shrinking to 15.4% from 18.6%. The company has faced challenges from higher raw material costs and weaker demand impacting the profitability. Yatharth Hospital and Trauma Care Services will join the MSCI India Small Cap Index starting August 26 of 2025. Now, this will boost its visibility among global investors. The stock rose over 1% to 715 after the announcement, hitting a record high of 738.2. So, rupees. Now, Yatharth operates 7 super specialty hospitals in North India with over 2,300 beds. Now, the hospital player reported a 38.4% profit increase to 42 crore rupees and 21.7% sales growth to 258 crore rupees in Q1 of 2025. Eureka Forbes Q1 revenue increased by nearly 10% to 608 crore rupees, which is up from 553 crore rupees in the same quarter last year. So the companies increased by over 9% to 61.5 crore rupees. Now, despite there's growth in the revenue and EBITDA, the company's margin has remained flat at 10.1%. So the company's net profit saw a significant jump of over 20% to 38.7 crore rupees. Therefore, overall, Eureka Forbes reported a strong Q1 performance, which is driven by revenue growth and improved profitability. Ipca Laboratories delivered a robust Q1 with consolidated net profit surging 21.3%. Now, revenue has climbed 10.3% to 2,309 crore rupees, while EBITDA has risen 6% to 416 crore rupees. However, margins have dipped slightly to 18% from 18.8%, reflecting strong growth driven by domestic and export markets. Bajaj Consumer reported a solid Q1 with revenue up 8.4% at 267 crore rupees compared to 246 crore last year. EBITDA grew 10.5% to 40.5 crore rupees, boosting the margin slightly to 15.2% from 14.9%. Net profit saw a modest 2.2% rise to 37.9 crore rupees, reflecting a steady performance in a competitive market. In July 2025, India's pharma market grew 7.9%, fueled by higher prices and new product launches, matching its steady 7 to 8% growth trend. So, however, overall sales volume dipped slightly by 0.2%. Top pharma companies outperformed the market, with cardiac drugs leading as the fastest growing category. Oncology drugs also saw strong volume gains. Older top 40 brands lagged behind the market's growth, while the newer GLP-1 drugs like RYBEL, SAS gained significant traction. The CCI is digging deeper into claims that quick commerce giants Blinkit, Instamart and Zepto are unfairly dominating the market. Following a March petition from FMCG distributors, the CCI is seeking more details on their deep discounting and business practices, which may violate the Competition Act 2002. Now, the regulator plans to review an inspection request once the petitioner provides additional evidence. As per a news report, the Reserve Bank of India sold at least $5 billion in US dollars to support the weakening rupee, which is nearing a record low. So the report stated that the sales happened in both domestic and international currency markets. Now, if this continues, August 2025 could actually see the RBI's biggest monthly dollar sales since January. So the move is aimed to, stabilize the rupee amid this growing economic pressure. TCS has partnered with Now Corporation to strengthen the Philippines' national digital infrastructure and promote financial inclusivity. TCS will provide its expertise in cloud technology, cybersecurity, and digital transformation to support the Philippines' digital growth. The partnership will also focus on developing citizen-centric services such as digital private infrastructure, healthcare, and digital banking to provide financial inclusivity. Tesla has opened its new experience center in New Delhi, marking a significant development in India, the chapter of the US automobile major. Now, the Delhi center of Tesla is located at World Mark III in the AeroCity area of the national capital. Now, it will offer visitors an opportunity to explore Tesla's latest electric vehicles introduced in India. NVIDIA and AMD, two major US chip makers, have agreed to pay the US government 15% of their revenue from AI chip sales in China to secure export licenses. Now, this deal, as per news reports, involves NVIDIA's and AMD's chips and follows a meeting between NVIDIA CEO and President Trump. So, the arrangement reverses a prior ban on these chip sales to China, but it sparked concerns among trade experts about mixing the national security with financial deals. So China is a huge market for both companies, with Nvidia earning $17 billion and AMD $6.2 billion there last year. Intel CEO is set to visit the White House today. This comes after President Trump demanded his resignation last week over ties to Chinese firms. So Tan is facing scrutiny for investing $200 million in Chinese chip companies and aims to explain his background and commitment to the US security. So he may propose ways Intel can work with the government to strengthen the national interest. Now, the visit follows rare public call from Trump for Tan's removal, sparking debate among the investors. In July 2025, Indian investors poured a record 28,464 crore rupees into the mutual funds through systematic investment plans. Now, this is up 4% from 27,269 crore rupees in June. Now, this surge shows growing trust in the disciplined long-term investing despite market ups and downs. Now, total SIP assets under management also rose slightly to 75.1 lakh crore rupees from 74.14 lakh crore. This is reflecting, steady retail investor participation in India's financial markets. President Donald Trump took to Truth Social late Sunday, urging China to quadruple its US soybean purchases to address its shortage and reduce the trade deficit just before a critical tariff truce deadline. So the call has spiked Chicago soybean prices by over 2%, but experts doubt China, the world's top soybean buyer, can shift so heavily from Brazilian imports. Starting today, the Indian and Pakistan navies will hold separate military drills in the Arabian Sea, just 60 nautical miles apart. India's exercises off Gujarat's coast involve warships and possibly aircraft, while Pakistan's navy will conduct firing drills in its waters. So both have issued airspace warnings for August 11 to 12, the time following recent tensions from India's Operation Sindoor after a deadly April terror attack highlights ongoing rivalry in this key maritime region. Union Minister Nitin Gadkari took a subtle jab at the US, saying countries that bully others or do dadagiri have strong economies and advanced technology. Now, speaking in Nagpur, he urged India to boost exports and innovation to achieve self-reliance. Now, this comes after the US imposed a 25% tariff on Indian goods, citing India's Russian oil imports. Now, Gadkari emphasized India's culture of global welfare, not dominance, and called for research to triple the economic growth. Delhi police detained senior opposition leaders including Congress Rahul Gandhi, Priyanka Gandhi Vadra and Mallikarjun Kharge, along with Samajwadi Party's Akhilesh Yadav and Shiv Sena's Sanjay Raut and Priyanka Chaturvedi. Now, during this heated protest in central Delhi, now the India bloc, the I.N.D.I.A bloc MPs were marching to the Election Commission, alleging its collusion with the ruling BJP over voter roll issues. India's officially spokesperson issued a statement slamming Pakistan's Chief of Army Staff for his recent remarks made during a visit to the United States. So the spokesperson described Pakistan's behavior as nuclear sabre rattling, now implying that the country is recklessly threatening nuclear war. The statement expressed concern that Pakistan's military is closely tied to terrorist groups, which raises doubts about the safety and security of the country's nuclear arsenal. India views Pakistan's actions as irresponsible and a threat to regional and global security. 5 Al Jazeera journalists, including prominent correspondent Anas Al-Sharif, were killed in an Israeli airstrike targeting media tent near Al-Shifa Hospital in Gaza City. The attack, condemned as a deliberate assault on the press freedom, has drawn global outrage. Israel claims Al-Sharif was a Hamas operative. A 6.1 magnitude earthquake struck Turkey's Balıkesir province, killing 1 person and injuring 29. Now, the quake centered in Sindirgi collapsed 16 buildings and was felt as far as Istanbul. Now, 81-year-old woman died after being rescued from rubble. Now, search operations have concluded with no further casualties reported. FC Barcelona lifted the 2025 Joan Gamper Trophy after a commanding 5-0 victory over Como 1907 at Estadi Johan Cruyff. Now, young stars Fermin Lopez and Lamine Yamal each netted 2 goals, while Rafinha sealed the rout. The historic first meeting between the clubs showcased Barcelona's attacking prowess under coach Hansi Flick. This is setting a strong tone for the upcoming La Liga season. Crystal Palace stunned Premier League champions Liverpool to claim the 2025 FA Community Shield at Wembley Stadium. Now, the match ended draw with 2 goals each side. In the penalty shootout, Palace goalkeeper Dean Henderson saved 2 spot kicks, securing a 3-2 victory and their first ever Community Shield title. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Nifty logs the best closing since the 26th of June, gains close to 1% to close above 24,500. Sensex closes at over 700 points. All sectors end higher, with Nifty PSU Bank as the best performing sector. July sees record SIP inflows of more than 28,400 crore rupees, with thematic mutual funds witnessing the highest influx ever of 9,400 crore. NFOs drive the inflows into actively managed funds. The government continues to defend E20 petrol, claiming reduced CO2 emissions while dismissing car owners' reports of major mileage loss as unsubstantiated and not backed by scientific studies or expert analysis. The Finance Ministry expects 55% of exports to the US that will face reciprocal tariffs, adds that the terms of contract and quality will influence export resilience. The government tables the Taxation Laws Amendment Bill 2025 in Parliament, bringing in big relief for partnership firms and family offices. The latest version proposes to drop adverse alternative minimum tax. FMCG sales show early signs of recovery ahead of festive season. Sales were driven by chocolates and confectionery as retailers prepared for Raksha Bandhan. Rural sales grew by over 10% in July, while urban sales growth remains stable at 6%. The Delhi police detains opposition MPs including Rahul Gandhi, Priyanka Gandhi Vadra and Sanjay Raut while protesting outside the Election Commission's office against the special intensive revision of electoral rolls in Bihar. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it. It's our top focus this evening. There's been big relief for partnership firms and family offices in the new income tax bill, which has been tabled in the parliament today. The adverse alternative minimum tax proposal has also been dropped in the latest version. My colleague Shrimi, who's been tracking this relentlessly, now joining me live with more on the story. Shrimi, take us through all of the crucial changes that we're going to be seeing in the income tax bill.
Yeah, certainly. So, it's 600 plus pages, the fresh version of the new income tax bill, and it was introduced by Finance Minister today in the Parliament and the Lok Sabha. And some of the key amendments as we, continue to decode the bill because it has so many provisions. So what we have so far found that the adverse alternative minimum tax, the AMT, it has been dropped in the final version of the bill. So, of course, there is a huge relief to limited liability partnership or any family offices who are actually operate as partnership firms. As you remember, in the draft proposal, there were confusion around that the AMT, the minimum tax proposal, has expanded the scope of, the tax provision, and there will be all the limited liability partnership will be the part of that scope. Not now, the government is clarified that in the final version, saying that there would not be any capital gains tax on limited liability partnership, and that is reflected in the final version of the bill. The second important point here is what we understand in the latest version is that government maintains the status quo on the loss carry forward provision. Now, this is very interesting again because the select parliamentary panel actually proposes that you should introduce beneficial ownership concept for loss carry forward provision, but that was not accepted. And in fact, there were no clarity in the final version. The third important aspect is, of course, on the associated enterprises. Now, there were, certain ambiguity on the part that what will be the threshold of the shareholding in terms of associated enterprises. So that clarity has also come in the final version. What the bill is now saying that whatever the shareholding limit must be met at any time during the financial year. Earlier, it was not clear where that requires in the beginning or during the financial year. So that was also clarified. Apart from that, several select panel recommendation has been accepted, including that anonymous donation and the TDS refunds, etc.
Right, Shrimi, thank you so much for bringing us that update. We'll continue coming to you for the key developments. Remember, this is as the new income tax bill has in fact been tabled in Parliament. Moving on, let's take a look at how the markets fared today. It appears that there has been no Monday blues for the markets, with the Nifty 50 and the Sensex ending higher, nearly 1%, rebounding sharply from Friday's lows. Broader markets ended higher but underperformed benchmark indices. All sectoral indices ended in the green, with Nifty PSU Bank being the top gainer. My colleague Harsh now joining in for a quick wrap of the market action.
Well, we've had a couple of tough weeks, right? And today was a bit of a bounce back. Monday blues completely brushed off by the index. We've closed around 0.8% higher. Best day of intraday close since probably the end of June, 26th of June is what I'm told. It's the best intraday move that the Nifty has made since that date. So solid move, largely led by the breadth. So it wasn't like the heavyweights aided the index or the like, but IT banks were certainly finding favor in trade today. The IT index was up 0.5%. The banks were also up 0.8, largely in line with the Nifty. And that, of course, aided the Nifty. But outside of that, it was just the breadth which was extremely strong. Nearly 40 stocks clocked the green on the Nifty 50, which is clearly what has led to that uptick. 4% higher on an Adani Enterprises. That's the one stock that really stood out in trade, among others. The other one was Voltas, of course, which was under pressure on the back of numbers, of course, but that's within broader markets. Along with that, the consumer durables index within sectoral indices faced some heat on the back of those numbers, and also a PG Electroplast continued to face heat. So that was broadly the way in which the market moved. But let's talk a little bit about sectors as well. Pretty much all sectors in the green, outside of that consumer discretionary sector, which faced some bit of headwind due to Voltas's numbers. When you're looking at the broader markets as well, the breadth was extremely choppy pretty much through the day, but we closed the day with the breadth in the green. 1200 odd advances to just about 1000 declines. That was roughly the ratio. And the Nifty mid-cap index and small-cap index underperformed the large cap, courtesy the breadth on the large cap, which was extremely strong. So the mid-cap index was up just about 0.6%, and the small-cap index was up a little less than 0.5% odd in trade. So that's how it played out overall. The BSE 500, of course, plenty of gainers, losers. Amber was one of those within that EMS pack, which faced some amount of heat among the losers. But broadly on the back of numbers, some reactions with regard to those numbers coming through on the BSE 500 in terms of names.
Right, Harsh, thanks for that. And moving on, India has introduced E20 petrol, adding 20% ethanol nationwide, 5 years ahead of a schedule. But a wave of drivers is actually pushing back, reporting lower mileage, engine trouble in older vehicles, and demanding choice at the pump. Now, the government counters that the claims lack any technical backing, while a minor dip in fuel efficiency around 1 to 2% for newer cars and up to 6% for older ones may occur. It maintains that routine servicing can address it. Let me quickly go across to my colleague Aishwarya for more on this, and she also spoke with customers about their views on E20 petrol.
Here in New Delhi at this petrol pump, we have been speaking to a few of the consumers queuing up to fill up their tanks here. And the board behind us, as you saw, says ethanol blended petroleum. Few are aware that 20% ethanol is being blended across petrol pumps across the country. In fact, online what we see is a heated debate brewing. On one camp, there are skeptics, and on the other, those who are in favor of the E20 petroleum being blended at these retail pumps. In fact, a survey conducted recently which says that E20 should be rolled back. This was a survey involving about 36,000 vehicles across 300 districts, and about 44% of them have demanded a rollback because they've claimed that there's been mileage drop that has affected the performance of vehicles and also impacted the engines. That is one camp. The other side, of course, is the government side, and they are saying that SIAM and ARAI tests have proven that this is economically beneficial and also environmentally friendly. In fact, Union Ministers Hardeep Singh Puri and Nitin Gadkari have both thrown an open challenge, saying that if you spot even one vehicle with any sort of issues being faced as far as the engine is concerned, he would like to be notified about that. So here are two camps, one criticizing it and the other for E20 blended ethanol.
Interestingly enough, I'm not seeing any discernible difference. As you can see, 89 mileage, maybe a little bit here and there.
Yeah.
Although I'm not entirely certain, I think I'll have to use it a couple of more times before I can give you a...
अगर इंजन परफॉर्मेंस उसमें नहीं अच्छी आएगी या फिर एवरेज भी कम आ रहे हैं गाड़ी के सुनने में तो ये भी आ रहा है तो फिर तो बेकार है.
लेकिन if government is saying something तो it is better for the public.
If it is suitable for the environment, it is good. If it is not suitable for the environment, then it is not good for the car or the car owners.
हाँ फ़र्क तो है, मतलब एवरेज में भी फ़र्क आता है और उसका जल्दी से सर्विस मांग जाता है गाड़ी. जो इंजन खोलता है उस समय पे तो उस समय उसका जो पार्ट्स अंदर जो चलता है तो वो मतलब घिस जाता है.
आपको इसके बारे में जानकारी थी कि ये ब्लेंडेड आ रहा है पेट्रोल?
जी जी जी.
And to give us more insight into this, we have Puneet Gupta, Director, S&P Global Mobility, India and ASEAN. Thank you so much for joining us this evening and welcome to NDTV Profit, Puneet. Puneet, first give us your assessment of the E20 fuel rollout impact on India's automotive market, especially with most vehicles on the road not really being E20 compliant.
Great. So thank you, Sanjana. It's great to be here. But first to begin with, E20 is definitely a great initiative by Indian government. Particularly in terms of environmental perspective and also from energy security perspective, right? So, but another thing is that obviously once you blend ethanol with gasoline, so the fuel chemistry changes, right? So, and when your fuel chemistry changes, obviously it will have some impact because ethanol is a low energy density fuel, almost 34% less than gasoline. So it means that you are mixing something, which has a less energy, and basically that will result in reduction of mileage. So I think, there is a feedback from the customers online and, from the surveys, which have been done, so clearly that's a pain point, for the customers today. And that is what we have been hearing. But then another problem is that the vehicles which are on the road, right? So they are not obviously E20 compliant and the parts which were fitted in them, so obviously because of ethanol, there is always a risk, because ethanol is hygroscopic, right? So there is a risk of, water absorption, which can actually lead to corrosion, and it can also lead to softening of rubber parts, for example, hoses, seals, gaskets, right? So also obviously, on the old vehicles, these were not compatible. The new vehicles which are coming now, specifically after 1st April 2025, are flex fuel compliant, E20 compliant. And so there the validation of the parts have already been done. So there won't be any problem using E20 fuel. But for the older vehicle fleets, yes, there can be cases, which can emerge.
So, Puneet, can you comment on the automotive aftermarket? Let's talk about service, maintenance. Oh, we also have Hormuz joining us. Hormuz, let me then pose this question to you. Hormuz Sarabji, welcome to NDTV Profit. And if you could tell us, how is the automotive aftermarket? So, like I was just saying, service, maintenance, parts, how is that adapting to E20, especially regarding the need to replace a rubber fuel system components more often?
Yeah, well, I think, firstly, these are genuine concerns of motorists. Sure. I think, obviously, with E20 and ethanol, the corrosive nature is the biggest worry. Having said that, to be honest, some of it is a bit overblown. There's not going to be a catastrophic engine blow up or a failure. It's cumulative, it takes time. So these parts will wear out faster than they've been designed to. Some of them will. Some brands, in fact, if you speak to them off the record, they have been E20 compliant for quite some time now. You might have a company like Toyota, which has been E20 compliant since the last 10 years. But they're not going to say this right now because, they don't want to have any liability if anything happens. But I think fundamentally, this is really an opportunity for brands to kind of give let's say kits which you can retrofit and replace the parts which would be susceptible to corrosion and wear from the hygroscopic nature of ethanol with materials that are resistant to this sort of corrosion. And I think it's theoretically it's easy. Practically, it's also very difficult because when you start going really back into time and into cars which are 10, 12 years old, that becomes a lot more difficult because some of the cars have been discontinued. You can't let's say remake those parts with the new materials. But I think it's going to be the motorist is going to feel some pain. How much pain is something that is going to be very dramatically on a lot of things, how the cars are maintained, which are the brands, what kind of engines they are. Sometimes the older 1.2 NA engines where the ECUs are very basic and they can't adapt to the new fuel, they'll be affected more. New turbo engines, they'll take quite well to E20 because E20 has a higher octane rating, which no one has spoken about. In fact, the octane rating has jumped from 91 of the base fuel to 95. And that in itself, gives you much more performance, though the fuel efficiency is a concern, and that does take a bit of hit. So it really varies, and it will vary widely because it depends on driving style, maintenance, the kind of engines they are, how far back you go. So it's very hard to even put a percentage. So in some cases, the effect might be minimal, while as in older cars, it will be a lot more.
Right. Thanks for breaking that down so simply. Puneet, then can you elaborate on maybe your analysis, S&P Global Mobility's analysis that was regarding engine compatibility and the risk to older vehicles from E20? I know that you went into it in some detail, but in terms of mileage, in terms of engine health concerns that have been reported by car owners.
Yeah. To further deep dive, so if you see ethanol, primarily, as I said, it is 34% less energy density than oil, and if we compare it as 23 megajoules, per liter compared to gasoline, which has something around 34 megajoules, per liter of energy. So clearly, when you mix two, so it's bound to, happen that the energy, the chemical energy in that new fuel will obviously be less. And that is what is most of the customers are reporting, because at the end of the day, you are burning something which has less chemical energy. Because if you see ethanol is actually a partially combustion has already happened in that fuel, because the oxygen there is bonded already with hydrogen and carbon compared to gasoline. So clearly, that's one of the reasons why in ethanol the energy density is relatively less than gasoline. And another part is, like as Humad said, one of the good points about ethanol is also it reduces knocking, right? And it's very clear, that if you actually fine tune your ECU and your engine, then actually this can lead to better performance of the vehicle, better power, in the vehicle. So for us, obviously one of the concerns, for the existing car park in India, will obviously be will be the maintenance issues, which may go and pop up, may not be in every car, because there is always a tolerance factor on which OEM works, So I think that way we may see, such issues not popping up in every car, but we feel that in certain, cars, there may be such issues which may pop up, because India climatically is also pretty different, right? For example, in cold cities, right? So we may actually see some kind of starting issues, because in some cases, because ethanol has a solvent property, so it can actually lead to clogging of fuel systems or fuel pipes, which can result, so but it may not be in most of the cars, but in one of our case it will be there. And we hope, because this is E20 is a nation initiative and is something good for the country.
Okay.
Because this brings us to self-reliance.
Right.
So clearly great move, by the government. Yeah.
Okay, thank you so much for that, Puneet and Hormuz, for very comprehensively giving us a sense of whether this is a temporary bridge or a long-term solution in India's fuel mix, and of course laying it out very, very clearly for that. Moving on, a day after ICICI Bank hiked their monthly minimum balance requirement to 50,000 from the earlier 10,000 rupees, the RBI has now issued a clarification. Speaking at a financial inclusion event in Gujarat, RBI Governor Sanjay Malhotra stated that the issue does not fall under the central bank's regulatory domain and that banks are free to decide their minimum balance requirements. Remember, ICICI's new rules are applicable for saving accounts open from August 1st, while salary accounts have been exempted from this.
देखो, ये जो मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000 रुपये ने माफ़ भी किया हुआ है, लेकिन ये रेगुलेटरी डोमेन में नहीं है आज।
And even as ICICI Bank's new rules come into force, NDTV Profit hit the ground to see what account holders are saying about this fresh move from unfair to targeting the elite. The bank's action has been met with strong criticism. Let's take a look at the special report filed by my colleague Shubhana, who spoke to some of the bank's customers.
Imagine this. You've been maintaining 10,000 rupees in your savings account for years. But now your bank comes and says that you'll have to maintain 50,000 rupees or pay a penalty. Well, this is essentially what ICICI Bank has done over the weekend. They have increased the minimum monthly average balance requirement to 5 times over. Now, the accounts that are opened with the bank from August 1st will have to maintain 50,000 rupees as minimum balance. These are for urban and metro customers. And also, if you are not able to maintain this balance, you'll have to pay a penalty of 6% of the shortfall. Now, we've hit the streets to ask customers what is their first reaction on the steep hike.
From 10,000 to 50 is not the advisable amount. They could have made it 50% more or some percentage wise, 10 to 15 or 20. It is from 10 to they made all of a sudden 50,000. So it will be how many percentage? 500 percentage more. It should not be.
Since this is for new account holders, and this hopefully won't affect the old account holders too much, they don't want the average Joe to come in anymore. They want elite customers, and hopefully it's not a fair thing actually.
महंगाई बढ़ाई है, लेकिन कम रहना चाहिए था मेरे हिसाब से। तो ये
कितना रहना चाहिए आपके हिसाब से?
ज़्यादा से 20,000 होना चाहिए।
We are students and parents can't afford. Not us, but not every parent can afford to give their children 50,000 to just open a bank account. So I don't find it very visible for everyone.
There are PSU banks. Go to any other bank. There are so many private banks, so many smaller, thousands of banks. I mean, there plenty of opportunity. These guys probably taking a call that will basically hurt them, I feel.
Well, for ICICI Bank, it's a move towards premium banking. But for many customers, it's a push towards finding a new bank. Either way, the 50,000 rupees minimum average balance requirement has stirred a pot in India's savings account space. And a debate over balance has just got more expensive. This is Subhana Sheikh from NDTV Profit with camera person Vijay Sartape.
And we will actually take this forward at 6 p.m. this evening on The Big Question, where we have lined up an array of experts who decode if ICICI Bank's move is an attempt to attract the elite or will it exclude the majority. So tune into NDTV Profit to catch the conversation live. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? Hello and welcome. You're watching NDTV Profit. I am Harsh Saita and you're watching Know Your Company. Now today we're going to try and analyze TVS supply chain. It's an interesting play because one, it has been listed since August of 2023 and has given investors negative 33% growth since that point of time. Does supply chain really warrant that? Maybe not, but there's a shift happening. The top line shift is happening towards higher margin product, and therefore all of that will likely aid the bottom line. The expectation is a double-digit growth in FY26 and thereafter too likely a double-digit growth. They are targeting a 4% PBT from a loss currently. All of those levers are likely going to change the way the business is going to be looked at. I am trying to dive deeper and trying to understand whether in this current environment, and there's a lot happening, right, geopolitically as well as on the tariff front, what's the likelihood of a double-digit growth in the current financial year? Because you have this company, 73% of the top line comes from international operations, and therefore, could that risk this particular guidance? That's my first point. My second point is with regard to what will drive this double-digit growth. And what I'm trying to delve into is trying to understand whether there is sustainability of that growth beyond FY26. What's the visibility like? What's the sustainability of that growth number looking like? The third piece is the PBT margin and the lever for it. So first one is what's the likelihood of a 4% PBT margin? This is by FY27. This is the guidance given. And thereafter, what are the levers which the company is going to utilize to get to this number? Because right now you're a far cry from it. You're at sub 1% in terms of that margin number, and you're at a loss where the PAT number is concerned. Thereafter, so what will be the levers as well? The fifth point that I'm looking for is the risk on the global geopolitical as well as the tariff situation. All of that is leading to heightened uncertainty. But what are they seeing on the ground with regard to demand? Is demand remaining largely solid? Is it remaining largely robust? Are customers not shifting away from the supply chains that they've built as of now? And last one, how much are you growing? What's next for the India business? As they shift from India or within the India business towards a higher margin business, are they looking for what are the levers they're looking for, and how are they looking at the India business in particular is what I want to understand. So all of that and more, but essentially the bottom line is, can they do that top line guidance? Can they do that bottom line guidance? And thereafter, we'll try and understand what the re-rating could be as a result of that. So that will be the key which I'm looking out for. Let me now quickly start off with what the company does. And TVS Supply Chain, it provides logistics and supply chain management services. It's tech-led, asset-light in terms of its business model. It operates in 26 countries with its headquarters in India. 6,200 active customers globally is what it has. And it focuses on long-term contracts with Fortune 500 companies. So it's looking at companies with scale and size, both. And that's what they're really looking for. In terms of its services, and I've tried to keep this as simple as possible in terms of what services it provides. The first set of services is integrated supply chain solutions. Let me simplify this for you. It's simple. You take on a project from a customer. Say, for example, it's a plastic bottle manufacturer. What will they do? They will source plastic from somewhere, right? So the plastic will have to be sourced from a supplier. TVS Supply Chain will do that for the manufacturer, supply the raw material, right? Transport the raw material from the vendor to a warehouse, and thereafter transport the raw material from the warehouse on a need-based or a requirement-based timeline to the factory. Thereafter, take the finished goods from the factory to a distributor warehouse, and thereafter enable the distributor to distribute it further. All of that is currently being done by a TVS Supply Chain, and that's the type of service that they're doing. integrated supply chain solutions. That's what it means. Second one is network solutions, which is moving product efficiently. Now, whether this is from a global shipping standpoint, from one country to another country, or it's moving product efficiently within a factory. In-plant logistics, cold chain logistics, all of that is what network solutions is all about. We'll look at the split in terms of the top line now, and that's the split. 55% is integrated supply chain and 45% is network solutions in terms of the top line. That's the split. Mind you, integrated supply chain is a higher margin business. They're guiding for 9.5-10% margins there. Network solutions, they're guiding for a 7% margin. So that's something you want to keep in mind. Now let's look at the geographic split. They do just 27% of their business from India. 73% is international. The other piece you want to know is the revenue mix, and that becomes important as each sector likely slows down, another sector gears up. That could well influence some of the numbers as well. They have a fairly diversified pie in that sense. Last off, customers. They service 91 out of the Fortune 500 companies. So 91 customers out of the 500 top companies globally is what they have on their customer book. The customer contracts are usually 3 to 7 years. You look at the way in which some of the customer contracts are slated. Europe over UK over North America, NA is North America, and over India. So India in terms of pecking order is probably the last, but Europe is the largest focus, and that's good news given the tariffs coming from here. What you also want to see is the contract duration, which gives you certainty on how long the contract can last for. So the average contract duration is 3.9 years for India, 4.2 years for North America, and 7 years for Europe. So you've got far more certainty coming out of Europe than out of India. But nonetheless, it's a company based out of India, and therefore you're okay with living with that kind of a risk. So broadly, that's all about the company. Now let me quickly take you through the metrics we'll dive into, and we'll dive into it very, very quickly. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, street cred. Thereafter, we will look at outlook and we'll dive into valuations. And some of this is subjective, so you want to keep and monitor this one if you were to look at this. So let me start off with the income statement. Very, very unimpressive, but they've held on to the top line. They've got a decent order book. They've got decent recurring revenue. We spoke about the contracts which they have as well, 7 years. So therefore, there's some bit of certainty with regard to that top line number, and hence we've given this a neutral, even though it's a very uninspiring set of numbers that you can see on your screen. Nothing at all that really stands out. 3% growth ideally would have been a thumbs down, but for the fact that some of the factors which I've just listed. In terms of Q1, performance was strong, but outside of a one-off, it was largely a subdued performance, just 2% YOY growth seen. Let me talk about margin trajectory now. The margins have largely been very, very range bound, between 6.7 and 7.7. So very, very range bound margins, more so between 6.7 and 6.8. Broadly, that's the take. Let me now look at the balance sheet, and we've given this, of course, a neutral for you to remember. Balance sheet, book value is at 1800 crore, market cap is at 6000 crore. The borrowing number is roughly 860 crore. Now, mind you, some of the borrowing number is, or a predominant chunk of it, across years is short term, and that is because the receivables and some of the working capital requirements which the company has to set aside is large, which is why you've got that borrowing number which is elevated, and those receivables are back to back. So as soon as they receive the amount, they pay it off and they close the short term borrowing number. That's what you want to keep in mind. That's part of the structure of the business. That's just how the business is structured. Balance sheet kind of gives you that. Cash, enough and more cash, 600 crore on an 860 crore borrowing, no concerns at all, and therefore we've given this a thumbs up. So just perspective. Quickly on to cash flow, and this will also reveal some stuff. FY24 was a year where they did not use factoring. What is factoring? They have some receivables, they go to a bank with those receivables, they tell the bank, you keep 2%, give us the balance amount, that frees up cash in my books. That's what they did up to FY23. FY24 post the IPO, they didn't need that cash. Therefore, they said, okay, let it sit in receivables, which is why you're seeing the sudden drop in CFO to EBITDA. That's where the mismatch is coming from. FY25, again it's smoothened out because all of that working capital which is blocked, there's not been an increase in that working capital, which is why you're seeing what you're seeing. So no concerns with regard to this one either. We've given this one a thumbs up as well. Now, let's look at return ratios. Again, very uninspiring. Thumbs down on the return ratios. Mid-single digit, not looking good at all. So, we've given this one a thumbs down. Shareholding, 43% held by the promoter group. FIIs on your screen, so is DIIs, public too. Now, given that this is sub 50% held by the promoters, as we always do, we've given this a neutral on that count. Now, let's talk about street cred. Again, the numbers very, very uninspiring. You look at the returns which shareholders have got, well, it's a tough one for a shareholder to continue to hold. Therefore, we've given this a thumbs down. Now, let's look at the outlook. And in the outlook, they've guided for double-digit growth in FY26. They've guided for 4% margin in FY27. And they've said EBITDA margin guidance for ISCS, which is 55% of the top line, we spoke about that, is 9.5%. And for the network services business is just 7%. Broadly, that's the take. What I've done is I've just extrapolated a 10% top line growth for FY26 and FY27, not even higher than 10%. And what I've thereafter done is given a 4% PBT, 3% PAT number to this and given it a valuation. So what we've done in terms of the valuations is we have given outlook a neutral. We want to see whether that execution actually plays out. And valuations, this comes to around 18 times price to earnings. What this does versus some of the competitors on your screen. So that gives you a perspective with regard to valuations as well. Beg your pardon. So that's how it plays out. Overall, let's stack up all of the metrics on a TVS supply chain, and what it will give us broadly is a 4 out of 8 on our KYC ratings. That's how it all stacks up. Of course, a tough environment that the company has gone through, but can they turn it around? And we'll speak with the management right off to try and understand that. Let's go across. We have Ravi Vishwanathan, who's the Managing Director at TVS Supply Chain, who's come in to speak with us today. Sir, let me start off apologies. We have Ravi Vishwanathan, but we also have R. Vaidyanathan, who's joining us, who's the Global Chief Financial Officer of TVS Supply Chain. Apologies for that. Mr. Vishwanathan, let me start with you first. Let me try and understand, is this 10% growth FY26 possible in this environment? Is this high levels of uncertainty at this point? So give us a perspective on that first off.
No, thank you so much for having us, and it was good to see your coverage. Let me start by saying our business has got two components, right? The ISCS segment and the global freight business. Yes. The global freight business definitely has dependency on all of the uncertainty that's going on that we are all talking about on a daily basis, and that's something which is creating a lot of volatility. But if you look at the integrated supply chain business, it's a steady business. It's got large contracts, like you pointed out in your analysis. It is long term, and it gives us sustainable margin growth. So if I look at your question on, is the 10% possible? I look at the lead indicators. The lead indicators are the pipeline. The pipeline is 5,300 crores, and it's continuously been improving. If you look at it from what we've been publishing, and every year we typically have about 10% revenue coming from new business. So this is something which we are comfortable with. Our pipeline gives us good, I would say, confidence getting out of Q1. Of course, how the macro plays out is anybody's guess. At this point in time, I think the ISCS business is relatively calmer. The global freight business is definitely a bit more volatile. So I hope that gives some color to what I was trying to give as a response to your question.
Certainly does, Mr. Vishwanathan. And before I go to Mr. Vaidyanathan, let me ask you one more. FY27, what is that growth number that you'll be looking for?
So our guidance is to double-digit growth. We would like to get to mid-teens. Given the pipeline and some of the advanced stages, some of the large deals are in the pipeline. there's every confidence that in FY27 we should get to early teens, if not mid-teens, in terms of revenue growth. But I think the key for us is the PBT. We are on a strategic transformation program across the company, and our commitment towards a 4% PBT by Q4 FY27 is something which we want to make sure that we live up to. And towards that, we have taken a series of programs which are already on the way. And we clearly have a very, very strong roadmap in terms of managing our cost structures and driving leverage, which Vaidi can throw more color on, to ensure that we hit the 4% PBT target. So we are definitely going after both the revenue engine and the cost engine. A lot of focus right now. The market is what it is from a revenue. We have to live through the uncertainties, but what we can control is the cost much better, and that is where the strategic initiatives are playing out. And I think as we exit FY26, you will clearly see that linearity moving towards an exponential path.
Understood. Mr. Vaidyanathan, it's an uncertain environment. We did speak about that. In such an uncertain environment, how do you plan to drive operational efficiency within a business which hasn't done as well in the last 3 years as one would have hoped? So what changes?
Yeah. So I think as Ravi mentioned, what is in our control is only the cost, right?
Right.
I think we have taken a lot of series of actions in order to re-baseline our costs. I think one of the critical things is the IFM turnaround that we were able to do last year, which is giving results the current year. Similarly, the Project One, the initiative that we have taken to completely transform our UK and Europe business. Again, this is primarily driven at the market, but also there is a lot of cost benefit towards that. So all these things, these are under our control. And irrespective of the market, playing out, I think we will be able to control these first to improve the profitability going forward.
Understood. So, what could you give us specifics on what will help get you to the 4% PBT? What costs are you planning to control? Give us and our viewers some bit of clarity on that.
Sure. For example, right now we are about 0.5%. To reach that 4%, there are three broad levers that is playing on. One is the integrated final mile business in the UK, which should give us an additional 0.4% of profitability improvement. We have taken a lot of strategic actions there, including a one-time price correction, which will give us a significant improvement in the profitability of the IFM business. The second big lever is the Project One, which is the integration of our ISCS business and IFM business in the UK and Europe. Again, that is expected to give at least 100 to 120 crores of cost benefit from FY27 onwards on an annualized basis. There will be benefits in the current year as well, but on an annualized basis, the benefits could be about 100 to 120 crores. The third big lever is for us the operating leverage. The cost reduction program that we are running across all the geographies, not only UK and Europe, but also in India, Asia Pacific, as well as in North America market. That will also significantly give us the operating leverage. So all these factors combined together with the double-digit growth which Ravi was mentioning to help us take it to the 4% PBT.
And sir, how quickly do you see this translate? So take us through the journey, Mr. Vaidyanathan. Will it be 2% PBT this year? Will it be 3% PBT this year and thereafter 4%? Will it be immediate 4% in FY27? Give us that color. Give us the timing.
Yeah. So I will not be able to give you specifically in terms of what we expect FY26. Sure. But you can say that sequentially there will be an improvement in the PBT because all the actions that we have taken, when we start setting the benefit, sequentially we'll start seeing the improvement in the PBT.
So Harsh, let me just qualify that by saying, look, we don't want to guide the market towards FY26, but we will exit FY27 Q4 at a 4% PBT. So that you can then build that chart. Like Vaidi said, about 0.4% coming from IFM, 1.2% coming from the Project One initiatives, and the rest coming from the leverage to a base of 0.5. And that's and with all of these measures already kicking in, that's why I said we will move from a linear to a slightly more exponential trajectory as we exit FY27.
Got it. Mr. Vishwanathan or Mr. Vaidyanathan, whoever this is may be relevant for, working capital, there was a one-off there in FY24. There was an adjustment which happened and we explained that to viewers. Is that a thing of the past or do you continue to believe that that may be a concern in the future at some point as well?
The working capital is at a optimal level, I would say, the business that we are currently in. And it will continue to, as the business grows, the working capital requirement will grow. I think FY24 was a one-off move because we came out of the factoring. But I think broadly, I think we are, from an optimal point of view, I think we are very, very comfortable.
Mr. Viswanathan, talk to us about the sustainability of this 4% PBT and talk to us about new order wins that are coming your way. What's the traction looking like in this environment at the current juncture?
Right. I think let me first talk about the opportunities and the orders.
Sure.
Clearly, our pipeline is continuously growing. We are winning large deals in the market. The ISCS segment typically has a longer gestation period in terms of converting those contracts. And we have contracts at multiple stages in the funnel when you look at the pipeline. And therefore, the confidence of having a sustainable double-digit revenue growth is pretty high. The key for us, of course, is the execution. We think the first step is to get to the 4% PBT. But as we exit FY27, a lot of things that we are doing today in terms of investment in AI, in agentic AI, all of this should play out, and that should start giving us incremental opportunities to increase our PBT from 4 and beyond. In the investor meeting earlier in the day, we said the best-in-class operate around 8% and some at a slightly higher number. So our first step is to get to 4 and then build a plan to get to the 8 in the mid to long term. And for that, we have to, as a company, imbibe AI. We have started multiple projects. We have AI deployed in scale in the US, in India, and also in the UK.
Right.
And we expect that to take more prominence as we go forward.
Right. Mr. Viswanathan, would it be prudent to say 8% by FY30 is the aspiration?
It's probably early to jump to that, but we will most definitely make a projection as we exit FY26 and as we see the trajectory evolving.
Sure.
But clearly, internally, we do have a plan which probably we can share by the end of the fiscal.
Excellent. Thank you so much, both of you, gentlemen, for joining us and giving us that perspective. We'll let you go on that note. And viewers, frankly, completely out of time on this edition of KYC. So we're going to close this show here with a 4 out of 8 on the current KYC rating of TVS Supply Chain.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live Ask, decide, and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, the headlines from earlier in the day might have caught your attention. ICICI Bank has gone ahead and said that for new accounts, savings bank accounts that are opened after the 1st of August, the minimum average balance in urban centers and in metros will have to be 50,000 rupees. Now, if you're in one of those areas, you're probably wondering whether you should go out and have an account like that in the first place. So let's talk about that at the start. We're going to talk about this, but we're also going to talk about mid-cap actively managed equity mutual fund schemes and the fact that to a large extent in the recent past, and here I'm talking about a couple of years, they have not managed to beat the benchmark. So increasingly the voices are getting louder to say that maybe even for this category you should look at a passive approach to investing. We're going to talk about those two, and we'll also talk about the latest data on mutual fund inflows or inflows into mutual funds in the month of July. Joining me is Vishal Dhawan, founder and chief executive officer of Plan Ahead Wealth Advisors, and Prableen Bajpai, the founder of FinFix Research and Analytics. Thank you so much to the both of you for taking the time. Vishal, on the first topic, which is a savings bank account and minimum average balance of 50,000 rupees, it sounds a little high. The point is that we've been already talking about people moving away from savings accounts because the rate offered does not beat inflation post-tax. So what would you say about something like this?
Thanks for having me over. So I think there's very clearly two things happening simultaneously. One is banks have cut savings rates to historic lows, and therefore whatever money lies around in savings accounts now typically earns you much lower interest than it did a while ago, and certainly much lower than inflation. On the other side, you now have a whole plethora of options available as an investor to actually park away money that you would normally keep in a savings account to take care of liquidity needs. So historically, what would end up happening is people would put money in a savings account to take care of emergencies, contingencies, etc. And we clearly believe that, besides having maybe a month or maximum two of balances lying in a savings account, everything else needs to go away either to support shorter term goals or even longer term goals like your retirement. And therefore, clearly, if your balances in terms of requirement for emergency provisions are not going to be more than 50,000 rupees, which covers a month or two of expenses, then it doesn't make sense to maintain those kind of balances. On top of that, there could be double income families where husband and wife have salary accounts in two different places. So the money is actually distributed amongst multiple accounts as well. So our thought is that unless there is a very large amount of contingency monies or emergency monies that you require, either because your expenses are very high or there are lots of dependencies on your income because there are maybe parents or other people who also need to get supported, it is a good idea to think about whether I really need to keep 50,000 rupees in a savings account or keep the rest of my money away in arbitrage funds or liquid or overnight funds so that I can get a better rate of return than what I get in a savings account.
You want to weigh in on this, Prableen? So I've spoken to so many of the advisor community and they've pretty much said the same thing. You can use a credit card for emergency purposes, and this is because T+1, which is transaction plus 1, is when you get your liquid fund money, and T+2 is when you get your arbitrage fund money, and so it's not immediately available to you. So would you say emergencies, you can use your credit card and you have 6 months to 12 months of your expenses in liquid plus arbitrage?
So Alex, first on the point of this compulsory sort of a hike, which is for ICICI Bank, it's gone up to 50,000. So number one, that saving bank, it gives us, undeniable benefits. Of course, there's quick access to your money. Then, your deposits are insured up to 5 lakhs and other things. But any such hike which is forced upon you is not the right approach, because from the 26th of June, ICICI, for example, has set the saving bank interest rates at 2.5%. And let's say it was 10,000 earlier, now it is 50,000. So that 40,000 at 2.5 is going to earn you only about 1,000 rupees in a year. And if same was, let's say, utilized somewhere else, parked in a liquid fund, which was giving you just about 6%, still you were getting about 2,400. And for somebody who's contemplating whether I should keep, 40,000 or 50,000 or 10,000 in the savings bank account, I think that 1,400 rupee difference also means a lot. And any such, event of a compulsory rise definitely kind of shrinks their options. But yes, ideally, the better way is that then you split. If you still want to continue with a similar sort of a bank, probably if you want to keep 6 months of your contingency fund, then let's say maybe 2 months of your contingency fund can be in your savings bank account and the 4 months can be in a liquid fund. So you'll have to split and devise a strategy wherein you're not paying a penalty. Of course, if you're not looking to change the bank, from the bank's perspective, it's a good way to save because, they are going to increase their profit margins with every investor if they're going to have this 40,000 difference and the kind of interest payment that, reduced interest payment that they're going to make. So from the bank's point of view, it's great. But I think for investors, definitely for contingencies, I think liquid funds and arbitrage funds make a lot more sense.
I mean, the argument for the bank can be several, and we've discussed that through the day. I want to focus on what the individual should do, and both of you have pretty well summed up what the approach should be. Just one last point, Vishal, in the event that you do want to have this 50,000 rupees, one, of course, you've already stipulated if your expenses are to that extent, nothing changes for you. But if you're making that choice, would it be because the bank is giving you something that nobody else is offering you, maybe a better rate on a loan, or maybe a credit card product that is more beneficial? So it needs to make sense for you, right?
Absolutely. I think, there has to be a very strong reason, because unless we see the entire banking industry start to raise minimum balances where you're sort of not able to make a choice, you do want to be very clear that the reason why you're giving away that potential higher return on your liquidity is coming because there's something else that's offered to you by the bank, which is very unique. And, obviously for different people, that what is unique can vary. But I think it needs to be well thought through. It can't be the default decision saying that, anyway, I maintain 50,000 rupees in my bank account. Maybe this will sort of trigger people to think a little bit more deeply about the balances also that they maintain, and whether it's really sensible to maintain those kind of balances when you have so many other instruments available for yourself. And of course, you did make the very important point as well, Alex, that, for emergencies, typically now credit cards become very, very good tools because they give you instant access to emergency money, and it gives you time to take your money out from other places in the interim.
Jay Kotak had an important point that he made on social media platform X, where he said that 90% of India continues to earn less than 25,000 rupees. And by the way, that 25,000 rupees is the minimum average balance that will have to be maintained in semi-urban areas, 10,000 rupees in rural areas. So it's a pretty clear statement that the bank is making. Let us know what you think about that in the comment section, but we have to move on to the next conversation, which has to do with mid-cap actively managed funds. And it continues to be a category that receives a large amount of money, but the question we're asking is, have these schemes really performed better than the benchmark? The answer is no to a large extent. Isn't that right, Prableen?
Yes, Alex. I think we currently have roughly 30 schemes, out of which 29 have a track record. At least year to date, one is a very recent one, only launched in March. And we've seen that actively managed mid-cap schemes have struggled to beat the mid-cap 150 TRI, the Nifty index. And of course, it is because of a number of reasons. In terms of trailing returns, Alex, probably the difference won't be that much. So if we just see, year to date, it will be kind of a 1.49% fall for the index. And at the same time, we have seen schemes which have given returns, let's say positive 2.88%, 3%. But overall, the index funds, the performance has oscillated, at least the year to date has oscillated between negative 11.37% to positive 2.88%. So with that kind of an oscillation that we see, and the difference in the returns within the actively managed mid-caps, with the drying up of alpha generation, which is happening, I think it makes a lot of sense to move towards actively managed passive funds, from actively managed to passive funds. And I think this is something that I have been, saying for the last many years, that I think your core can be a large cap passive as well as a mid cap passive, and then complemented with the other schemes in the portfolio overall.
But so I know that you've been saying this, and we've had similar conversations, but even if you look at the last 7 years or so, Vishal, we've seen ups and downs for the broader markets. But I've heard 7 years back or 8 years back, it was very clear even then that for your large cap requirements, index funds are a no-brainer. I'm actually now quite enamored with this idea that it's extended beyond that, and now people are increasingly talking about mid-cap schemes. Is it only because of the performance of the last 2-3 years, or is it increasingly getting more difficult for fund managers to generate that alpha, Vishal, in the mid-cap category?
So I don't think it's getting hard for alpha generation because of a variety of reasons. One is that, as more and more research happens, and clearly India has become a much more popular investment destination than what it used to be. The research across mid-sized companies has also expanded. And therefore, the ability to generate alpha coming from superior research, superior information has automatically reduced. The second thing that you do end up seeing very clearly is that when funds get very large, it does create its own challenges in terms of being able to identify businesses that can actually sort of continue to generate alpha for the portfolio. And we've seen a recent SEBI sort of suggestion that for fund sizes above 50,000 crores or scheme sizes above 50,000 crores, there could be a second scheme that could be brought in by an AMC as well. I think part of it is a reflection on the fact that it gets harder to generate alpha, especially when you're in the mid-size and small-size segment, if your fund becomes really, really large. The other thing that does tend to happen is that inflows and outflows of money can also have their own challenges to deal with. And when you have very strong inflows coming in, which is what we've seen in both mid-cap and small-cap funds over the last few quarters, I think it automatically makes